See, today we're gonna start revising the Pgbp concepts. So here in Pgbp, we'll be discussing the concepts, everything, sir. It's not just we focusing only on the important concepts. We'll cover the whole chapter, but more focus or more time will be spent on the important topics and the areas of focus for exam. Then second one. We'll be solving even questions also from Pgbp, like to get you that confidence that I could solve the Pgbp question. Whatever the questions are needed, those questions I'll be discussing. Then we will even go to assessment of companies topic. There in assessment of companies topic also we'll discuss the concepts and even. Okay, so overall here if a 14 marks question can be asked, you could answer it to the maximum. You could answer it to the maximum. Understand, sir? Sir, even though, let me tell you, or let me tell you practical way. Question number 2, they're asking for 14 marks, which includes the Pgbp part and then some other adjustments like total income sums are actually more focused on Pgbp, that also from company perspective, not from individual perspective, company perspective, and other provisions may also get linked. So how much ever we study, this question number 2 is not a place where we can get full marks. Now looking into this point, many students will think like, sir, then why I have to learn Pgbp? Sir, if you have seen June 2025 paper, if you have skipped Pgbp, not only question number 2, even question number 3a and question number 3b are also has Pgbp related adjustments. Then those parts also you might be losing. Okay, one reason. So you should learn. Second reason, sir, ultimately you clear CMA, what you will do? You will do job or you will do practice. You will do a job, then where you will go and work? In a business entity only, right? So again, that's about Pgbp business only, right? So there tax complications you need to understand. First thing. Second one, you started your own practice. Then also, who are the clients actually? Who pays you more? Are the salaried individuals will pay you more? Or with that return filings and all, can you survive? No, right? Again, the business people. And business people now, again you should know Pgbp. So trust me, Pgbp is really important for us in academically, even professionally also. Understand? Then you all have some misconceptions which were being carried from your inter level, like Pgbp stuff. I can't understand Pgbp. Okay, I can't read Pgbp. I hate that chapter. I don't know for a particular reason. Okay, by looking at Pgbp, I'll get sleep. Okay, these are the common similarities, patterns across many students. Okay, so now if you watch this video means if you watch this video till this 2-3 minutes also, what I believe is like you are wanting to or you are planning to learn Pgbp. Yes. So then what is needed? First of all, you need to be patient. If you doesn't have patience, you wanted to complete Pgbp in 1 hour, 2 hours, it doesn't happen. Okay, so this day for completing the chapter concepts and for revising the whole day, you keep just for Pgbp this day. If you are reading it for the first time, if you already know concepts to an extent, then fine. If you are learning now only, then today or whenever the day you are watching this video, this day is completely dedicated for Pgbp. Okay, so you learn Pgbp. Sir, I'll make sure that you will understand each and every provision and I'll help you in remembering those provisions also. The only thing is like you be patient. Okay, after 2 hours you cannot skip the video. After 3 hours, 4 hours, you feel like how much ever the chapter goes and all, the provisions are just little lengthy, but it's not tough. Sir, the Pgbp chapter is lengthy. It's not tough. It's lengthy. So you be patient. At least 6 hours of minimum it will take. So 6 hours you should be focused on this content. Then With just this video, will you be master in PGBP? No. You should do again revision on your own. Once you listen to this class, again open the book. Okay, read provision by provision. You will be remembering whatever I said. Then you do. Go to the workbook. We might be solving here maybe 4 or 5 questions. You solve each and every question. Then you will get the confidence in PGBP. Understand, sir? Sir, with marathon revision series, even with classes also, you will never get confidence until you start solving the questions. Okay, so you are not here to review me. You are not a faculty critic, so that you watch my video and tell this part he explains very well, this part no, it requires better clarity. Sir, you give me rating, you give me feedback, I'm not worried about it. The point is, you are here to learn, you are here to clear exams. Okay, so what I want you to tell is like, every time be clear, you should solve the problems. That's what I am asking. Even yesterday also, I've been asking you many questions. Why? I could tell on my own. That saves my time also, another 1 hour. For every 3 hours, it will save me another half an hour or 40 minutes also. I need not to wait for it. The point is, you should do, then only you learn. Okay, so this chance, this attempt, you are going to clear. This is the route. So then blindly follow. Pgbp is not hard. Pgbp is just lengthy. If you have patience, trust me, you learn today Pgbp. See what's hard in Pgbp. Okay, so we'll go, sir. In a different way, we'll be learning Pgbp, sir. Not like provision by provision. See, in Pgbp, sir, the question can be asked in two models. What are those two models? One is receipts and payments model. 1 second, sir. I couldn't connect the charger. Thought I connected it. Okay. See, there are two types of asking a question. One is like receipts and payments account. Receipts and payments model. The other one is like P&L model. What happens in reception model? Sir, they'll give certain receipts to you and payments. Okay, they'll give you certain receipts and payments. Let's say this side they are having payments, this side they are having receipts. Receipts may have sales, may have interest, may have dividend received, may have loan received, then sale of land. Like this, so many amounts are there. Sales of stock 70 lakhs, interest 5 lakhs, dividend 3 lakhs, loan received 40 lakhs, sale of land 30 lakhs. Payments, loan repaid, then purchase of land, salaries paid, purchase of raw material, and there could be even some other expenses. Okay, loan repaid, purchase of raw material 40 lakhs, salaries maybe some 10 lakhs, purchase of land some 8 lakhs, loan repaid 20 lakhs. So these are the receipts, these are the payment, right? See, if they give receipts and payments, then you will not find the profit in the question. You will not find what? Profit in the question. You will not find any profit in the question. If you have seen the receipts and payments model, you will not find any profit in the question. Then how to solve a question? Out of these receipts, you just need to find out which were related to business. Sir, sale of land. Sale of land, na, it's a capital asset. So this point is related to capital gain, na, so ignore. Loan received. Sir, loan received, it's not even an income first. If you receive loan, it's not even an income. So this also exclude. Dividend. Dividend received. Sir, dividend is taxable under which head, sir? IFOS. Sir, how I know it is IFOS? Sir, basic common sense itself will tell, na, dividend is under IFOS. Since you came to final, na, your common sense itself will tell what? Dividend is taxable under that IFOS. Then interest. Interest is also taxable under which head? IFOS. So only sales is relevant to what? PGBP. Right? This is relevant to what? PGBP. So what you will take under receipts and payment? That sales 70 lakhs you will take minus. This loan repaid is there, na? Loan repaid, is it an expense? Loan repayment is an expense? No, right? So it's not an expense. Purchase of land, is it a revenue transaction or capital transaction? Capital transaction. So capital gain, not relevant. Whereas salaries and purchase of raw material, yes, these two are what? Relevant to PGBP. I mean business or profession. So what you will do? Since these two are relevant, you will be subtracting this 50 lakhs. From here, you will get the profit 20 lakhs. This itself is the profit which you need to tax. Simple only, right? So in receipts and payments model, what we are doing, sir? Out of the receipts, we will find out which are relevant to PGBP, and those receipts only you will take. Then out of the payments also, whichever are relevant to business, that you will take and you will subtract them, you will get the profit. Okay. Sir, can we subtract this 50 lakhs straight away? Yes. But how do we know, sir, which expenses are related to PGBP? To find out which expenses are related to PGBP, there are section 30 to 37. Okay, by referring to section 30, 31, 32, 33, 34, 35, 36, 37, you will understand which are the expenses relevant to PGBP. Sir, based on my common sense, I said like salaries and purchase of raw material are related to business. But how you know? Let's say I don't have common sense, I just only follow rule book. Then section 30 to 37, if you refer, you will understand these are related to business. Then plus. Sir, only if I read section 30 to 37, it's enough. No. The other points are like, there are disallowance under 40A, 40 subsection A and 40A and 43B. Majorly this. 40 subsection A, 40A section and 43B. Okay, the conditions under these sections are satisfied, then it is no problem, you can take it as an expense. First, sir, understand two steps, sir. To call it as an expense, it should have been covered under 32, 37 and it should even satisfy the conditions under 40A, 40A, 43B. Okay, let's say it is covered under 30, 37 but not satisfied 40 subsection A, 40A, 43B. Then it is not an expense. You cannot subtract it here. You have to ignore that expense. Let's say, sir, salary is a business expense only, covered under 30 to 37. But it doesn't satisfy the conditions mentioned under 40 subsection A. Then you cannot reduce that salary. I mean, you cannot take that salary as what? Expense. So to consider it as an expense, it should satisfy 30 to 37 and it even satisfy 40A, 40 subsection A, 40A and 43B. If these conditions are satisfied, then it is called as what? A payment which you could subtract. Sir, okay. Expenses side, I understood, sir. I should refer 30 to 37 and then 40 subsection A, 40A, 43B. If I refer these sections, then I will understand which payment I can consider for the purpose of PGBP. Okay, sir. Then for income side, sir, receipts. You said like interest not considered here, dividend related to IFOS, loan not to be considered, sale of land, capital gains. How should I be able to understand, sir? Sir, to consider which incomes are related to PGBP, there are two sections. One is section 28 and the next one is like section 41. If you refer these sections, you'll understand which incomes are taxable under that PGBP, which incomes are taxable under that PGBP by reading what? Section 28 and section 41. So we should refer to section 28, section 41 so that we'll understand which incomes are relevant to PGBP. And then 32, 37, 40A, 40A, 43B, if you refer, then you'll understand which expense are relevant. Okay. So if at all they ask a receipts and payment model, so you will take out of the number of receipts given, will take only the receipts which are relevant to PGBP. Relevant to PGBP. You will take. You will take only the expenses which are relevant to PGBP. Then from there you should subtract. What you should subtract? The expenses. Because receipts na, incomes you took na, then you should subtract what? Expenses. How do you know which expenses are allowed? Then you should refer to section 32, 37, and it shouldn't have violated these conditions under 40 subsection A, 40A, 43B. Then those expenses, if you subtract, you will get the taxable profit. This is which model? Receipts and payments model. Then the next one is like P&L model. Sir, receipts and payments model, sir, the questions are not asked frequently. If at all they asked also, receipts and payments model is much more simple. Okay, P&L model. In P&L model, what happens? They'll give you P&L. There'll be so many items on the credit side, even on the debit side. Here they will be giving you the profit. They'll giving you the profit. Let's say profit is 10 lakhs. This is what model? P&L model. Okay, how you got? Sales here is there 70 lakhs. Closing stock is there 10 lakhs. Then dividend received is there 8 lakhs. Interest received is there 5 lakhs. Rent received is there 3 lakhs. Then agriculture income is there 5 lakhs. All these incomes are there. Okay. Then expenses here. Purchases are there. Opening stock is there. Salaries are there. Rent paid is there. Then municipal tax for house. Municipal tax for house is there. Then if you take even agricultural expenses are there. Agri expense is there. Agri expense is there. Then these are the expenses we are having, let's say. Then what we got, sir? The profit as how much? 10 lakhs after. Okay. So in P&L, what you did, sir? Nothing but all the credit side items, you have added these items. And from there you subtracted these items. Then you got this profit of 10 lakhs. Yes or no, sir? Everybody clear now? In P&L, what we did, we have added all these incomes 70, 80, 8, 5, 3, 5. All these we added. From that, we have subtracted purchases, opening stock, salaries, rent paid, municipal tax, agri expenses. All these we subtracted. So resulting, we got what? Profit. Yes or no? So now, again, basic sense. Agriculture income is taxable or exempted? Everybody respond. Agriculture income is taxable or exempted? Everything, sir, one by one. If at all rent received is there, taxable under which head? Interest received, taxable under which head? Dividend received, taxable under which head? Tell me quickly. Agriculture income, taxable or exempted? Rent received, which head? Interest received, which head? Dividend received, which head? So agricultural income is exempted. Sir, when it is exempted, here what is our purpose? We wanted to calculate the profit taxable. The profit taxable. So if profit is taxable and agriculture income is already exempted, if the agriculture income is what? Already exempted, can it be includable in the profit, sir? Sir, understand my point now? If agriculture income is exempted, we wanted to, what is our objective, sir, under PGBP head? We want the profit from business. Let's say 10 lakhs. On this 10 lakhs, we need to tax. But how do we got this 10 lakhs? This 10 lakhs we got by adding all these items. By adding all these items. But agriculture income is what? Exempted. So exempted income, why should we should includable in taxable profit? So what we should do? Agriculture income we should exclude because it shouldn't form part of taxable profit. So what we should do? See, previously these were added. Now to exclude, what we'll be doing? Subtracting. So from profit 10 lakhs, you subtract agriculture income 5 lakhs. Then rent received. Rent received taxable under which head, sir? House property. Then why you should include it here in the PGBP head? We are doing this calculation for PGBP. So rent already included. So you should exclude. Exclude na reverse, sir. First it is added. Originally when it is credited to P&L, nothing but it was added. So rent received also what we should do? Subtract. Then interest received taxable under which head? IFOS. So again, take it to IFOS. Why should we include it in the PGBP? So exclude that one also. 5 lakhs. Then dividend received. Dividend is also taxable under which head? IFOS. So why it should be includable in the PGBP profit? So subtract even dividend also. 8 lakhs. So this is agri income which is exempted. Rent received exempted. Rent received taxable under income from house property subtracted. Agri income exempted, so subtracted. Interest IFOS taxable, so subtracted. Again, dividend is also taxable under that IFOS, so we'll be subtracting all these items. If you subtract all these items, what happens, sir? Okay, you will get a amount. Okay, then you need not to do the total. Then come to the debit side. Debit side. Sir, agricultural related expenses, sir. If agri income is excluded, then the relevant expenses also has to be excluded now. If agri income is excluded, then relevant agri expenses also has to be excluded now. Sir, agri income what we do? Add it back. Then agri expenses what we should do? Sorry, agri income, since it is already included, to exclude what we do? Subtract it. Now expense, first it is what? Subtracted, debited to the P&L. So to reverse it, what we should do? Add back. To reverse it, what we should add back? Agri expense, we should add back. Then municipal taxes. Sir, if municipal taxes are paid for house property, rent, sir, house property related, rent received in which head you are taxing? House property. Then why we should take here municipal tax as an expense? Because we want the profit which is purely related to business. House property related rent when you are adding back, even the house property related expenses also, house property relevant rent you are ignoring, excluding by way of subtracting. And the relevant expenses also you should exclude by doing what? Add back. So house property, the municipal taxes also what you will do? Add back. So after doing all these adjustments, we'll get the tax profit on which the tax has to be levied or calculated. The tax has to be levied or calculated. Simple, sir. How do we calculate, sir? Based on simple approach, sir. If you have P&L clarity, all the credits to the P&L are nothing but what? Added. Now, if you want to ignore any item which is already credited to P&L, you should exclude. Exclude now, what you should do? Subtract. All the items debited to expenses debited to P&L. But you thought these expenses are not relevant to PGBP. So what you should do? Exclude them. So how the debit item can be excluded? By way of adding back. Reversing. So simple, sir. P&L credit side items. You need to reverse. What you will do? Subtract. Debit side items. Credit side items. Then debit side items. You should reverse. What you will do? Add back. For what you are doing this subtraction and adding back, this you are doing to accounting profit. Sir, nothing but simple. PGBP sum is like a reconciliation statement. Reconciliation statement. You have bank balance. You wanted to start with cash book and end with passbook. What you will do, BRS? You will add certain items, you will minus certain items. If you remember, in interlevel, in costing, there is something called reconciliation. Okay, costing profit and accounting profit. For what you will do? You will add back certain items, you will subtract certain items. So adding back and subtracting those items itself is the PGBP also. So mostly PGBP, sir, you think of provisions to be biated. No, PGBP is more about logic, which is an expense, whether it is allowed here or not. If such expense is allowed here, then no problem. Not allowed, then you should do what? Add back. If it is already debited to P&L. Sir, able to get my point, sir? Everybody here? Okay, see, P&L model questions goes more like a reconciliation statement. Profit as per accounting books you take, plus or minus adjustments, you will get PGBP. See. Credited to P&L. See, first point, sir. Income credited to P&L account. And it is taxable under head PGBP only. For that, we will not do any action. Why? Sir, if you look at the above example, in P&L there is sales and closing stock also. But we didn't subtracted sales and closing stock. Why? We know those are related to PGBP only. And those are taxable under head PGBP only. Then do we need to do anything? No. Whereas, there are items which were either exempted or not taxable under head PGBP. Either exempted. Exempted now what? Agriculture income. Agriculture income is what? Exempted. So agriculture income exempted, whereas the other dividend, interest, rent, all these are taxable under other heads. So these items, what we should do? We should what? Reduce them from the accounting profit. Reduce them from the accounting profit. Then, if an item not credited to P&L account, sir, sometimes to make our life little more complicated, what they'll do now? This is the P&L, sir, actually. They'll give certain income as business related income only. They'll give certain income related to business only, but it was not credited in P&L. They'll be giving in what? Note points or additional points. They'll give an income related to business 2 lakhs, which was not credited to P&L. Sir, if it is credited to P&L, now what might have been the impact on profit? It might have added to the profit or it might have increased the profit. But did they credit it? No. If they credited, then fine, no problem, will not do anything. But they didn't credit it. So what we should do? We should credit now. To credit it, what we should do? Credit now, we should add it now. We should add it now. Sir, this is an income which is related to business 2 lakhs. This is not included in P&L. So if it is income nature, it also should have been credited to P&L, but they didn't create it. So what we should do? Add. We should do what? Add. Okay. Then they given another income, sir. They given another income which is not relevant to PGBP. They given other income, some 3 lakhs, not relevant to PGBP. And they didn't even credit it to P&L also. They just given in what? Note point. There is an income which is not relevant to PGBP, not credited to P&L, but where it is given? It is given in the additional points. So what to do? Simple thing, sir. Is it relevant to PGBP? No. If at all it is already credited, then you will ignore. Because it's already impacted the profit. That's why to remove the impact, you are subtracting. But is it already credited to P&L? No, right? If it is not credited to P&L, nothing to be done. Okay, just what you will do, simply ignore. Simply what you will do, ignore. So, P&L side, 4 adjustments you need to do. Income nature. Income, 4 adjustments. First one, credited to P&L, not credited to P&L. Credited to P&L, not credited to P&L. Credited to P&L. Again, PGBP relevant. Second one, either exempted or other heads related. Sir, if it is PGBP relevant then simply no action, because it should be there, it should be part of the profit. So it's already credited to P&L, so nothing to be done. But second case, it is already exempted or taxable under other heads, then what you should do, sir? It shouldn't be includable in the profit. So exclude. Exclude, now what we should do? Subtract that items from accounting profit. Then not credited to P&L, again two items. So not credited to P&L, it is an income given where? In the additional points. So again you will check PGBP relevant, or it is exempted or other head related. Exempted or other head related. If it is PGBP relevant, it should have been credited to P&L. But is it credited? No. So what you should do? You should credit now. To credit now, what to do? Add. Exempted or other heads. Sir, if it is already included, you should subtract it. But it is first itself not included. Sir, if it is already included, then you should subtract. Here is it included? No, not credited to P&L. So what you should do? Ignore or no action. Sir, everybody understood now this point? Clear? Pakka? Then expenses. Expense. Again, expense also. For all the expenses, will go one by one. Expenses. Again, we'll check whether they are already debited to P&L. Sir, when they debited to P&L, the impact is what? It reduced the profit. Not debited to P&L. Debited to P&L, not debited to P&L. Sir, debited to P&L already. Then again two scenarios. First one, allowed. Allowed now what it doesn't mean? It mean allowed means what? Debited to P&L and allowed. Allowed means two things satisfied. It is covered under section 32, 37. It is there, and even satisfied. What sections are? 40 subsection A, 40A, and 43B. Okay, there may be one or two other sections also. Most important ones only I am referring here. Basics level. So these two are also satisfied. I mean 32, 37 it is covered. And it satisfied even 40A, 40A or 43B. I mean it doesn't violated them. Then it is debited and allowed also. Then no action. Okay. It was disallowed. It was disallowed. What does it mean by disallowed, sir? Disallowed means two reasons. Either it is not covered under 32, 37. Either it is covered under 32, not covered under 32, 37. Or it covered under 32, 37. But the problem is what? Either 40A or 40 subsection A, 40A, 43B, these sections are not satisfied. In any of these reasons, it is what? Disallowed. So disallowed now, it means what? That expense you should not consider. But already you did what? You debited to P&L. I mean you subtracted that item, expense. Then what we should do? You should reverse. Reverse now what? You should add back. Add back. Then not debited to P&L. Again two cases. Allowed, disallowed. Allowed, disallowed. So how to treat this? Sir, allowed now, it means what? The same reason. It is covered under 32, 37, satisfied. Okay, and even 40 subsection A, 40A, 40 subsection A, 40A, 43B also satisfied. But is it debited to P&L, sir? No. It is allowed only. But the problem is what? Not debited to P&L. Sir, if at all debited to P&L, na, that point might have been subtracted, but they didn't did that, and it is an allowable expense. So what you should do? You subtract it now. So reduce now. Reduce from accounting profit. If it is disallowed, na, what does it mean? 30 to 37 not satisfied, or 40A, 40 subsection A, 40A, or 43B not satisfied. Then what to do? Sir, it is not debited to P&L and not satisfied. It's not debited to P&L and not debited to P&L and even disallowed also. Sir, if it is already debited to P&L, now you should ignore. I mean, if already debited to P&L, now to reverse that you are adding back. First of all, it is not even subtracted. So why to add back? So simply what you should do? Ignore. Simply this one, what you will do? Ignore. Understand, sir, this income side what we do, expense side what we should do. This is the basic logic, sir, for every adjustment we do in Pgbp. So okay, so now see, sir, this example. In book, we'll see an example. If you see, sales 90 lakhs is there, closing stock 40 lakhs is there, interest taxable under which heads are IFOS, but it already included in what? Net profit 40 lakhs. This 40 lakhs includes what? All these credits, right? But interest is taxable under IFOS head. So since it is taxable under IFOS head, we should subtract. Dividend received again taxable under which head? IFOS. So we should do what? Subtract. Agree income exempt. Okay, not even taxable. So it's not to be includable in Pgbp. Subtract. Rent from house property. Taxable under which heads are? House property. Income from house property. Subtract. Then profit on sale of rent. Taxable under which heads are? Capital gain. So what you should do? Subtract. What you should do? Subtract. Okay. Then opening stock related to business, no problem. Purchases related to business. Conversion cost related to business. Salaries and wages related to business. Advertisement related to business. Depreciation related to business. But the point is municipal tax. Sir, municipal tax is relevant to what? House property. If rent from house property itself you are excluding, this also you should exclude. It is already subtracted. So you should reverse what? Add back. Interest paid for earning dividend. If the relevant dividend itself is excluded, I mean subtracted, then the relevant expense also we should exclude. That means what? Add back. Provision for income tax. First, this profit, why we are calculating, sir? This profit we are calculating only for the purpose of computing tax. Only for the purpose of what? Computing tax. So tax we should not allow it as an expense. So tax also we should do what? Add back. So simply, sir, if you do all these things, you'll be getting what? You'll be minusing all these items. You'll be adding back all these items. Then additional points you see. Bad debts recovered. How much, sir? 1 lakh. Not credited to P&L, but previously taken as deduction. Sir, bad debts recovered is an income. Bad debts recovered is what? An income. But do you credited it to P&L? No, not credited to P&L. So it's an income related to Pgbp only, not credited to P&L. So what to do with this 1 lakh? Add. What to do with this 1 lakh? Add. What to do with this 1 lakh? Add. Okay, then depreciation as per income tax act 7 lakhs. Sir, we are calculating profit here for the purpose of accounting a income tax. So already in the P&L they debited how much? 5 lakhs depreciation. So that depreciation 5 lakhs, what you do? Add back. Reverse. Sir, depreciation relevant to business only. Now why we are reversing? Accounting depreciation we reverse and income tax depreciation will subtract. Okay, nothing but we wanted to give depreciation as per income tax. So that's why as per accounting, how much ever is there, that we are doing what? as per accounting, how much ever is there, that what we should do, we should add back. And again, we should allow how much, sir? We should allow as per what? We should allow as per income tax. We should again allow as per income tax. Okay, then customs duty of earlier years paid in current year. So it is what, sir? 50,000 is an expense. Okay, it is an expense. Customs duty of earlier paid in current year. But is it debited to P&L, sir? No, not debited to P&L. But still it is what? It is allowed as an expense. So what we should do, this 50,000, sir? Subtract. Okay, then commission paid to agent 50,000. Is it included here, sir? Is it included here? No. Commission paid to agent. Is it included here? No. But paid in cash. Sir, if any expense more than 10,000, if it is paid in cash, is it allowed, sir? You know the basic PGBP, right? How much ever you ignored PGBP also, this point you know. Any expense more than 10,000 is paid. Then that is what? Disallowed. And this item is disallowed and not even debited to P&L. If it is debited to P&L, you will add back. This is not even debited to P&L. Then what you will do? Simply ignore. Simply what you will do? Ignore. Okay. So now if you see depreciation added back, municipal tax added back, interest added back, provision for income tax added back, and bad debts recovered not credited also consider here total. And then items to be subtracted: interest, dividend, agree income, rent from house property, profit on sale of land, depreciation as per income tax act, customs duty. Why customs duty we are subtracting? It is an expense but not considered in P&L. It isn't debited. So that's why we are subtracting and giving the impact of debit. So then we'll get how much, sir? 17,50,000. Sir, are able to understand everybody the basic mode of solving a problem, when to add, when to subtract? Then most of the time, sir, in question they'll give the impact of opening stock and closing stock. They'll give the impact of what? Opening stock. And they'll talk about closing stock. Let's say they may give two reasons. Opening stock undervalued, opening stock overvalued. Same way closing stock also two reasons: undervalued, overvalued. So what to do? Sir, closing stock and profit are like friends. Are like friends. That means if closing stock reduces, profit also reduces. If closing stock is increased, then profit also might got increased. Whereas opening stock and profit are like enemies. Opening stock and profit are like what? Enemies. So when opening stock undervalues, opening stock decreased, profit might have increased. When opening stock decreased, profit might have been increased. Now to nullify the impact, what we should do? Let's say, sir, closing stock undervalued by how much? 1 lakh. That means 1 lakh profit also reduced. So to make it normal, what we should do? Add 1 lakh to profit. And closing stock undervalued by 1 lakh, profit also decreased by 1 lakh. To make it normal, what we should do? Add back 1 lakh to the profit. Closing stock overvalued by 1 lakh. So that means profit also increased by 1 lakh. So to make it normal, what we should do? That 1 lakh we should subtract from the profit. Opening stock. Opening stock and profit are like enemies. Opening stock increased, then the profit decreased. So now, how much is the difference? Or let's say 2 lakhs. Now to make the profit normal, you should add back this 2 lakhs. Understand, sir? Now opening stock undervalued, then profit increased. Opening stock undervalued, profit increased. How much? By how much undervalued? 4 lakhs. By 4 lakhs, opening stock undervalued. So profit increased by 4 lakhs. So to make it normal, 4 lakhs you should subtract. Okay. So now, sir, in this example, in the next example, sir, if you are seeing here, the net profit is how much, sir? 30 lakhs. Whereas closing stock is 50 lakhs, opening stock is like 30 lakhs. If you look at the note point here, both opening stock and closing stock are underreported in books by how much, sir? 10%. Both opening stock and closing stock are underreported by 10%. I mean, this 50 lakhs also equivalent to 90%. This opening stock also equivalent to 90%. So what I want you to do is like calculate, think on your own and tell. Because of understating closing stock by 90%, what happened to the profit? So this difference amount, what we need to do to the profit, either we should add or subtract here, closing stock related and opening stock related also, the difference, do we need to add or subtract? And then we even find out the amounts also. Opening stock related adjustment how much, closing stock related adjustment also how much, and whether to add or subtract. Sir, this is not a job of tax faculty actually, this opening stock, closing stock. This already you shouldn't have learnt in our inter level only. These points are linked in our final level questions, and many students are not able to do these points. These points are your accounting concept related. Okay, but still I am trying to help you. So now do it on your own. Don't link to Pgbp and say like this point I don't know Pgbp stuff. See, this is not linked to Pgbp. This is accounts. Okay, so accounts is stuff if you don't know this point, not Pgbp. I'm expecting Monica and Swati. Once again, recheck. Is it correct? If 50 lakhs equals to 900%, 100% equals to how much? 50 lakhs divided by 0.9 we should do. Then how much it would be, sir? 5 lakh 55,000. Okay, it would be like 55.55 lakhs. So what is the difference amount? 5.55 lakhs. So closing stock should be 55.55, but they took how much? 55.50 lakhs only. So additionally they should took another 5.55, right? Sir, closing stock they reported less 5.55 lakhs, so that the profit also reduced by how much? 5.55 lakhs. So this 5.55 lakhs, what you should do? Add. Then opening stock related, how much? 30 lakhs. 30 lakhs is 90%. Then how much is the 100%? 100% equals to 33.33 lakhs. 33.33 lakhs. Sir, opening stock is reduced. So profit got what? Increased. So to make it normal, the difference 3.33 lakhs, we should what? Reduce. Reduce from profit. So 5.55 lakhs you add to profit, 3.33 lakhs you reduce from profit. Net impact is nothing but 2,22,222. You just add to the Vedashri. You did everything correct. But if you remember, if you see that, you said like 2,22,222 has to be reduced. Here is it to be reduced or is it to be added a difference? Added. So when you are in confusion, don't add opening stock and closing stock together. Do separately opening stock related adjustment. Do separately closing stock related adjustment. Do separately opening stock, closing stock related, you add. Opening stock related, again separately you subtract. Sir, everybody understanding now? The point is very simple, sir. Opening. Remember this line, sir. Every time you need not to by heart it. Opening stock, profit, enemies. Opening stock, sorry, closing stock, profit, friends. Friends now will go in the same direction. Closing stock reduces, profit also reduced. To make them normal, the difference amount add. Closing stock increased, profit also increased. Okay, to make them normal, reduce the difference amount. Opening stock and profit enemies. Opening stock increased, I mean overvalue. Profit decreased. So to make it normal, add. Difference amount, add. Opening stock undervalue. Profit increased. To make it normal, difference amount reduced from the profit. I hope everybody understand this point, sir. Okay, see, then continuing with the question, sir. Rent from house property, taxable under which head, sir? Income from house property. Rent from house property, taxable under which head, sir? Income from house property. You should do what? Subtract. Profit on sale of shares. Profit on sale of shares. Capital gains. Again, it's not relevant to PGBP, na? If it is created to the P&L, not related to PGBP or exempted, what we should do? Subtract. So rent, subtract. Profit, subtract. Agriculture income, exempted, subtract. Then opening stock, purchases, salary and wages, provision for income tax. Sir, for the purpose of income tax calculation only, we are calculating profit. For that, why we already allow income tax expense? So add back. Expense related to agriculture. When agriculture income itself is ignored, expense also has to be excluded. So that also add back. Okay. Then depreciation. As per accounting, we should add back, and as per income tax, we should subtract. And then bad debts recovered during the previous year. So this is an income which was not created to P&L. This 1 lakh is an income not created to P&L, but we should include now. So what we should do? Add. What we should do? Add now. Sir, I hope everybody is able to understand now. Net profit 30 lakhs, closing stock adjustment, here opening stock adjustment, then provisional for income tax, agriculture, depreciation, bad debts. Okay, all this we did. Then we get the PGBP 24,22,222. Okay. So whatever we discussed till now is not PGBP or not related to tax. What we discussed is basic accounting knowledge and basic common sense, which we might have already got because of inter-level understanding and other subjects understanding. But since we missed that and we cannot correlate all these points to the PGBP provisions, we make the PGBP chapter horrible and we'll show the PGBP chapter as the villain. Okay, it's not. Okay, I hope whatever the points I said till now are clearly in your mind. Sir, the first 50 minutes till now, whatever we discussed is the core. If any point comes, we should again link it back to the first core we discussed. Then it will become easy. Okay. Now, charging section, sir. Sir, first P&L side, P&L income side. Income side will target, then we'll go to expense side. Sir, out of these incomes, how do we know which are relevant to PGBP, which were not relevant to PGBP? Sir, under PGBP head, there is a charging section called 28 and there is another section called 14. If you read these two sections, you will understand which incomes alone are taxable under that PGBP. The role of charging section is like to tell which incomes are taxable under that particular head. So by referring 28 and 41, you will understand which incomes are taxable under that PGBP. See, let's see now. Section 28. The profit and gains from business or profession carried on by the SSE during the previous year, including profession, vacation, are also taxable under that PGBP. Common point. From business, profession, vacation, everything you get taxable under that PGBP. But dividend. If you have any dividend income, your business itself is investing in share. But if you get dividend, it is always taxable under which head? IFOS. When you have interest income, except for bank. Interest always except for bank. Taxable under which head, sir? Income from other sources. Winnings. Winnings like lottery, puzzles, card games, all these are like taxable under that IFOS. Income from letting out of residential house property head taxable. Understand, sir? If their business itself is letting, business itself renting, then taxable under that PGBP. Let's say, sir, you are running a PG or you are running a hotel, guest house. Okay, and you are renting rooms, your business itself is that, then it is taxable on that PGBP only, not on that house property. Then partnership firm. From firm, any interest, salary, bonus or commission is paid to partner. Sir, firm, if it get any profit from business, yes, it is taxable under that PGBP only. Not firm. Firm paying to partner. What? Interest, salary, bonus, commission. All these are also business incomes taxable under that PGBP. Then interest, salary, bonus, commission. When the firm is giving profit share to partner, share of profit from firm to partner is exempted under section 10. Where firm is paying any share of profit to partner, that is exempted under section 10. But understand, sir, if the firm is registered outside India, then it is taxable. Okay, the exemption with respect to share of profit received from a partnership firm to partner is exempted only in the case when the firm is registered in India. When the firm is registered outside India, the share of profit given by firm to partner is taxable. Understand, sir? Understand? Now, the next point, sir, which I want to tell. Firm, here partner. What are the tax rates? For partner, slab rates. For firm, flat 30% rate. Yes or no? Now, firm wants to route it profit to partner. Firm wants to route it profit to partner. Why? Here the tax rates will be lesser slab rates than compared to flat 30%. So the firm want to route profits to partner. Okay. So to route that, what firm is doing, sir? In firm P&L, it is charging interest to partner, salaries to partner, interest 10 lakhs, salary some 30 lakhs, like that. It is debiting to P&L. So that profit will what happen? Come down. Profit will come down. Now to partner, this interest 10 lakhs, because there will be several partners. This interest 10 lakhs and salary 30 lakhs will be taxable to partners in their individual capacities. So they'll enjoy the slab rate benefits, rebate benefits, and they'll be paying less tax. Firm claiming it as an expense and not paying tax. Partners paying, even, sir, it is an expense to firm, income to partners only. That point clear. But to partner, it is being taxed at a lesser rates. So they are making a plan to avoid taxes by diverting the profits in the name of interest and salary to the partners. I think you got my point, sir. Now, to control these kind of routings, they introduced a section called 40B. They introduced a section called what? 40B. What this 40B says, this gives a cap, a limit on interest and salary that has to be paid to partners. Interest and salary that is payable to partners. Interest and salary that is payable to partners. Just because they debited 10 lakhs, 30 lakhs will not allow that one. Okay, why? Because firms are doing this with a tax avoidance intention, so that the income will be diverted to partner and will be taxed at a lower rates. So to curb these kind of practices, they introduced what? 40B. Let's say, as per 40B, interest allowed is only up to 5 lakhs, whereas salary is only up to 10 lakhs. But how much they debited to P&Ls are already 10 lakhs and 30 lakhs. 10 and 30 lakhs. And by doing this, let's say the firm has a profit of 15 lakhs. Firm has a profit of 15 lakhs. Now to control this, what to do, sir? 40B section is saying like what? Interest salary paid to partners relevant to business only, not questioning that. But they given a limit. What is the limit? 5 lakhs, 10 lakhs. Is it within the limit or above limit? Above limit. So whatever is above limit, you should add back. To 15 lakhs profit, you should add back interest 5 lakhs. Why? Above 5 lakhs, Out of 10 lakhs, 5 lakhs allowed. 5 lakhs above that one. So 5 lakhs add back. Salary out of 30, 10 only allowed. So 20 lakhs you add back. Okay. By doing this, does the firm profit increased or not? Yes. Firm profit what? Increased. Now the question is, to what extent it is taxable to partner? Sir, in entry to the partner, interest 10 lakhs might have been received, salary 30 lakhs is received. But out of this interest 10 lakhs, to firm how much is allowed? Only 5 lakhs. The other 5 lakhs disallowed na. So, whichever the interest and salary part disallowed to the firm means, if it is disallowed to the firm na, it is included in the firm profit and taxed in firm capacity only. Since it is already taxed in firm capacity, again don't tax in partner. So, simple rule, out of this interest and salary, how much is disallowed to firm? 5 and 20 na, this 5 and 20 not taxable to partner. How much is taxable to partner? Excluding this disallowed part, how much is there? Interest 5 lakhs and remuneration or salary 10 lakhs. This alone is taxable to partners. Simple rule, sir. If something is taxed to firm, not taxable to partner. If not taxed to firm, then taxable to partner. Interest salary to partner 10 lakhs debited to P&L, but allowed only how much? 7 lakhs. That means only 7 lakhs is allowed as deduction as per IT Act. So what we should do, sir? This 3 lakhs disallowed amount we will be adding back. So interest bonus commission, if it is allowed na firm profit reduced. Allowed na firm profit reduced. That's why taxable to the extent allowed as deduction to the firm. Allowed as deduction to the firm. If it is disallowed, taxed only in the firm capacity, so not taxed in the partner capacity. Salary to firm allowed, and again partner, taxable to the partner, the salary he received from only to the extent which is allowed to the firm as deduction. What is disallowed to firm now, then it is taxed in firm capacity only, exempted to partner. Sir, everybody give me an yes or no, because I couldn't see your faces. I don't understand whether you got the point, whether you got clarity or not. See, face to face now, I can look at your faces. If you understand a point, you'll give some kind of expression. If you don't understand, then you'll give a different expression. So here, if I wanted to move on, you should be responding quickly. Then third point, any compensation or other payments received in relation to business or profession. Related to business or profession, you received any compensation or payment. Let's say, your supplier sent you certain raw material, but that raw material is not up to the mark. By using that raw material, your whole production facility got damaged. So you showed him and he paid you compensation of 30 lakhs. But the 30 lakhs is relevant to what? Business. So taxable under that Pgbp only. First one, sir. Relevant to business. Anything you earn profit and gain. Taxable under Pgbp. Next. Firm getting any interest, salary, remuneration. Partner getting any interest, salary, remuneration or commission from firm. Even though for normal people taxable under different heads, they are taxable under the head Pgbp only to the partner. Then any compensation or payment received with respect to business or profession, taxable under where? Pgbp. Then any export incentive received. Export incentives. See, for doing exports or to encourage exports, government will be giving certain reward schemes, refunds and all. All these are taxable under that Pgbp. Why? Because export you are doing now, it is relevant to business only. So due to business, if you get any, or because of business, if you get any rewards, taxable under where? Pgbp. Then when a trade, professional, similar association, sir, when a trade, let's say our institute ICMAI is providing services to me being a CMA. For that, what I will pay? Membership fee. So the membership fee I paid to the institute is taxable under which head? Pgbp only. Okay. Principle of mutuality does not apply. What does it mean by principle of mutuality? Sir, in some cases, we'll assume firm and partners are same. AOP and its members are like same. When they are treated as like same, member paying anything to AOP is not an income. When they are treated as same. Okay. Treating AOP and members as same, firm and partners as same is called principle of mutuality. But what we are saying here, principle of mutuality not apply. So AOP different, members different, firm different, partners different. So any amount paid by member to AOP is also a income to the AOP. Then any benefit or perquisite arising from business or profession. Because of carrying out any business or profession, if you get any benefit or perquisite, okay, whether in monetary form or kind form, let's say, sir, you are doing an audit. In the course of audit, your client only booked you flight ticket, client only ordered you food, client only provided you a room also in a 5-star hotel. So now all these are like benefits to you, perquisites to you. So whatever is the amount paid for exercising your profession as perquisite, that also has to be treated as income, taxable under that Pgbp. And then any sum you received for not doing an act, for restraining from doing an act, or for not sharing any patent, know-how, etc. Sir, not doing an act, restraining from doing something, and not sharing any patent or know-how. Sir, let's say BCCA wants me to take classes. Of course, I'll take classes only with BCCA. Okay. But let's say BCCA is a separate entity. It's a private limited company. So I don't have anything. Okay. I mean, company, shareholders. Okay. They are same or different. Separate legal entity concept. So BCCA is different. I don't have any link. Now see. Now BCCA, for taking classes, let's say it's paying remuneration for me. Let's say it paid some 30 lakhs as remuneration. Okay. If it is salary set. Let's say it is like principal to principal basis. For providing my classes, it's paying me 30 lakhs. It's like not on employee-employer relationship, P2P basis. Then it is taxable under which I Pgbp only to me. Okay. For carrying out my profession, I'm getting 30 lakhs. Teaching profession. So then it is taxable under that Pgbp. Fine. Okay. But for not taking classes elsewhere, if it is paying another 20 lakhs, okay, then it is for what? Not doing an act, or for restraining to do an act. So I can take classes. So usually a faculty is open. You can go to any place and take class. But if someone is restricting, okay, for such restriction, if they are paying money, that is also taxable under which Pgbp. That is the 7th point. Then keyman insurance policy. Who is this keyman? You know, Spider-Man, that red color it is. Batman, black color it is. Superman. Okay, we know different kinds of mans because of Marvel series and all, but we don't know who is this keyman. Okay, keyman na, he'll be wearing key na. No, keyman na, the person who is crucial to an organization. If this person suddenly leaves the organization, or if this person leaves the organization, there might be some negative impact on the organization. Now to cover that negative organization, to cover that risk of this person leaving, or if this key person leaves, along with him, he may take certain customers, he may take certain business along with him. So that's a loss to the organization. So whenever there is a chance of loss, insurance will come. Risk of loss is there now, so insurance will come. So we, as a business, will be taking a insurance policy for covering the risk of keyman leaving the organization. Okay. So now, if any premium is paid with respect to this keyman insurance policy, because to get insurance, you need to pay premium. Okay. So that premium is an expenditure to business, allowable as deduction also. It's an allowable, business related only. But the maturity amount, sometimes how the insurance policy here works means they'll take a tenure of 10 years. Within 10 years, if the keyman leaves, then the policy will strike. If the keyman doesn't leave within 10 years also, the company will get some maturity amount. So maturity amount. If it is taken by employer, so employer got loss. To cover up his loss, he is taking this policy. So if he got any amount, that is taxable under which Pgbp only. Employee, sir, why it is given to employee, sir? Let's say this person didn't left organization, keyman. He stayed loyal to the organization. Okay, so then this keyman amount may be given to the employee only to reward his loyalty. Okay, then such case it is taxable under that salaries because his employer is giving for his loyalty. As an employee he is receiving, so taxable under that salaries. To the family of employee, sir, employee not only left organization, he left the whole world also. Okay, is expired. Then the loss is like bigger loss to the family than that of to the organization. That's why employer with some good heart may give that Keyman insurance policy profits to employee family members. So then it is taxable under the head IFOS. So Keyman insurance policy profits, when they are taken over by business, then they are taxable under the head employer, then they are taxable under that PGBP. Otherwise salaries and IFOS. Then ninth one, fair market value of inventory on its conversion to capital asset. On its conversion to what, sir? Capital asset. So let's say this is a building, sir. This is a building. Here, this particular, okay, he is a real estate person or construction person or a particular business person. SSE is a business person. He is into construction business. So he constructed this building. Now, this people, okay, this Vastu gurus will be there, na? Vastu directions related. Okay, he came and said like, this particular corner plot is good for your business. You keep your office here only and run your business. Okay, then your business will go like unimaginable. Okay, so he shifted his office there. Sorry, usually he's a construction person. When he constructed buildings, it's his stock in trade because he constructed them. Hi Shivachitra, you could find the link in app also, right? In BCCA app, you just download BCCA app. There you will find DT books. Okay, so if you are there in any of the Telegram group, I'll share that also. If you are there in any Telegram group, I'll share the link of my book. And sir, one more thing, sir, if anybody planning to order the books now, order it quickly. When I'm making the revision series announcement also, I said like there are only hardly 75 copies available. And in these 2-3 days also, another 30 to 40 copies. I asked them to count, but they said like just yesterday evening when I asked, like they said like, yes, many orders are placed. Okay, so I think like some 40 orders already placed. So there might be only another 30-35 books might be available. Okay, so make the order quickly if you wanted to get the books. Sir, I'll be sharing it in the Telegram group also, sir. So the problem is like we'll not go for a reprint this version. Otherwise, you can buy it after some days also. If you realize afterwards and then if you are worried about books now, we can't do anything. Okay. So see, understand this point. Fair market value of conversion of inventory into capital asset. So what happened? This person is having this building. This particular plot, okay, he's a construction contractor. When he constructs building, the building will be stock in trade. Now out of his stock in trade, one particular one particular flat is converting into his office. One particular plant he's converting into office. Okay, now what is happening, sir? Inventory, I mean usually this building is a stock in trade for him. Now he is converting into what? Office. That means he is converting into capital asset. When inventory is converted into capital asset, you should treat it as a sale. Sir, why? Because at the time of construction, for this particular flat also, whatever the expenditure incurred, you already debited to P&L now. Now, if you convert it from inventory to capital asset, you are not earning any income. So you are not crediting anything to P&L. But expenses already you debited to P&L. It's wrong, right? If you don't consider something as income, relevant expenses also you should not debit it to P&L. But what they did for this particular flat related also, they already debited expenses to P&L. But now, since it's just conversion, no income is realized, you are not crediting to P&L. But tax is not agreeing for that. So what income tax provision says like, no, whether you sell actually or not, you should treat it as a sale because you claim the relevant expense. So what to do? The fair market value of this particular flat as on the date of conversion has to be realized as a, has to be considered as sale value and treat it as a profit. Okay, one flat is converted into office. So flat is not sold, fair market value on the date of conversion is taken as sales value and the fair market value is taxable on the PGP. So this particular converted related building related fair market value 75 lakhs. This was not created to P&L. Even though not created to P&L, you should consider it as an income. So what you should do? You should add this 75 lakhs to accounting profit. Then any sum receivable in cash kind on account of any capital asset where whole expenditure is allowed as deduction under 35 AD. Sir, if you remember section, okay, even if you don't remember also, 35 AD is about specified businesses. To encourage these specified businesses, government said like, if any capital expenditure incurred with respect to them, 100 percentage of such capital expenditure is allowed as deduction. 100 percentage of such capital expenditure is what allowed as deduction. Okay, you claimed a deduction first year. Second year, since you got the benefit now, you are selling the asset. Right? How injustice it is. Why they given you 100% capital expenditure as deduction in the first year? So that your tax liability will come down and you will use them for over a period of year and you will be contributing to the society and country with your business. With that intention, they give you deduction. But what you did, you claimed a deduction, next year you sold the asset. That's wrong, right? That's why when you sold, all those receipts are taxable under that PGBP only. So total 10 points are there, sir, which are taxable under that PGBP. First one, profits and gains from business or profession. Second one, where any partner gets interest, salary, remuneration, commission from firm, taxable under that PGBP. Third one, any compensation or payment received because of business or profession. Third one. Fourth one, any export incentives received, taxable year. Fifth one, any perquisites received under that PGBP, I mean because of your business or profession, if you receive any monetary or non-monetary benefit, taxable year. Then sixth one, sir, sixth one is about where an association collects any amount or fees from its members, taxable. 10th point, sir, we discussed about where any capital asset is converted into, so where any stock in trade is converted into capital asset, then the fair market value has to be considered as what? Income. Then the other points are like we discussed, any amount for not doing an act, restraining from doing an act, that is also taxable under that PGBP. Then Keyman insurance policy received and retained by employer, taxable under that PGBP. And the last one, sir, any sum received or receivable for violation of 35 AD is taxable under that PGBP. Sir, everybody understood the charging section now? Respond. What about the others? Others, just simply then, sir, income side I said like how many? Section 28 plus 41. Both talks related to incomes only. What is 41? 41 is about deemed profits. See, first one. 41 subsection 1 is about remission or cessation of a trading liability. What does it mean? Previous year 23-24, you have debited an expense to your P&L stating like purchases 30 lakhs. And it is allowed as deduction also. But you didn't pay. In balance sheet, what you did? In balance sheet, you recognized creditor also to an extent of 30 lakhs. Since you can follow accrual system of accounting or even cash system of accounting, any method of accounting is allowed. You followed which system? Accrual system. So on accrual basis, in previous year 23-24, this purchases 30 lakhs even though not paid, allowed. 23-24, it is allowed as deduction. I mean expense, you already claimed it as deduction. Fine. Then in previous year 24-25, you will be paying this expense na 30 lakhs. While paying, what happened na? You should pay what? This creditor 30 lakhs you should pay by way of reducing your cash. But you went to creditor and said like the raw material quality you are not satisfied. Quality is not as per the standard. So you denied paying him 30 lakhs. Then after lot of discussions, you agreed to pay him 10 lakhs only. How much you are paying, sir? 10 lakhs. But last year, how much expense you claimed? 30. So you claimed 30 lakhs expense, but you are paying only 10 lakhs. So that means how much expense you claimed only 20 lakhs na? So you got a benefit of how much? Sir, 30 lakhs expense you claim, but you are paying actually 10 lakhs only. So you got 20 lakhs remission. Out of your total liability 30 lakhs, you got remission for 20 and paying only 10. So this remission 20 lakhs has to be recognized as income for the previous year 24-25. Has to be recognized as income for the previous year 24-25. So that's called claims deduction for certain loss or expenditure in a previous year. The first reason is what? In a preceding year, you should claim it as an expense or a deduction. First. Second one, later on, some benefit or amount received with respect to such expense. So now you got some benefit, what? Remission to an extent of 20 lakhs. Then such remission is also what? Business income. So this 20 lakhs you should recognize as what? Business income. Okay. There's an expense also, sir, there. See, purchased goods worth 30 lakhs in 23-24. Same kind of example, I think. Deduction allowed in that year, not paid to the creditor, but in previous year 25, creditor agrees to settle the liability only for how much, sir? 25. 30 lakhs actual liability, but you paid in 24-25 how much? 25 only. So how much benefit you got? 5 lakhs. So this 5 lakhs remission, you should treat it as business income and you should add it to the profit, if not credited to P&L. Then depreciation, sir. Under section 32 depreciation, usually we should follow which method? Written down value method we should follow. But SLM method also can be followed. SLM method can be followed only by whom? Power sector undertakings. SCs which are engaged into business generation, transmission, distribution of electricity. So only the persons who are engaged into the power sector can claim what? Depreciation under SLM. Can claim depreciation under SLM. Okay. Sir, when you follow WDV method, then block system will come. What is block? Individual assets which are chargeable to tax at similar rates. Individual assets which are chargeable to depreciation at similar rates, not tax, chargeable to depreciation at similar rates, will be grouped, and such group is called as what? Block. Whereas SLM, in SLM concept, there is no block system is not there, will follow what? Individual system, individual asset. Let's say, sir, we have 50 benches. If you follow WDV benches, all the 50 benches will be treated as block. I mean one asset only, all the 50 benches. Whereas under SLM method, you will consider the 50 benches as separately only. You will not group them as like a block. That's the difference. Okay, so what happens in SLM method? See, cost 30 lakhs, written down value 20 lakhs, and the sale price is like you sold that asset for 15 lakhs. Sir, you sold for what? Under SLM method, sir, this is like not WDV. WDV is completely different. You sold it for 15 only, whereas WDV is how much? 20. So you sold for loss of 5 lakhs. 5 lakhs loss. This is Pgbp related only. This loss charged to Pgbp. Then I'll show you the example, sir. Cost 10 lakhs. WDV 7. Sale value 6. So how much is the loss, sir? You sold 1 lakh less than WDV. So 1 lakh charge as terminal depreciation to Pgbp. Then situation 2. Cost 10. WDV 7. Whereas you sold for how much? 8 lakhs. Then this 1 lakh gain is there, na? Treated as deemed income under that Pgbp only. You sold for more than WDV. That amount you should consider as what? Deemed income under Pgbp. Let's say cost 10 lakhs. WDV 7. Whereas you sold for how much? 12. That means you sold beyond cost, more than cost. So in that case, the difference between WDV and cost is treated as business income. Over and above cost, if you realized any gain, 2 lakhs, that is treated as short-term capital gain. That is treated as what? Short-term capital gain. So this is called as balancing charge on depreciable assets. If you sold for less than WDV, loss. Treated as terminal depreciation, charge to P&L, debit to P&L. If you sell for more than WDV, then that amount you realize as gain, considered as business income. If you sold more than, not only more than WDV, you sold beyond cost also, then WDV and cost, that difference you recognize as business income. Beyond cost, the gain you realized has to be considered as short-term capital gain. Got it? Then sale of asset for scientific research, that we'll understand afterwards, sir. Then recovery of bad debts written off. Recovery of what? Bad debts written off. Again, sir, previous year 2022-23, there is some bad debt in P&L 10 lakhs. Bad debts in P&L is how much? 10 lakhs. But section 36 said like bad debts are allowed only to the extent of written off in books of accounts. So as per 36, bad debts allowed as deduction is only allowed only 4 lakhs. Allowed only 4 lakhs. So what you should do, sir, even though debited 10 lakhs, allowed only 4 lakhs now. So you might have added 6 lakhs to the accounting profit. So in 22-23, only 4 lakhs is allowed. See, 4 lakhs is allowed. Now, how much bad debt not allowed? I mean, bad debt which was not written off. If it is written off now, it was allowed to the debit. Okay, but what we did, we allowed only 4. So how much is not allowed? 6 lakhs. Allowed 4 lakhs, not allowed 6 lakhs. Okay. Then in previous year 24-25, bad debt recovered. Previous year 24-25, bad debt recovered. How much bad debt recovered? 8 lakhs. Bad debt recovered 8 lakhs. Sir, everybody will do what now? Since we already allowed previous year 4 lakhs as expense, now out of bad debt recovered 8 lakhs, 4 lakhs will treat it as income. That's what everybody will do. That's wrong. If any bad debt is recovered, first you should adjust with the bad debts which were not allowed. So adjust with this 6 lakhs. Okay, how much balance is there? 2 lakhs. Then this 2 lakhs will assume as like what? Related to the bad debts which were written off and allowed as deduction. I mean 4 lakhs you already allowed as deduction. I mean deduction, you thought it was a loss. 4 lakhs only, not 10 lakhs. So if you recovered anything, first you adjust with the amount which you didn't consider as loss previously. So which you didn't consider 6 na. So first adjust with this 6. The balance 2 lakhs only you consider as like previously treated as loss, now came back. So this 2 lakhs only you should recognize now as income. But many will recognize 4 lakhs as income, sir. That's wrong. So bad debts, if any recovery is there, first you adjust with the bad debts which were not allowed in any previous year. Not allowed. Then even after adjusting to that, if you have still bad debts recovered, that you should recognize as income. Not straight away the one bad debt which is allowed. Okay, previously allowed 4 now record it. So straight away to the extent of 4, I'll recognize it as income. That's wrong. First you should adjust with the bad debt not allowed, then with the bad debt allowed. Okay, out of this 8 lakhs, how we are assuming now, this 8 lakhs recovered is first related to which was not allowed, 6 lakhs. So since that 6 lakhs previously not ever allowed as loss, now even after recovery also not to be recognized as income. How much is realized as expense previously? 4. Out of that, how much received? 2 lakhs. Only 2 lakhs recognized as income. Are everybody clear? With this, we completed 28 and 41. Income side done. So only expense side is pending. Format for computing Pgbp, section 20. Format and all we learned in the beginning only. When to add, when to subtract. So not required now. Section 145, it's about method of accounting. I already said we can follow cash system or mercantile system. Mercantile nothing but accrual. But whichever the system is followed, whichever the system you take, it has to be regularly followed by the then. Rent, repairs or taxes, insurance for building used for business or profession. So now we are into expenses side. Section 32, 37. In between, sir, 32, 33, 34, 35 will skip. Okay, because if I discuss all the expenses at a stretch now, you will feel bored. We'll leave again Pgbp. So first we'll discuss 30, 31, 36, 37. These 4 first we'll discuss. 30, 31, 36, 37. What we are skipping? 32, 33, 34, 35 we are not discussing now. Towards the end we'll discuss them again. Okay. So what is section 30, sir? Rent, repairs or taxes, insurance for building used for the purpose of business or profession. You incurred rent, repairs or taxes with respect to your building. First, you are owner or tenant. I mean that building owned by you or you taken that building as a tenant. If you are a tenant, rent paid is allowed. If you are a tenant, rent paid is what? Allowed. Provided it should be used only for business or profession. But if you given the building on sublet, sublet means what? There are 5 floors. 3 floors you are using, okay, and whereas 2 floors you given again for sublet. So by giving sublet, you got the rental revenue of 2 lakhs, and again you are paying rental expense of 5 lakhs. So what is your net expense? It's not 5 lakhs is the expense because you paying 5 lakhs. But for subletting the top 2 floors you are getting 2 lakhs rent now. So adjust this and the net rental expense 3 lakhs only allowed as deduction. If in P&L they already debited 5 lakhs, what you should do? They debited 5 lakhs. Can they claim 5 lakhs as expense? No. Only the net rent has to be considered as expense. So you should add back what? 2 lakhs. You should add back 2 lakhs. Deduction allowed. Actual rent paid minus rent received on sublet. You should add back. Then notional rent. What is notional rent, sir? You using your own building for the purpose of business. See, I'm carrying my profession in my own building. But for my building also there is an opportunity cost now. If I don't use the building for my business purpose, I might have given it on rent. Then I might have received certain rent. So to recognize such opportunity cost, I am charging even notional rent to my P&L. Is it allowed? No. If any notional rents are charged, not allowed as deduction. However, if firm pays rent to partner and it is charged to P&L, then allowed only. Then allowed only. Okay, because it's not a notional rent. Why? Firm is different, partner is different. Partner building is giving it on rent to firm. So there is no notional concept. Me giving my building on rent to me, na notional rent. So not allowed. Then repair cost, sir. Revenue repair or capital repair? Revenue repair allowed. Capital repair. Add to the building cost and take depreciation. SSC is a tenant. First, owner has to incur repair expenditure. If tenant is incurring repair expenditure, na, first you should check again whether there is any agreement stating like tenant only has to incur the repair expenditure. Okay, it is that. Then revenue expenditure or capital expenditure? Revenue expenditure allowed as deduction. Capital expenditure you should add to the building cost and allow and avail depreciation. Okay, repairs revenue capital, revenue allowed, capital not allowed, add to building cost and claim depreciation. Rental expense allowed. If there is rent on sublet, net expense only allowed. Notional rent not allowed. Then any other expenses paid with respect to office buildings like municipal taxes, insurance paid allowed. Sir, municipal tax paid with respect to residential house property or let out house property not allowed. With respect to your office building, factory building, na allowed. Then 31. Repairs and insurance of machinery, plant, furniture used for the purpose of business or profession. So you should check again. Repairs with respect to plant and machinery. Revenue repairs or capital repairs? Revenue repairs allowed. Capital repairs not allowed. If it is for renewal or renovation, if you are renewing it or renovating it, again it extends like, so it is like capital expenditure only. Sorry, it's not capital expenditure. So renewal or renovation is of like revenue expenditure only. So allowed. Replacement or reconstruction is of capex. So not allowed. Then any insurance paid with respect to plant and machinery, furniture allowed as deduction, but only on cash basis. That means what? Only if paid allowed. So it's not on accrual basis. Only if paid allowed. Asset should be used by SSC. Okay, then 38. What does 38 says? Any expenses which are covered under 30 to 37. If you're used partly for business purpose and partly for personal purpose, then depreciation is allowed. Sorry, then the expense is allowed only in proportionate to that of business use. Understand, sir? Any expense which is covered under 30 to 37, it is partly used for the purpose of business and partly used for the purpose of profession. Then the depreciation is allowed. Not only depreciation, any expense is allowed only to the extent related to business. Only to the extent related to business. Okay. Then all these sections are 35 series. 32, 43, 33AB, 33ABA, 35, 35ABA, ABB, AD, CCA, CCB, CCD, D, DD, DDAE. All these allowances we'll discuss afterwards. It's not like we are skipping. We'll discuss them afterwards. Sir, what expenses we discussed, sir? 30, 31. 30 is related to rent, repairs, and other expenses related to building. 31 is what? Rent, repairs, and other expenses related to plant and machinery and furniture. 28 is what? Charging section. Then we discussed about section 41, deemed profits. I mean, those also has to be treated as what? Pgbp incomes. Sir, you guys are there? How many of you are there? Tell. Are you feeling it as heavy? We can continue, right? Sir, patience only, sir. Okay? Because recently only, 4 5 days back, I have taken the face-to-face sessions in Hyderabad also, right? Marathon. 70 80 people attended there. What I understood is like PGBP, you can understand. The thing is like patiently continue. Listen it patiently till the class is completed. Your mind says like, no, okay, I feel like heavy and all. Concepts, so believe me, PGBP, you can, once you prepare properly, exam time, it doesn't require much preparation. Okay, you can remember now itself. And transfer pricing is also one chapter. If you prepare now properly, exam time, these two chapters, you just spend 1 hour for transfer pricing and 1.5 hour for PGBP. But these two chapters itself will cover you 40 marks minimum, right? Within 2.5 hours on the exam day. So how can we save time on the exam day? These chapters you learn thoroughly. Okay, and remember me, sir, PGBP will not forget easily. Once you learned PGBP, will not forget easily. What you will forget easily, deductions chapter, whatever I said yesterday, if I ask you now again the deductions, you might have already forgotten. Okay, so PGBP can be struck into your mind, whereas deductions will not remain like that. Okay, so PGBP first follow it. It's okay, then you'll get it, you'll used to it. Because sir, it's more of accounting, sir. If you can visualize P and L, which is expense, which is income, expense nature what happens, income nature what happens. So this what should be the treatment. If this accounting knowledge you are having, then this chapter will become really easy. Okay, so the more you need not to remember more, it's more like a common sense. Okay, your pen or your things will flow easily once you learn from. But I'm saying, sir, there are certain questions like DTA. See, the chapter looks easy. Everybody, okay, even I say DTA chapter is easy. But the problem is like there is no concept at all there. They'll test the problems in multiple ways. They'll bring points from multiple problems and they'll make a question from DTA. Okay, DTA question, if at all it comes from question is from direct book or the points are already we solved, then it is easy. Otherwise, TTA chapter is the toughest chapter. Why? Because the marks you expect and the marks you get will not match. Okay, DTA chapter, that's the problem with DTA chapter. Then again I'll tell the other chapters like, see, question number 3 also, tax planning. If it is within your range, you can do. Otherwise, there is not even a minimum guarantee also. There is not even a minimum guarantee also. So that's why, please focus on it. Continuing, Lavanya. What are the expenses we discussed, sir? 30, rent, revenue and other expenses related to building. 31, rent, rent, repairs and other expenses related to building. Rent, repairs and other expenses related to plant and machinery and furniture. Then we went to 36. 36, sir. 36 consists of number of deductions. It's not a single deduction, sir. It consists of a number of deductions, which we call them as like other deductions. But these points will come regularly in exam. That's why. First one. Insurance premium. Does it allowed as deduction or not? Insurance premium paid with respect to stock, stores, sir, because building, plant and machinery related insurance, we already covered that in 30 and 31. Now what else is there? If you have any stock, stores, with related to them, if you paid insurance premium, allowed as deduction. Then section 36, 1, subsection 1, what is it is like? A federal milk cooperative society, is paying insurance premium for cattle which is owned by its members. Sir, there will be milk cooperative societies. these societies usually will be there in like some cities and towns. Whereas this society will have members in all the rural areas. It will have members in rural areas. Now what? This society will keep a milk collecting booth. So these members will every day deposit their milk here. Okay, and this milk will be transported to society, and society with this milk they'll do different milk products and sell. Right, this is the point. Now cooperative society paying insurance not on their plant and machinery. They are paying insurance with respect to cattle of members. That is also allowed. Cattle also allowed. Okay, sir, the question is, cattle is not related to, cattle is not the plant and machinery or not owned by cooperative society. They are owned by whom? Members, but still it is allowed. Okay, then employer paid health insurance for the benefit of employees. For the benefit of employees, who paid health insurance premium? For employer, paid by employer for the health of employees. That is also allowed if paid in other than cash. That also allowed. But for my benefit, BCCA paid me health insurance because I am talking so much now. Maybe someday my vocal cords may get affected. So BCCA has taken me health insurance on behalf for me. Now for BCCA it's an expense, right? For BCCA it's an expense. Can BCCA claim it as a deduction or not? Yes. Paid by employer for health of employee, allowed it as a deduction. Then employee related expenses. Sir, employer will be paying certain payments to employee. Now for employee, all these are incomes taxable under which head? Salaries. For employee, all these are incomes taxable under which head? Salaries. Whereas for employer, all these incomes are taxable where? Whereas for employer, all these incomes are taxable, all these expenses are allowed or not? That's the point. We have salary, wages covered under section 37, allowed only. Other allowances covered under section 37, perquisites covered under section 37, allowed only. Now what is covered under 36? Bonus and commission, contribution to welfare funds. Let's say where any bonus and commission paid to employees is allowed. But if a private company is routing dividend in the name of bonus and commission to their members, it is not allowed as deduction. Let's say, sir, BCCA is a private limited company. Let's say, for example, private limited company. Now it has profit. If it has profit, on this profit it will pay 30% tax. Then the net profit will be again distributed as dividend. Let's say it given dividend to me. When it given as dividend to me, again it's an income for me. Again here also it is taxed. The same income, here also it is taxed, and again in my capacity also it is taxed as dividend. So double time taxing happening in company. So what BCCA decided? BCCA is paying to me, because I am taking classes also now here, is paying me in the name of bonus and commission. Then what happens in P&L of BCCA? They'll claim bonus and commission as what? In P&L expense. Let's say some 50 lakhs paid as expense. So BCCA profit reduced. So here no tax. Only it is taxed to me. So instead of double taxation, it got taxed only once, right? So this kind of adjustments might be done by the private limited companies. Now to curb those practices, what they are saying, like, if it is a real, genuinely paid expense, then allowed. If it is not genuine, if it lacks genuinity, it's just a routing dividend in the name of bonus and commission, then it is not allowed as deduction. So who will tell, sir, whether it is genuine or ingenuine? Sir, first you will be allowing only. But afterwards, at the time of assessment, if ever finds out that that is not a genuine expense, then he has the right to disallow it. Then contribution to PF and other employee welfare funds. Sir, here there is employee, there is employer, employer making contribution to welfare fund of whom this is employee. Sir, employer contributing to welfare fund, fine. And even employee will also contribute now. But understand, sir, if employee contribute means yes, directly employee will deposit in the welfare fund. No, right? How it happens? Out of employee salary, some amount will be deducted by employer only and deposited into welfare fund. In other words, employer will be giving, sir, let's say employee salary 1 lakh, sir. But what employer will do? His contribution also has to be made an employee contribution. So 10,000 he'll deduct and give only 90,000 to employee. That means what? Other way, employer first given 1 lakh and from again employee is collecting 10,000. That's what the impact, right? Because otherwise employee is eligible for 1 lakh. Why you are deducting 10,000? Instead of you giving him and again taking back, you straight away deducting 10,000. But that deducted 10,000 is nothing but employee giving his contribution to whom? Employer. Now, employer has to deposit in welfare fund. Employer will deposit only employee's contribution of both, employees and employer contribution of both. So there will be employee's contribution, and there will be both here employer contribution also. Employee's contribution and there is both employer contribution. So what is the point, sir? Employee's contribution has to be deposited within the due dates of Welfare Act, not Income Tax Act. This has to be deposited within what? Due dates of Welfare Acts. Let's say the Welfare Act due dates are like next month 15th. So this is related to July. Then it has to be deposited by when? August 15th. Deposited by August 15th. Whereas employer contribution, it has to be deposited by due date under Income Tax Act. So which section said this? 43B. Okay. So employee's share of contribution also employee will not do directly. He will transfer it to employer and employer has to deposit both employee's contribution and employer contribution. See, the point is when employee gives his share to employer, this contribution whatever received by employer, first it recognize it as income of employer. And then when he contributes to the welfare fund within due date, then again it can be claimed as what? Expense, allowed as an expense. Why this kind of provision is kept? Sir, otherwise employer may collect money from employee and might be using for his own purpose. He never be depositing that into the welfare fund. He might be using for his personal purpose. So to control those kind of things, what the provision said? Employee share of contribution collected by employer from employee. First treat it as income. Then, sir, but really it's not my income, sir. I'll pay back now. First recognize as income. Then once you deposit into the welfare account by the due dates of respective acts, what is PF Act, PF due date, Gratuity Act, gratuity due date. When it is deposited within the due dates, then again allow it as expense. First treat it as income. If you deposited by due date, claim as expense. Otherwise, can't claim as expense. So this will be treated as income and you have to pay tax. Understand? So employee contributions are overall 50 lakhs received. 50 lakhs first recognized as income. Once it is paid within the due date of PF Act, then again claim 50 lakhs as expense also. So income, expense, balance, nothing, you don't have any burden. If you didn't pay it, then 50 lakhs recognized as income and it will be taxed to you. But it's actually not your income, you are paying back, but you didn't pay it within the due date. So to make sure that you pay it on time within the due dates, this provision has been kept. That's why this provision is so stringent and strong. Okay, sir, no money, sir, that's why I didn't pay. Sir, why you can say no money? You already deducted it from employee. So that's not your money. You collected from employee. So you can't use the word that you don't have money. So it's already taken from employee now, deposit within the time. If you don't deposit, first treat it as income. If you don't deposit now, you can't claim it as expense. Understand? Whereas employer contribution is money only. If he made any delay also, fine. If he pays by due date, then it is allowed as due date of what? Income Tax Act. What are the due dates of Income Tax Act? It could be 31st July, 31st October, or 30th November of assessment year, considering different situations. That also can be allowed as what? Deductions. Sir, able to understand, sir, everybody? Employee transfer share of contribution of PF fund to employer. Now, employer has to deposit employee share of contribution as well as employer contribution to PF fund. Now, employee share when received, very important points are this is. In 2 or 3 exam questions, this point is there. Employee share of contribution when received from employee by employer, consider it as income. An employer again deposits within due date of what? PF and welfare acts, allowed as deduction. Whereas employer contribution allowed as deduction subject to 43B. What is 43B? It says like payment has to be made before the due date of filing return of income. Then it is allowed as deduction. Okay, then. Employer contribution to pension scheme. Where employer is making any contribution to NPS, which is covered under 80 CCD. Sir, if you remember, they are under 80 CCD subsection 2, where any contribution made by employer to the NPS fund allowed as deduction to employee. In 80 CCD, we discussed about employee, and 80 CCD subsection 2 is available under both old regime and new regime. How much deductions are? Government employer, actual or 14% of salary, whichever is lower. Non-government employer, then old regime na actual or 10%. New regime na actual or 14% of salary is allowed as deduction to whom? Employee. Now we are talking about what? Employer. Because ultimately the amount is paid by whom? Employer. Can you claim it as an expense or deduction or not? Yes. When allowed? How much is allowed? Actual or 14% of salary, whichever is lower. What is salary? Salary equals to basic plus DA forming part. Okay. Then interest on borrowed capital. Sir, if you borrowed any money, loan funds, then how much interest on it is allowed? The interest from date of loan till the asset is put to use, till the date asset is put to use, not till the completion of asset, till the asset is put to use, that is borrowing cost, capitalize it. You can't avail as expense. Interest which is accruing after the asset is put to use, allowed as deduction. Any other interest paid is also allowed as deduction. In simple, sir, interest. Is it relevant to borrowing cost? You know borrowing cost standard, sir. With respect to any qualifying asset, any interest incurred, that interest what we should do? We should capitalize the interest element also. Here what they are saying, like that interest part up to asset put to use, capitalize. After put to use, allowed as deduction. Whereas if there is any notional interest, not allowed, other interest allowed. Then discount on zero coupon bonds. Discount on zero coupon bonds. What does it mean by zero coupon bond, sir? Zero coupon bond, this bond will not pay any interest. Zero coupon. Coupon means interest. Okay. But then who will buy if it does not pay interest? Sir, it may be issued at 80 only. I mean for discount, and will be redeemed at par value 100. Okay. After 5 years. Now for 5 years, you invest 80 and you will get how much? 100. So this 20 rupees only your interest income. Okay. But whether this 20 is related to a single year, sir? No, it related to all the 5 years. It related to all the 5 years. So now the interest has to be apportionated over the tenure of the bond. Over the tenure of the bond. See, here issue date is how much? 1st September 2020. Issue price 800, redemption price 1000, tenure 5 years. Okay, so what is the benefit, sir? 200. Can we claim 200 in a single year? No. This has to be apportioned over the tenure of the bond. Tenure not just 5 years, sir. See, here, sir, if a holding period is greater than or equal to 15 days also, you should take it as full month. Less than 15 days, ignore. Sir, here in 2020, you can't claim full year because in this year, how many months is there? 7 months only. So proportionate to 7 months only you can claim. So 2021, 7 months. 21-22 total year, 22-23 full year, 23-24 full year, 24-25 full year, and again in 25-26 5 months. Why? Because it was not given on 1st April. then you might have directly apportioned over 5 years. It was given in the middle of the year. So that's why for first year 7 months related. So 200 into 7 by 60. Whereas other years 40, 40, 40. And last year 5 months related. 200 into 5 by 60, 16.67. So discount on zero coupon bonds is allowed as deduction, but in proportionate to the tenure in that previous year. Okay, the tenure with respect to the previous year is only 8 months. Then the 8 months related discount only can be allowed as deduction. I hope you understood, sir. Then bad debts. Bad debts first. When bad debt is allowed as deduction. Sir, tell me one on point, sir. If you are following caste system, there are two systems, right? Caste system and mercantile system. When you are following accrual system, when you are following caste system, is there a question of having data? When you are following caste system, is there a question of having data? When you are following caste system, is there a question of having data? Caste system. No, right? Why? Caste system, you will recognize sales only when you realized. So there is no question of data. When there is no data, why there will be bad debt? So bad debts will come only when you are following accrual system. Okay. That also when. Let's say in previous year 23-24, you recognized sales as 70 lakhs. But out of this 70 lakhs, 20 lakhs is credit. I mean, you didn't receive money yet, but still you recognized it as income and taxed also. But in the current year, you understood that this 20 lakhs is not receivable. Okay, this 20 lakhs turn out to be bad. Then this 20 lakhs you will consider is as what? Bad debt. Debt related to business or profession. Debt have been taken into account while computing total income of any of the previous year. So, I mean, that was a sale or income in any of the previous year. If it is not income in the previous year, now it is written off also, no problem. So when it is a problem or when we need to be focused or be cautious, in any of the past year, that income you considered and taxed, now subsequently you cannot receive that money. So it is turned out to be bad. Then you can claim it as an expense. So previously if you recognized as an income, then now this loss of not receiving that bad debt, you can claim as an expense. Understand? If past itself you didn't realized it as an income, past you never realized it as an income. Now even though it is a bad debt written off also, you can't claim it as an expense. Understand, sir? First you should have been realized it as an income. Then subsequently it turns out to be bad in any of the subsequent years. Then in the subsequent years you claim it as an expense. Okay, and such debt must be related to capital revenue items, not related to capital items. Bad debt should be actually written off in books of accounts. If all the above conditions are satisfied, then allowed. Okay, if any provision created, provision for bad debts are not allowed, sir. Only actual debts are allowed. Okay, then A Limited merged with B Limited, sir. Now A Limited recognized something as sale and recognized a credit debtor. But then it was merged into B. Now B Limited found out that it is a bad debt. But does B Limited recognize it as a sale? No. Previously B Limited didn't recognize it as income. But the predecessor A Limited recognized it as an income. Still it is valid. Can claim deduction as bad debt. Okay. Then when the bad debts are written off and recovered subsequently, how to do? See, bad debts written off 30, whereas allowed as deduction only 20 lakhs. How much is disallowed? 10 lakhs, right? Now in the current year, bad debt recovered is how much? 15 lakhs. Do we need to consider whole 15 lakhs bad debt recovered as income? No. First what we should do, this 15 lakhs we should adjust with the disallowed one, which was not allowed. Okay. Then the balance 5 lakhs only, you consider it as like, which was disallowed and subsequently recovered. So it's a deemed profit, 5 lakhs. Then provision for bad debts with respect to banks, financial institutions, NBFCs. Sir, for banks, cooperative societies, agri societies, 8% of their gross total income, and then 10% of their aggregate average advances made by rural branch, 8% of gross total income, and 10% of aggregate average advances made by rural branch. All together is the provision that can be created by banks. For normal people, provisions are not allowed as expense, disallowed. But for banks, since they give so many loans and all, bad debts is a common thing. So for them, provisions are allowed. How much? 8% of gross total income plus 10% of aggregate average advances made by rural branch. Then foreign banks, PFIs, NBFCs, how much? Maximum 5% of GTA. Then family planning expenditure, promotion of family planning expenditure. So it's back then introduced when Indira Gandhi is the prime minister. Okay, maybe in the president rules at that time. So then this provision has been introduced. Okay, that time overpopulation is there. So to control, people are also not enough educated. So forcefully they included this. Of course, they had a backlash for it. Fine. Family planning expenditure, capital expenditure or revenue expenditure. Sir, why companies will do family planning expenditure, sir? That time, most of the business entities, companies are like public sector companies only. So they asked the public sector companies to promote family planning among the employees and other people also. So that's why they'll be incurring expenses on this. Okay, so what is revenue? Revenue na the normal surgeries related expenditure. Okay, whereas capital expenditure na for building out that medical facility, that hospital and all, they'll incur capital expenditure. The capital expenditure, sir, understand this is only for companies. Family planning expenditure is only for companies allowed. Allowed as deduction for how many installments are? 5 equal installments. Let's say they incurred 50 lakhs on capital expenditure. 50 lakhs not allowed in a single go, 5 equal installments. Whereas revenue expenditure allowed in the same year. Then insurance companies, financial companies, when they transfer any amount to special reserves, allowed. How much? Actual amount, 20% of Pgbp income before this deduction, and then 20% of paid up share capital, general reserves minus opening balance of such special reserve. Whichever is lower is allowed, not much important. STT paid. If any securities transaction tax is paid, then you should compare whether SSE is paying that as a trader or as an investor. So how do we know he is a trader or investor? When doing this purchase and sale of shares in the demat account, if we select it as intraday trading, INTRA, intra, then he is a trader. Then STD paid is allowed as deduction. Okay, STD paid is allowed as deduction. And the resulting gain or loss is also taxable under the PGBP, which we call it as like speculative. It's like speculative business. When he is doing intraday trading and he has any gain or loss, that speculative business related gain or loss. And STD paid allowed. If he is an investor, when he is investor, he selects intraday trading, intraday trading. Then it is what? Okay, investor. Then gain or loss covered under the head capital gains. Okay, and even STD paid is not allowed under PGBP, even not allowed under the head capital gains also. Then commodities transaction tax. Instead of shares, if you are trading in commodities, instead of shares, if you are trading in commodities, then the commodities transaction tax paid is also allowed as deduction. Instead of shares, if you are trading in commodities, then the commodities transaction tax. Again, investor, trader. If you are an investor, allowed as deduction. If you are a trader, if you are an investor, not allowed. Trader, allowed. Then purchase of sugarcane. Sir, again, this also has a logic, sir. Sugar factories, sir, actually, more than 10,000 in a day, you cannot make more than 10,000 payment in cash for a person, right? But whereas to a farmer, with respect to purchase of agri produce, you can pay more than 10,000 also, no restriction at all. So, by taking this loophole, sugar manufacturing companies, they are paying some amount only to the farmers, but on record they are showing like, let's say instead of 30,000 they paid 50,000 to the farmer. They are showing on record. Now this extra 20 they didn't pay actually, but showing it in the books so that their expense will come down, expenses will increase, profits will come down. I mean, fake expenses they are claiming. If the IT people ask, like, where is this 20 lakhs? Where is this amount paid? Not reflecting in bank account. They are saying like we paid it in cash. Understand? So to control these kind of situations, what the provision says now, whatever the amount you paid, they don't consider. Cooperative society engaged in manufacture of sugar. How much is allowed? Either the expense on purchase of sugar cane is allowed only up to the price fixed or approved by government. So government fixed ton 2000. Whereas he is stating like he paid 2500. You can't claim 2500. Only up to 2000 it is allowed as deduction. Then market to market loss. Market to market loss na, okay, any loss, market to market na, these are like notional gains. Sir, on 31st March, you didn't sold the share or any hedging instrument. But on 31st March, you are netting off your profit or loss. Sir, for example, sir, you are a trader. You has a commodity purchased for 50,000. On 31st March, its price is only 40,000. You didn't sold. But if you market it to market, you are having a loss of 10. Why? When you purchased 50, now it came to 40. But it's not a realized loss. It's a notional loss only. Why? Because you not yet sold. So if there are any market to market, because on 31st March, you are marking it to market. So whether that market to market loss is allowed? No. Okay. It's as per ICDS, sir. If allowed, allowed. Otherwise, not allowed. Then we'll complete 37 also, sir. Then we'll take the lunch break. We'll complete 37 also. Simple section only. What does 37 say, sir? Sir, under 36, what are the expenses we reported? Insurance. We discussed about insurance. Then employee related. We discussed about bonus and commission. Then we discussed contribution, both employee contribution and employer contribution to welfare funds. And we discussed about contributions to ATCCD pension fund. Then we discussed about interest. We discussed about discount on zero coupon bonds. Discount on zero coupon bonds related we have discussed. Then we have discussed about the bad debts. Then provision for bad debts with respect to banks. Then we discussed about STT, CTT, Commodities Transaction Tax and Securities Transaction Tax. Then we even discussed about sugarcane related and market to market loss. All these are covered under 36. Okay. Even under 33, 34, 35 also. Sir, we didn't discuss 33, 34, 35. 32, even though we don't discuss, you know, to an extent. 32 is what? Depreciation. But you don't have a clue about 33, 34, 35. See, any expense related to business, but not covered under 32, 36. I mean, not 30. 30 is what? Rent, repairs and other expenses related to building. 31, rent, repairs and other expenses related to plant and machinery and furniture. 32, depreciation. 33, 34, 35, leave for now. Then 36, other deductions. If any expense not covered under here, many expenses not covered, sir, under 30 to 36. Let's say, for example, the salary itself not covered. Advertisement expenditure, audit fee. So like that, so many expenditures are not covered under 30 to 36. Now all those will be covered where? 37. So 37 will not talk about specific expense with name. It talks generally. If these conditions are satisfied, then assume it as related to business and avail as a deduction. When the following conditions are satisfied, then such expenditure is allowed as deduction under 37. What are the conditions, sir? Such expense not covered under 32, 36. It is incurred by SSC only. And it is incurred after commencement of business. And it is not in the nature of personal nature. Not covered under 32, 36. Incurred by SSC after the commencement of business, not in the nature of personal nature, incurred wholly and exclusively for the purpose of business or profession, not of capital nature and not an offense or violation of it. SSC only should incur, not covered under 32, 36. not of personal nature, not of capital nature, incurred only for the purpose of business or profession, and it's not a violation or offense. Sir, my factory emitting more smoke. So so the pollution control people came to levy fine, not fine. They want to seize my factory. So I spoke to those people and given 2 lakhs as bribe. Sir, this 2 lakhs why I paid, sir? Not for my personal purpose, na, for business only. Otherwise, they'll seize the factory. My whole business itself will shut down. That's why I paid 2 lakhs to those officers. But giving such kind of bribe is what? Violation or offense or a prohibited by law. So I can't claim it as a deduction. Okay. What are the additional points, sir? CSR expenditure. Okay, these are like clarification. CSR expenditure. Any CSR expenditure, corporate social responsibility expenditure incurred as per 135 of Companies Act is not allowed under 37. It's not allowed. Then pharma companies, okay, all these pharma companies will be visiting doctors and medical practitioners and requesting the doctors to prescribe their company medicines. Sir, if doctor prescribe a particular medicine, we'll use that only. We'll not again see this company medicine only I'll use. Okay, for medicines, whatever doctor says, most of the cases, 90% of the cases, that only we follow. Now, if so, the whole business is in whose hands? Doctor's hands. If doctor prescribes a particular company, then that particular company sales will grow, right? So that's why the pharma companies want to attract doctors. That's why they will be giving gifts and all. Okay, so when they're giving freebies and gifts to doctors, now doctor may refer their company medicine to get, okay, then the company sales will be increased. Okay, so it's a business related expenses now. What the problem? Sir, a doctor cannot accept freebies. Why? Sir, if the freebies is legalized, na, one company will say, come and say directly like, I'll give you 10 lakhs if you refer my company medicines. Then taking 10 lakhs, this doctor, without any checking, he is referring those medicines only. The problem is what? Those company given 10 lakhs to doctor and didn't follow any proper rules. So by using those medicines, many patients will get suffered. That's why pharma companies, that's why medical code of conduct is like doctors can't encourage these kind of freebies. So if pharma companies are giving freebies and they incurred expense, they are incurring expense which is a violation of medical code of conduct. So since it is a violation of law, that also can't be allowed as deduction. Then interest penalties paid for delayed payment of statutory dues. Sir, understand, delayed payments, if interest is paid, interest is not a violation of law. Okay, except income tax and TDS interest. Income tax interest and TDS related interest, they are disallowed only. Okay, if any other interest is paid, let's say GST paid delayedly, GST interest, customs duty paid delayedly, there is interest. That interest is not of penalty, it's of compensatory nature. So interests are allowed only. Interest allowed. Not only interest, sir. Interest and late fees are what? Allowed. Whereas if there is any penalty, that penalty also for what? Violating a law. Just because the referred penalty, it's not disallowed. If penalty is for violation of law, then only it is what? Disallowed. Only if penalty is for violation of law, then only it is what? Disallowed. Okay. Then see, sir. Interest paid for delayed payment of GST, customs and any other tax except income tax, TDS, allowed only. Penalty for delayed payment of tax, not allowed. Interest on loan for payment of income tax, not allowed. Then a company or a person contributed for political party or amount spent for advertising a political party, promoting a political party, sir, that is also not allowed under 37, sir. Any expenditure spent for political party is not allowed. Here under Pgbp you disallow, add back. Whereas under 80 GGB and GGC, under chapter 6A deductions, contributions to political parties are allowed as deduction. So that can be allowed under again 80 GGB and 80 GGC. Then Keyman insurance policy proceeds taxable here only, na. So the Keyman insurance policy premium is also allowed. premium paid for employees with respect to personal accident policy. Sorry, mining company is paying premium with respect to accident policy of employees. Why it is paying? Sir, if it didn't pay premium and in the mining operation some accident happens now, for all the employees families, who has to pay compensation? Employer only na, that business guy only na. So to escape, I mean, to get relieved from that, he is paying insurance. So it's related to business only, allowed. Cost of production of an abandoned film. Sir, you shooted a film half and then you left the film there, and then you shooted another film which is a blockbuster. Now with this film profits, can you avail such the film which was abandoned also as expense? No, every film has to be treated separately. Any tax audit fee, litigation fee you pay to auditors, always allowed as deduction. Settlement amounts paid. Sir, the word settlement amounts na, the word settlement amount, sir, settlement na, you are not finding justice, you are compromising justice. When settlement comes, when they are compromising justice, when they are compromising, it involves violation of law, not allowed. Okay. And even provision for loss of subsidiary, deferred tax, diminution in value of assets, unascertained liabilities, where any provision created for subsidiary loss, deferred tax, value of assets loss, unascertained liabilities, not allowed. But you should write down this point, sir. Any fee paid for change in MOA, AOA or authorized share capital, these are of capital nature. So whatever we have discussed till now in PGBP, sir, incomes related, we have discussed sections like section 28 and 41. And then expense related, which are allowed or not, we have discussed the sections like section 30, 31, 36, 37. So 28 is about what? The charging section. By reading the charging section, we'll understand which incomes are taxable under that PGBP. Then section 41, it talks about the deemed incomes. Then 30, it's about expenses, either the rent paid or repair expenditure and other expenses which related to building. 31 is with respect to plant and machinery and furniture. Then 36 is related to other deductions. Okay, other deductions. Under 36, there are several expenses like insurance, bonus and commission, contribution to PF funds and all, interest, discount on zero coupon bonds, bad debts, STT paid, CTT paid, family planning expenditure, mark to market expenditure. So all these covered under 36. Then 37 is about general deductions. Okay, when 37 is allowed, under 37, to claim an expense as deduction, first, it shouldn't be covered under 32, say 36. Not related to personal nature, not of capital nature, related to business or profession. incurred by SSE, and it is not a violation of law or offense. Okay, so now we are going to discuss about disallowances. Okay, sir, we are yet to discuss the sections like 32, 33, 34, 34 not there anything, 35. But leaving them aside, we are going to discuss the disallowances. The major disallowances are under 40A and then 40 capital A and then 43B. So let us quickly discuss these disallowances and again we'll come back. First of all, 40 A subsection 1 and 40 subsection A clause 3. 40 subsection A clause 1 and 40 subsection A clause 3. What does it about? Any payment by SSE to a payee who is outside India. Nothing but the payment is made to a non-resident who is there outside India. If you are making interest, royalty, fee for technical service or salary. Sir, here SSE is making what? He is making a payment to non-resident. SSE is making a payment to non-resident. While making this payment, we should check what? Whether this amount is taxable or not, we should check. This amount or the payment is taxable to non-resident or we should check. If it is interest, if it is royalty, if it is fee for technical service or if it is salary, obviously they are taxable to non-resident. They are considered as deemed to be accrued in India. Sir, if you remember the basic residential status conditions, for a non-resident to tax any income that should be received in India, it should have been received in India or it should have been accrued in India. Then only they are taxable. Coming to interest, royalty, fee for technical services, they are always deemed to be accrued in India only for NR. So they are taxable only. But when we are talking about any other sum, if it is like any other sum paid to non-resident, you should be little cautious whether it is actually taxable to non-resident or not. Only if it is taxable to non-resident, then on the TDS should have been deducted. So understand, interest, royalty, fee for technical service, any other sum or salary paid to non-resident, on that either TDS not deducted or deducted but not deposited with the government on or before due date of filing return under section 139 subsection 1. Either TDS not deducted but deducted but not deposited within the due date of filing return under 139 subsection 1. Okay, then so the provision here is what? When making these payments, if they are taxable in India, SSE has to deduct TDS, and not only just deduction, deduct TDS and should remit the TDS with the government on or before the due date of filing return of income. If not deducted, then what happens? If TDS is not deducted, then 100% of such expense will be disallowed in the previous year. 100% of such expense is disallowed. However, the same shall be allowed as deduction in the year of actual payment. Year of actual payment. So example you could see, sir. So A Limited is the payer. Josh Butler is a non-resident payee. Payment is like royalty. Amount 20 lakhs. In the year 23-24, TDS is not deducted and not remitted also. So in 23-24, what happens, sir? This interest, royalty, whatever the amount is paid, since TDS is not deducted, it is disallowed. It is disallowed. So disallowed now what? 100% of such expense has to be what? Added back. Disallowed now 100% of such expense has to be added back. In which year? 23-24. Now what they did in 24-25? in 24-25 they deducted TDS for the 23-24 transaction. Last year they didn't deducted TDS, so disallowed. Now for the last year transaction also they deducted TDS in the current year. Then what is then? So simple. In previous year 23-24 TDS not deducted. So what you will do? Expense you will be add back. Add back to what? The profit. Why? It is debited to P&L but still not allowed. So add back. Whereas in previous year 24-25 you deducted TDS unpaid. But understand, sir, the same item again will not be debited to P&L. Because as per accounting, it's an expense in 23-24 only, not in 24-25. As per accounting, you should not deduct TDS now. There is no concept of TDS in accounts. Only tax it is there. So in previous year 2024, it is debited, but not allowed because TDS is not deducted. So you added back. Whereas in 24-25, such item, again it won't be debited to P&L. Why? Because last year related are not debited to P&L. But since the current year in 24-25 TDS is deducted now for last year, so in this year it is allowed. So allowed now what you should do? From the profit again you should subtract that amount. You should subtract that amount. See, 20 lakhs related to previous year 23-24 is allowed as deduction in previous year 24-25. Okay. Sir, got it, sir, everybody? In the year, if TDS is, it is debited to P&L, but TDS is not deducted. So that year, you should reverse it, add back. Whereas next year, if you had deducted TDS and paid it to government, then in the next year it is allowed. So allowed now, that means you should subtract it. If it is already debited to the P&L in next year, usually it won't be. But is that, then no problem. If it is not debited, then again you should do what? Subtract it. So are able to understand, everybody? Okay. Then section 40A subsection 1A. What does it is like? Where SSE making a payment to resident. Sir, previously non-resident, now the payment is made to whom? Resident. And on such sum which is making payment, it may be related to an expense or something. TDS not deducted or deducted but not remitted to government. TDS not deducted but not remitted to government. Then if it is to resident na 30% of such expense is disallowed, not completely. How much is disallowed, sir? 30% of such expense is disallowed. See, payer is into business or profession, SSE makes payment which is chargeable to tax to recipient, and the payee is recipient, payee is resident, and the recipient. TDS not deducted in the previous year, deducted but not remitted to government by due date. Then what happens? 30% of such expense is disallowed. However, if in next year, sir, this is in previous year 23-24, TDS not deducted, the expense is 10 lakhs. Out of 10 lakhs, TDS not deducted, so how much is disallowed? 3 lakhs. So 3 lakhs, what you should do? Add back. Since it is already debited to the P&L, to disallow, you will be adding back 3 lakhs. Whereas in previous year 24-25, if at all TDS is deducted and remitted to government, even on the last year 10 lakhs, then in 24-25 again it is allowed. What is the treatment if it is allowed? So it won't be usually debited in 24-25 P&L. So again you should what? Subtract. Okay. See, audit fee 3 lakhs, TDS not deducted. So net profit before adjustment is 20 lakhs for 23-24. So since TDS is not complied, not deducted, 30% of 3 lakhs, 90,000 disallowed. So what you will do? Deduction under 41A, add 90,000 to the net profit. So the adjusted net profit is how much? 20 lakh 90,000. Whereas for 24-25, the net profit is 15. Since the TDS is deducted and remitted to government in 24-25, that 90,000 again you can, which is disallowed in 23-24, can be allowed as deduction in 24-25. Okay, allowed as deduction. So it will come to 14 lakh 10,000. Okay, if TDS is not deducted, 30% of expense is disallowed. However, when TDS is subsequently deducted and deposited in a later year, the disallowed expense is allowed as deduction in the year of payment. Clear, sir? Then, Section 40, subsection A, clause 2. Section 40, subsection A, clause 2. It's about what? Disallowance of direct taxes. What does it mean? Any tax levied on profits and gains of business or profession is not allowed as deduction. Any tax levied on profits and gains of business or profession is not allowed as deduction. Any tax paid on, okay, profits and gains, sir, including wealth tax. Wealth tax or income tax, all these are what? Disallowed. See, income tax, self-assessment tax, advance tax you paid, demand you paid, surcharge, cess, interest on delayed payment of above taxes, including interest on TDS, wealth tax, all these are what? Disallowed. Disallowed now. This may be related to business, but still not allowed. So what you should do? Add back. Whereas indirect taxes like GST, customs, paid or allowed as deduction is not applicable to them. Indirect taxes like GST, customs, paid or allowed as deduction is not applicable to them. Then Section 40, subsection A, clause 2B. What does it says? Like, disallowance of payments by state government undertaking. That means state government undertakings, sir, will be paying royalty, license fee, service fee, privilege fee under these names to state government. Why they are paying first? Sir, again understand. Income tax will be taken by central government, not by state government. When the state government undertakings, okay, if they have profits, usually they give it to state government. But they should pay first income tax and the balance only they should go to the state government undertakings. Now state government undertakings also, to avoid tax, they are giving to shareholders, they are giving to the state government instead of in the name of dividend. If they give it in the name of dividend, first they should pay tax and then only they can give it to government. So even these government companies also, state government companies also started diverting their profits with a different name to state government, like royalty, license fee, service fee, privilege fee. If they were taken in that name for the state government undertakings, they can claim it as an expense. And state government, it's not taxable. Okay, that's why profits, instead of profits, they are diverting it to the government in the name of royalty, license fee, service fee, privilege fee. But if anything rooted in such a way, it is what? Disallowed. If it is what? Disallowed. Okay. Then tax paid by employer on non-monetary perquisites paid by employer. Tax paid on non-monetary perquisites paid by employer. So first of all, what is a perquisite? Perquisite means a benefit given to me by employer to employee. Okay, benefit given by employer to employee. Benefit given by employer to employee, then it is called what, sir? Perquisite. It's called what? Perquisite. Benefit given by employer to employee, it is called as what? Perquisite. What is monetary? What is non-monetary? Let's say they given me rent-free accommodation. Rent-free accommodation. They provided me motor car. Or these are like what? non-monetary. So no money involved. Directly they are giving the benefit. What are monetary? Let's say they are providing me servant facility. If at all directly employer only recruits servant or driver or someone, okay, helper, he comes and does all the works needed for me. I'll not pay anything. Then non-monetary purpose. Let's say I only hire the servant or maid on my own. Now whatever I incur as the cost for the servant or maid, that would be reimbursed by employer to me. That would be reimbursed by employer. So if it is like reimbursement kind of money involved, monetary perquisite. If no money involved, directly employer is only paying, then it is what? Non-monetary perquisite. Okay. Sir, for me salary given, it's a benefit. Allowance given, it's a benefit. If any these kind of rent-free accommodation, motor car are given, non-monetary perquisites, those are also benefits to me. Add it to salary. Now, what employer is doing now? The tax element on these non-monetary perquisites is also paid by employer. Sir, actually tax has to be paid by employee, but the tax also paid by whom? Employer. Then that is also a benefit now. See what happens where the tax on non-monetary perquisite paid. See, for employer, salary, for employee, salary is paid, perquisites paid, allowed only. Where 37, 36 different sections. Whereas if he paid tax on perquisite also, tax element also he is only paying, then it is not allowed as deduction. Not allowed as deduction. Whereas employee, salary and perquisite paid to employee na, it's an income to employee na, so taxable. Whereas the tax paid by employer on perquisites, since it is disallowed to employer, that means if it is disallowed to employer na, it is taxed in the hands of what? Employer only. So to employee it is exempted. Simple rule, sir. Salary 10 lakhs. Then allowance 2 lakhs. Then perquisite 3 lakhs. Then tax on non-monetary perquisite. Tax on non-monetary perquisite 30,000. All these are paid by employer on behalf of employee. So now treatment for employer, for employee. For employer, this is expense, and for employee, this is income. Allowed here income taxed, expense allowed under what? 37. Allowance is also an expense to employer. Employee, it is income taxable under that salary. Perquisite is also an expense to employer, allowed under 37. Whereas employee, it is income. Whereas tax paid on non-monetary perquisite, it is an expense only, but disallowed. Since it is disallowed, you cannot claim it as an expense for employer. That means this 30,000 extent is not reduced from employer profits. Okay, expense you can't claim. So it is included in profit only, taxed in whose capacity? Employer only. Taxed in employer capacity. So that's why employee, it is an income, but what? Exempted. It's what? Exempted. So here expense claim na, here income. Here expense disallowed na, so here income exempted. Got it? So under 40 subsection A, sir, we have the disallowances like what? First one, SSE making payment to non-resident. First one. Second one, SSE making payment to resident. Here also TDS didn't comply. Here also TDS didn't comply. Here 100% disallowed. Here 30% disallowed. 2 points. Then third point we discussed is about income tax and relevant interest, income tax, wealth tax, and income tax related penalties, cess, surcharge, all these are disallowed. Then fourth one, where state government undertaking paying any royalty, license fee, privilege fee to state government, disallowed. Fifth one, tax paid on non-monetary perquisites is disallowed. Tax paid on non-monetary perquisites is also disallowed. So this is about what? Section 40. Clear? Then 40A. So 40A is about payment to specified persons. Who are called specified persons? For an individual, spouse, brother and sister, lineal ascendants, lineal descendants. Okay. Then for HUF, it could be members and their relatives. For firm and LLP, partners and their relatives. Partners and their relatives. For company, directors and their relatives. For AOP, BOI, members and their relatives. So, if these are, and then any person who is having substantial interest. What is called substantial interest, sir? In company, na, if a person is having greater than or equal to 20% voting power at any time during the previous year, then they are having substantial interest. Others, na, when they are having 20% of profit sharing ratio, na, at any time during the previous year, not on the closing date, sir, at any time during the previous year, then they are called as what? Specified persons. Okay. Now, what is the concept? Simple concept, sir. SSE made a payment. SSE made a payment to whom? Specified person. Who is called specified person? Nothing but related person. Individual, na, spouse, lineal ascendants, lineal descendants, them. HUF na, members and their relatives. Firm na, partners and their relatives. Company na, directors and their relatives. AOP na, members and their relatives. And then ones who are having substantial interest. Substantial interest na greater than or equal to 20% voting power or profit sharing ratio. Okay. SSE made a payment with respect to what? An expense. With respect to an expense. And then this expense fair market value is 1 lakh. Whereas you paid to specified person 1,50,000. So you paid more amount na, just because he is your specified person. Instead of paying 1 lakh, you paid 1,50,000. Then this difference is what? Disallowed. Then this difference is what? Disallowed. So this disallowance is very simple, sir. When the payment is made to a specified person, it should be done at fair market value. If it is made in excess of fair market value, then the excess is what? Disallowed. Excess is disallowed. Then section 40A subsection 3, disallowance with respect to cash payment. Sir, this page, even if you are following BCCA book, this particular page is missing, sir. So please be cautious actually in the material. Here after 48 to 48.3 heading should be there. But straight away the example came, sir. The concept point is missing here in the material. So this is the concept, that one. Disallowance with respect to cash payment. See, SSE is having income from business or profession, is making payment or making aggregate of payments with respect to an expenditure to a person. Is making a payment with respect to an expenditure which exceeds rupees 10,000 per day in any mode other than this. Okay, so if you are making expense related payment, that also more than 10,000 with respect to a single person in a day, then you should have made it through account payee check, account payee draft, electronic clearing system, or any other prescribed mode. You should have made it through what? Account payee check, account payee draft, electronic clearing system, or any other prescribed mode. Any other prescribed mode na UPI, debit card, credit card, IMPS. So if through these modes, if the payment is made, then how much ever you paid is allowed, no problem. But other than these modes, now what? If you paid through plain check not covered, or crossed check not covered here, or you paid through cash, those three are not covered. So when you paid in these three modes in excess of 10,000, then that is what? Disallowed. That is disallowed. However, for transporters, the limit is not 10,000, 35,000. So when the payment is made to transporter up to 35,000 in a single day in cash, no problem. In excess, otherwise, other than transporters, now the limit is 10 only. For transporters, the limit is 35. I mean, when you are making the payment to a transporter, it's not like SSC is transporter. When the payment is made to a person who is into business of transporting goods, to them, if the payment is made in excess of 10,000 also, up to 35,000, it is allowed. Okay. What are the specified modes, sir? Account pay check, account pay draft, electronic clearing system, or any other mode prescribed. Okay, sir, let's say you paid in cash. Then what? 100% of such expense is disallowed. If at all you paid more than 10,000 in cash, in plain check, cross check, other than specified modes, then 100% of such expense is disallowed. Okay. Then one more point, sir. Previous year 23-24, there is like raw material purchase 20 lakhs. Raw material purchase 20 lakhs debited to P&L. And it was on accrual basis. I mean, you didn't made the payment in 23-24. Okay, in books it was there as like creditor. Okay, assuming you will pay it in the specified mode only, 23-24, it is what? Allowed, no problem, nothing we did, 23-24. Whereas in previous year 24-25, the 20 lakhs paid through cash. 20 lakhs paid through what? Cash. What happens? It is disallowed even in the year 24-25. For the 24-25 accounting profit, even though it is not debited to P&L, even though it's not debited to the P&L of 24-25, what you should do? Add back on. Sir, understand the point. Even though it is not debited, to which year P&L it is debited? 23-24. In 24-25 P&L, this 20 lakhs will not be there. Why? Based on accrual system, you debited in 23-24 only. In 23-24, it is allowed also. Why allowed? Because that time no payment made. On accrual system, you thought like if he pays also, he'll follow the rules and pay. So you didn't disallow in 23-24. But in 24-25, he paid it in cash. So 24-25, you disallow it. So not debited to P&L. Still disallow it and add back. Add back. Sir, why? Sir, if at all logically, you should open last year return and add it to the last year profit only. But that is a tough task, right? That's why they said like, no problem, even though not debited to current year P&L, add back to the current year also. Okay, see, deduction allowed in previous year on accrual basis. But when it is paid in subsequent years, it is paid in a mode other than specified, like account pay check, demand draft, and electronic clearing system. Disallowed, and add to previous year profit in which payment is made. Sir, understood now? See, rent amount 10 lakhs accrued not paid. Okay, sir, this is like here also, sir. This here previous year 23-24. Sir, this is like previous year 24-25. This is nothing. So what happened? Rent amount 10 lakhs in 23-24 not paid, but whereas in 24-25 it was paid in cash. Net profit before adjustment 40 lakhs. Deduction allowed on accrual basis, nothing, no adjustment you did in 23-24. But whereas in 24-25, since it is paid in cash, 100% is allowed. So 30-year profit, you will be adding back this 10 lakhs. Okay, so then the amount profit will become how much? 55 lakhs. Okay, then exceptions, sir. Here we'll talk about certain exceptions where Even though it is paid in any mode other than specified, it is allowed. Even though it is paid in a mode other than specified, it is allowed. What are those? Where the payment is made to regional rural banks, cooperative banks, agricultural trade societies, allowed. Where the payment is made to government, allowed. Where the payment is made through book adjustment, allowed. Where the payment is made for purpose of purchasing agri produce, dairy, poultry, or fish horticulture. Sir, you can't remember everything here. But first one is what? Where the payment is made to banks, cooperative societies related, and government. Okay, 1 point. And where the payment is made to farmer for purchasing agri produce, has animal dairy, or horticulture, apiculture, any farming related, excluded. I mean, even though you pay more than 10,000 in cash, no problem. Payment is for purchase of products manufacturing without aid of power. Without aid of power, na, these are called what? Handicraft goods. So you paid for purchase of handicraft goods, allowed. Where the payment is made in a village or town where no bank is sought. In that place, no bank is there. There you made payment, allowed. Where the payment is made, this is also important one, sir. You made for making payment of gratuity or any compensation to employee or regal heads. So you are making payment as a compensation or gratuity to the employee or legal heads, and the amount does not exceed 50,000, then also fine, it is what? Allowed, up to 50,000. Then where the employee is shifted to another place temporarily, and temporarily only, but for a period more than 50 days. So temporarily you have been shifted from Hyderabad to Bangalore. Now in Bangalore you don't have a bank account under phone pay, UPay, nothing is there. So since you don't have bank account and your salary has to be given to you now, so they given it to cash, no problem, allowed, temporary purpose only. Where the payment is made by authorized dealer or money changer for purchase of foreign currency in the normal course of business, or the where the payment is made by any person, sir. Okay, authorized dealer or money changer paid for purchase of currency and all, then allowed. That the payment is made by any person to his agent. I made payment to my agent. Why? Agent want to purchase agri produce or some things where the payment in cash is allowed. So that's why I'm giving cash to my agent. That is also allowed. So the exceptions, main exceptions are like paid to bank, RRBs, cooperative societies, government, allowed, even in excess of 10,000 also. Then for purchase of any agri produce, horticulture, then poultry, all these related, allowed. Third one, where it is paid to an employee or legal heirs of employee for payment of any compensation or gratuity up to 50,000, allowed. For purchase of handicraft goods, allowed. Where the payment is made in a place where there is no bank located, allowed. Next one, where the payment is made by way of salary when the employee is temporarily transferred to another place and he is working there for more than 15 days and he doesn't have a bank account there, allowed. Then where the payment is made by authorized dealer for purchase of foreign currency, or where the payment is made by any person to his agent who is required to make payment in cash for goods purchased on behalf, allowed. Then gratuity. Gratuity, if any provision is created, provision is disallowed, actual contributions or actual gratuity paid is only allowed. If you just create a provision for gratuity, disallowed. Either you should have actually contributed the amount to a separate fund, or else you have actually paid gratuity, then it is allowed, otherwise disallowed, gratuity. Then disallowance of employees contribution, employer contribution to welfare fund, employer contribution to welfare fund, sir. Employer making contributions to welfare fund. What is the welfare fund? Let me tell you. Employer contributed every year 50 lakhs to the housing welfare fund of employees. Housing welfare fund of employees, every year 50 lakhs. So like that, the whole fund consists of 10 crores. Now with this 10 crores, the housing is constructed to whom? Director. Okay, director are nothing but employer's brother only. Director 1, director 2. So only these people, nothing but these are relatives of the owners only. For them only the houses are being constructed, not to the actual employees. So what they are happening, sir? They are claiming benefit that they are using for business purpose, but actually the benefit of the fund is not going to employee. It is taken away by the owners only. So in that case, this is not a real contribution. So it will be what? Disallowed. Employer contribution to a welfare fund are disallowed as a deduction if there is no genuine benefit is flowing to employees. See, now under 40A, what are the deductions, disallowances, sir? First one, specified person. What we should take? Fair market value. If it is not fair market value, disallowed. Then specified mode payments. Payment in specified mode payment when in excess of 10,000. However, for transporters, now it is like what? 35,000 in case of transport. Then provision for gratuity, disallowed. Then any other contributions to welfare fund, contribution to welfare fund if the actual benefit is not flowing to employee. Okay, then we are moving on to the next disallowance, sir. 43B. We are moving on to the next disallowance, what? 43B. Deduction allowed here only on actual payment basis. Sir, all these expenses allowed may be debited to P&L, but still they are allowed as deduction only when the actual payment is made. Only when the actual payment is made. What are those? If any tax, duty, cess, fees is there. Tax. Sir, income tax na first itself disallowed. So it's not income tax, other tax like GST, custom duty, municipal tax. If they are debited to P&L, they are allowed as deduction only when they are paid. Paid by when? Not by 31st March. Sir, previous year ends on 31st March 2025. So by 31st March 2025, they didn't pay also, no problem. But by the time of filing return, so return has to be filed by when? Assuming audit case, 31st October 2025. So if it is not paid by 31st March, no problem. But at least they should have been paid by when? 31st October 2025. If at all they didn't made this expenses payment by 31st October 2025, assuming it's an audit case, then these expenses are disallowed. These payments are disallowed. What are those? Tax, duty, cess, fee. Then employer contribution to PF or other welfare schemes. Employer, sir, if you remember 36, we discussed about both employees contribution to PF fund and employers contribution to PF fund also. Employees contribution has to be deposited by within the PF act, whereas employer contribution within the due date of filing return of income. So employer contribution. Bonus and commission payable to employees also has to be paid by when? Bonus and commission also has to be paid within by when, sir? Due date of filing return of income. Then interest on loan payable to public financial institutions, banks, state financial corporations, NBFCs, cooperative banks. So any interest payable to PFIs, public financial institutions, state financial institutions, scheduled banks, NBFCs, cooperative banks. For them, the payment has to be made by due date of filing return of income. Otherwise, not allowed, disallowed only. Okay. Then leave salary. Leave salary na again. Sir, leave encashment will be there, right? You have some paid leaves. I mean, let's say in a year you have 10 casual leaves. I mean, whether you use or not, no benefit you will get. You have 20 paid leaves. That means if these 20 leaves you don't use, you will get extra compensation or salary for those leaves also. That amount, if it is paid by the due date, then the 20 days leave related amount paid is also allowed as deduction to the employer. If he didn't pay, then not allowed as deduction. So leave salary is allowed as deduction only when it is paid by the due date of filing return of income, or any sum payable to Indian Railways for use of railway assets. For using any of their assets, any amount is paid for railways, those amounts also has to be paid by on or before the due date of filing return of income. Then only they are allowed as deduction. So 43B, what are the points, sir? Tax, duty, cess fees for government related to tax, duty, cess fee, and any amount payable to railways for usage of their assets. 2 points, government. Employees related, PF and other welfare fund related contributions, bonus and commission, leave salary. These three, employer related. Then interest, either to banks, PFIs, sixth one. Seventh one, what is the other point is there, sir? There are only 6 points, right? Okay, 6 points we got. 2 related to government. What are those? Tax, duty, cess fees. And the next one is related to railways. 3 related to employees. Leave salary, bonus and commission, any contributions for the welfare fund. 6th one is interest. These 6 payments, if they are these 6 expenses related, if the payment is made by the due date of filing return of income, allowed. Otherwise, not allowed. So all these are the disallowances. Once again, I am discussing all the disallowances. 40 subsection A, 40A, 43B also. 40A. First, you are making payment to non-resident. TDS didn't deducted and that income is taxable. You didn't deducted TDS or deducted but not remitted. 100% of such expense is disallowed. You are making payment to resident. TDS not deducted. 30% of such expense is disallowed. Then income tax related interest, surcharges, all those are disallowed. Third one. Fourth one, any amount paid by state government undertakings in the name of royalty, privilege fee, commission to the state governments, that is also disallowed. Then any tax paid by employer on non-monetary perquisites provided to employee, disallowed. 5 there. Then 40 capital A. Any payment made to specified person with respect to an expense in excess of fair market value, that excess amount disallowed. Any payment made in any mode other than specified na account pay check, account pay draft, electronic clearing system. How much? More than 10,000 disallowed. However, for transporters 35,000. Next one, provision for gratuity disallowed. Next one, any contributions made to welfare funds and the actual benefit is not flowing to employee, disallowed. Then 43B, 6 payments, tax, duty, cess fee, okay, and then railways, any payments made to railways. 2, employer related, bonus commission, the leave salary, then contribution to PF and welfare funds, then interest. The 6 payments, if they are paid by due date, allowed, otherwise not allowed. Sir, everybody got it? Understand, sir, these disallowances? Then next one is related to payment to MSMEs, micro and small enterprises. With respect to micro and small enterprises, the payment shall be made within the time limits of section 15 of MSME Act. This is an extra point, sir, important also. Where the payment is being made to micro and small enterprises. This is also under 43B only. Okay. Sir, micro and small enterprises, sir, when they are dealing with larger companies or big companies, bigger persons, see, they cannot demand their payment. So the big companies will take it as an advantage and they'll not be making the payments to the small people, okay, small business people on a timely manner. See, if they didn't receive the payments on time, their working capital will affected, their whole business will get affected. For a bigger company now, it's not an issue. But for small companies and all, Okay, when they didn't receive payments on time, they need to go for loans, they need to pay heavy interest and all that is a problem for them. That's why government, to protect small and medium sized business people, what they said, if any payment, you claimed any expense and the payment is related to MSMEs, and if the payment is not made within, if payment is not made within 15 days from expense allowed, sir, we should check whether agreement is there or no agreement. If agreement, no agreement, within 45, within 15 days, the payment has to be made. Otherwise, dissolve. If there is an agreement between MSME and the company, then within 45 days from acceptance, the payment has to be made. Otherwise, dissolve. Otherwise, such expense is also dissolve. Understand, sir? No agreement na 15 days only time limit. Agreement na 45 days is the time limit. Then, sir, let's say you have to pay to the bank 50 lakhs as interest. You have to pay to the bank how much, sir? 50 lakh as interest. But you cannot pay 50 lakhs. You don't have money. So you went to the bank and asked like, this interest for 50 lakhs also you ask the bank to reconvert it as loan. So even this 50 lakhs interest is there, na, this also converted into loan. This 50 lakhs interest also converted to what? Loan. 50 lakhs interest is also what happened? Converted to loan. When it is converted to loan, this 50 lakhs also, is it amounts to payment? Is it amounts to payment? No. It's not amounts to payment. Where any interest, instead of actual payment, if it is restructured and again converted it as a fresh loan, that wouldn't be considered either loan or it would be considered as like debentures. That wouldn't be considered as loan payment. That wouldn't be considered as like loan repayment. That won't be considered as what? Loan repayment. Okay. It does not amount to actual payment. So section 43B attracts. But sir, once it is converted into loan, 50 lakhs, out of this 50 lakhs, some 10 lakhs has been paid. Like loan also you'll be paying like installments wise, na? Then, sir, even though on their records they converted interest part as a fresh loan, for our sense, we don't treat it as a loan. We'll still see it as a interest only. Paid or not paid? Not paid, so not allowed. However, they repaid 10 lakhs of it as loan. Okay. For their sense, it is loan, but in our sense, it is interest only. 10 lakhs paid na. So to the extent of 10 lakhs, it is allowed only. Balance 40 lakhs is not allowed. Understand, sir? And for these payments, sir, which were disallowed under 43B, tax, duty, cess, bonus, all these payments, they will be disallowed if they are not paid within the due date. And bad debts also. Okay, what happens, sir? They'll be disallowed if they were not paid by the due date. Whereas MSME na within 15 days or 45 days. Okay, but subsequently if they are paid, then they are again allowed as deduction in the year of payment. So for this year, you will check whether paid within the specified time limit. Yes, allowed, no problem. Not paid, disallowed. That means add back. Okay. Subsequent years they have paid. Then again subsequent years you can allow as deduction. I mean you can subtract them. You can subtract them. See, example C. Interest payable to SBI 500 lakhs. But what you did? Restructured this loan repayable into 60 installments. I mean 500 lakhs interest you converted into loan. So just the conversion of interest into loan is not actual payment, so can't be allowed as deduction. I mean it won't be treated as interest paid. But once it is converted into loan and repayable in 60 installments, out of 60 installments, 7 installments is already paid in 24-25. That means how much paid? 500 lakhs divided by 60 into 7 are 58.33 paid. Okay, so that 58.33 is only allowed as deduction because that extent of interest only they paid. Sir, everyone, Just try to recall whether you can remember all the disallowances or not. Try, sir. Okay, try. Close your eyes and try. Don't sleep. Close your eyes and try. What? Whether you can recall all the disallowances or not. First one. 40 subsection A related. TDS not deducted for non-resident. How much disallowed? 100%. TDS non-deducted or non-remitted with respect to resident. 30% disallowed. Then income tax, wealth tax, cess, surcharge, fees, interest on income tax, interest on TDS. All these are disallowed there. The next point, what we discussed, sir, tax paid on non-monetary perquisites, disallowed. State government undertaking paying royalty, privilege fee, license fee to the state government, disallowed. Payments made to specified person in excess of fair market value, disallowed. Payment made in cash in excess of 10,000, disallowed. Provision for gratuity, disallowed. Then amount contributed to any welfare fund which actually not providing benefit to the employees, disallowed. 43B, all these amounts disallowed. Clear? Then depreciation. Sir, any year if you don't want to charge depreciation, you don't have that option. Depreciation is mandatory. You should charge depreciation mandatory. Then, what is the method of depreciation? Sir, since we completed disallowances except 40B, so now again we are back to 32, 33, 34, 35. Okay? Depreciation is mandatory. What is the method of depreciation, sir? The method of depreciation, sir, for power sector undertakings engaged in generation, distribution and transmission, power sector undertakings, they have two methods, WDV, correct it, sir, and SLM method. For others, only one method is possible, WDV. Okay, then, which system has to be calculated, sir? If they followed WDV, block system has to be followed for computing depreciation. SLM na asset wise, block system na, sorry, WDV method na, then they should follow block system. What is block? A block consists of tangible assets, even intangible assets also. Tangible block, intangibles. But depreciation has to be computed only on the assets which are forming part of closing block. I mean, to calculate depreciation, sir, that asset should be actually continuing. When the asset is sold in the middle, on that again will not compute depreciation. Then, when we calculate gain or loss on depreciable assets, the gain or loss on sale of depreciable assets, if you are following WDV method, has to be calculated as per 50A. What does 50A says? It has to be calculated only when the block ceases to exist. Only when the block ceases to exist, only that time we calculate gain or loss arising on sale of depreciable assets under WDV method. Okay, when the block ceases to exist, let's say, sir, in the block there are three assets, L, M, N, and the block value is 30 lakhs. Let's say all the assets in the block are sold. All the assets, I mean L, M, N, all the three are sold. They may be sold for 20 lakhs, then 10 lakhs loss. They may be sold for 40 lakhs, then 10 lakhs gain. When all the assets in the block are sold, then block ceases to exist. Then again, there are three assets in the block, 30 lakhs. Now, not all the assets are sold. A single asset or multiple assets have been transferred and the sale value exceeds total block value. and the sale value exceeds total black value. What is the sale value? Let's say L alone is sold for 40 lakhs. L alone is sold for 40 lakhs. If you subtract 40 lakhs, the individual asset sale itself exceeding total block value. In this case also, block ceases to exist. There is a 10 lakhs gain because you didn't sold one asset or multiple assets sold. Then the sale proceeds of them exceeds the total block value. In that case also, block ceases to exist. So the gain arising on depreciable assets has to be treated always as what? Short-term capital gain only. Has to be treated always as what? Short-term capital gain. And it is taxable under which head, sir? Capital gains head. Then, format for computation of depreciation. Next, first you should take what, sir? Opening block value. Then additions, you should take separately, which were used for more than or equal to 180 days and less than 180 days. Why? Opening block na no problem. Additions, with respect to additions, if they are used for more than or equal to 180 days, then full depreciation. So actually here one page is missing. Let me check. Sir, you have this point in material, right? See, you will find out the rates of depreciations also there, sir. What are the rates of depreciation, sir? Building 5%, residential purpose, others not 10%, whereas wooden structures and all 40%. Sorry. Furniture and fittings, the depreciation rate is 10%. Plant and machinery, the depreciation rate is like 15%. Computers 40. Motor cars, if they are used for hire 30, other than hire 15%. Medical equipment 40, ships 20, intangible assets 25%, mobiles na 15%. Then, where in the current year any additions are made and if they are used for more than or equal to 180 days, then full depreciation can be claimed. If they are used for less than 180 days, then the depreciation is restricted to 15% of actual. When they are used for more than or equal to 180 days, then the depreciation is like how much their actual rate. If they are used for less than 180 days, then the depreciation is restricted to not 15, sir. This is depreciation is restricted to what? 50%, half of actual, 50% of actual. Depreciation is restricted to 50, half. Okay. So see, when the assets are used for more than or equal to 180 days, full depreciation. When they are used for less than 180 days, then depreciation is restricted to what? 50% of actual. Restricted to 50% of actual. Then assets transferred or disposed during the previous year has to be subtracted. Closing WDV. Depreciation, you should calculate separately on opening block plus additions more than 180 days and on additions which were used for less than 180 days, then you will get closing WDV. Then you will get what? Closing WDV. Where any asset sold transferred in the previous year. So let me give you an example, sir. opening block L value 50 lakhs plus addition made on 1st June 2024 10 lakhs plus addition made on 1st February 2025 another 15 lakhs. Now there are deletions, assets sold related to opening block for 65 lakhs. Now how much is the closing WDV, sir? Closing WDV 75. Out of 75, if you subtract 65, 10 lakhs is the closing WDV. Block doesn't cease to exist. Block is still continuing only because block has a value of 10 lakhs. The point is, now what this 10 lakhs is related to? This 10 lakhs we should consider as related to opening additions more than 180 days or less than 180 days. This 10 lakhs, which related we should think? Sir, this 65 you should adjust on FIFO. First adjust with opening. Okay, here adjusted. Then you adjust with 10. And then again here you adjust 5. How much is there, sir? Balance 10 lakhs. How much is there? Balance 10. So this 10 lakhs will consider as like what? Related to the additions which were made on 1st February. So can we claim full depreciation on it? No. Assuming plant and machinery, sir, it is. Plant and machinery, now what is the depreciation rate? 15%. So what will take the depreciation? Depreciation equals to 10 lakhs into 15% into 1 by 2. Why 1 by 2? Since used for less than 180 days, restricted to half. So you will claim only 75,000. Okay, where any asset is sold or transferred, you will be adjusting them in what basis? FIFO basis. Then increased rate of depreciation, where SSE is engaged in manufacturing any article or thing by using technology know-how developed in a lab owned by government or PSU. Okay, sir, you are manufacturing. But what you are manufacturing? You are manufacturing something by using the technology or know-how developed in the Indian lab, Indian PSU or Indian university. So to encourage the tech companies, the startup companies, innovative companies from India, if any company started manufacturing by using the technology developed from India, then instead of 15%, they can claim 40% of depreciation on their machinery and plants installed. Okay, then additional depreciation. Sir, additional depreciation is what? Sir, manufacturing sector will generate more employment. That's why government wants to encourage more manufacturing sector. And second one, manufacturing sector has more wear and tear. That's why for the manufacturing sector, there is additional depreciation. Understand, sir? Only for manufacturing sectors and entities which are engaged in generation, distribution, transmission of electricity, only for them additional depreciation is allowed. See, eligible SSE. SSE is engaged in the business of manufacturing or production of any article or thing, or into generation, distribution, transmission of electricity. Then only once additional depreciation will not be given every time. Let's say you have a asset addition current year, then on the addition you can claim additional depreciation and even normal depreciation also. Okay, from next year onwards you will not get additional depreciation. From next year onwards you will get only normal depreciation. Only for the first year you will get additional depreciation. How much? 20%. Sir, irrespective of the asset, it may belongs to 10% block, 15% block, 40% block, but additional depreciation remains to be constant always 20%. Okay, and it should be available only for the machines which are installed on or after 31st March 2020, 31st March 2005. Okay, sir. Current year it is purchased, sir. Let's say it was purchased on 1st June 2024. used for greater than or equal to 180 days. So no problem. You can claim 20%. Whereas it is purchased on 1st February 2025. That means less than 180 days. In such case, additional depreciation is also restricted to 50% of actual. 50% of actual. Let's say 10 lakhs. 10 lakhs into 20% not 2 lakhs. But since the asset is used for less than 180 days, only 50%, that means 1 lakh is allowed in the first year, whereas the balance 1 lakh can be availed in the succeeding previous year, equal to 180 days also. Then the following are not eligible for additional depreciation. What? When the asset is a used asset, that usage may be in India or outside India. If it is already used asset, second-hand assets, then additional depreciation is not allowed. Then plant and machinery installed in office premises, residential accommodation, or in guest houses. Plant and machinery is installed in office premises, residential premises, or in guest houses. Then also additional depreciation is not available. If they are like road transport vehicles, additional depreciation not allowed. Or any plant and machinery on which actual cost is allowed as deduction. Any plant and machinery on which actual cost is allowed as deduction. In all these cases, additional depreciation is not available. Used assets, asset installed in office premises, residential premises, guest houses, road transport vehicles, and assets on which 100% allowed as deduction. Nothing but under section 35 AD, 100% of their expense is allowed. Then they are not allowable for additional depreciation. Sir, clearer? Additional depreciation on the new assets purchased, 20% can be available, but it is not available on used assets, plant and machineries installed in office premises or residential accommodations, road transport vehicles, any plant and machinery on which actual cost is allowed as deduction. On them you can't avail additional depreciation. Sir, understand? Additional depreciation, if you are following old regime, for every SSE it is allowed. If you are following new regime, either for individual HF, AOP, BOI, companies, cooperative societies, it is not allowed in new regime. It is allowed only in old regime. Got it, sir? Okay. Then apportionment of depreciation when there is a succession. Apportionment of depreciation when there is a succession. Succession, there may be an amalgamation, demerger, or conversion of sole proprietorship to company, firm to company, company to LLP. All these are treated as what? Succession. All these are treated as what? Succession. When one company succeeded to another, amalgamation, demerger, sole proprietorship to company, firm to company, company to LLP. So this concept is actually is linked to business restructuring also. Okay, where there is a succession, amalgamation, demerger, conversion. Okay, in that case, for that year in which succession is happened, how the depreciation has to be charged to the predecessor and successor. How the depreciation has to be charged to the predecessor and successor. Predecessor, the one which is amalgamating. Successor, the amalgamated company. How the depreciation has to be charged? Simple, sir. For the opening block assets on the additions that were made before till succession, with respect to opening block and the additions that were made before the date of succession. Opening block and the additions that were made before the date of succession, the depreciation has to be calculated normally and should be apportioned between the predecessor and successor in the ratio of number of days. So opening block and the additions made before succession and the additions made before succession. How the depreciation has to be calculated, sir? Depreciation has to be apportioned between the predecessor and the successor in the ratio in the ratio of number of days used. In the ratio of number of days used. You will understand with an example, sir. Additions made after succession. Sir, after succession, if any assets purchased, they belongs to successor only. Old depreciation due to successor. But the assets which were there before succession, opening and additions, first calculate depreciation normal. And then apportionate the depreciation between predecessor and successor in the ratio of number of days used. See. There is a company, Sugar Private Limited, which is amalgamated into Milk Private Limited on 1st June 2025. The block of assets of Sugar Private Limited on the date of amalgamation. Sugar amalgamated to milk. The block of assets of Sugar Private Limited on the date of amalgamation. So opening 20 lakhs. What is the depreciation on 20 lakhs? 20 lakhs into 15%. How much? 3 lakhs. Okay. 8 lakhs acquired on 1st August. More than 180 days. So 8 lakhs into 15%. How much, sir? 8 lakhs into 15% now? 1.2 lakhs. Then 5 lakhs. Used for how many days, sir? Less than 180 because it is acquired on 1st December only. So 5 lakhs into 7.5%. Why 7.5? Half. So it would be restricted to how much, sir? 5 lakhs into 7.5% now. 37,500. Right? 3 lakhs, 1 lakh 20 lakhs, 37,500. Now, these depreciations we should apportionate between predecessor. Predecessor na Sugar Private Limited. Successor na Milk Private Limited. In what basis? In the ratio of number of days used. We should apportionate it based on the ratio of number of days used. Okay, see, sir, when amalgamation is happened? 1st January. Opening block is there throughout the year, right? So, out of 365 days, you should check how many days is by predecessor, how many days is by successor. Sir, successor from 1st January, Jan, Feb, March. March 31, Jan 31, 62 and Feb 28. 90 days by successor. Predecessor balance 275 days. Now this 3 lakhs depreciation opening related, you should apportionate between the predecessor and successor in the ratio of 275 and 90. So 3 lakhs into 275 by 365 and 3 lakhs into 90 by 365. See. Then for additions, how much, sir? 1.2 lakhs. Again, this 1.2 lakhs also you should apportionate. What is the ratio? Number of days used. Okay. Sir, how many days, sir, it was used? See, it was purchased on 1st August only, na? If it is purchased on 1st August means it was not used across the year. How many days? First subtract. April, May, June. April, May, June, na? How many days, sir? 91 days. So 365 minus 91, na? 274 days it was totally used. 274. Okay, not 273 also, sir. So what? We should subtract what? April, May, June, 91. 365 minus 91, it would be how many days, sir? $274 days. 274, sir. Okay, so 274, sir. Here we took it like 153. It's long. I'm doing wrong. Sorry, sir. No. April, May, June, July. 4 months we should subtract. Okay. So 4 months now, how many days, sir? April, May, June, July. Total 122 days. 122 days. So 365 minus 122 days, if you subtract, it will be 243 days. Now this 243 days you should check. How many by predecessor, how many by successor? Successor 90 days, sir. Balance predecessor. 243 minus 90 na 153 is used by predecessor. Now this 1.2 lakhs, you should apportionate between predecessor and successor in the ratio of number of days used. 8 into 15% into 153 by 243, 8 into 15 into 90 by 243. Then the balance 37,500 also same. When this is purchased, sir, 1st December. So how many months used? December, January, February, March. Okay, so 121 days this is used. Out of this 121 days, successor 90 days, predecessor 31 days. Okay, so the last one, see 31 days, 90 days. In that ratio, if you apportionate depreciation, then you will get here. Okay, the depreciation has to be apportioned between the predecessor and successor in the ratio of number of days used. Sir, completed na everyone? Understood na? Then terminal depreciations are already we discussed this concept where at the beginning 41 time itself we have discussed this terminal depreciation concept. What? For power concerns, whichever are following SLM basis, let's say they purchased for 10 lakhs, WDV 6 lakhs, and then they sold for 5 lakhs. There is difference of 1 lakh now loss that we charge as terminal depreciation. The difference between WDV and selling price 5 lakhs. Difference 1 lakh is there now, we'll charge as what? Terminal depreciation. Second case, 10 lakhs cost, WDV 6 lakhs, sold for 9. WDV 6 sold for 9. 3 lakhs gain is there. This gain will treat it as deemed income. Then third case, cost 10 lakhs, WDV 6, but they sold for 10, 12 lakhs. That means they sold for more than cost. So up to cost, treated as business income. Beyond cost, if any gain is there, treated as short-term capital gain. So 2 lakhs short-term capital gain, and then 4 lakhs will be treated as what? Deemed income. Then sir, 43, not much important provision. So will be overall going actual cost. Sir, where there is a cost of asset, what amount we should take it as the cost of asset to depreciate? Sir, that is a normal thing. You might have learned this in CFR also or anywhere. What amounts you should add to the asset to capitalize? Sir, for the cost of the asset, you will add taxes and duties if they are not allowed as ITC. If ITC is allowed, then GST element you will not add. ITC is not allowed, then you will add it to the cost. Loading charges, transport charges, unloading, installation, interest on borrowed capital up to put to use. Up to put to use, you should what? Add. If any subsidy is given, subtract. Then you get what? Cost of asset. If any trade discount given, that also has to be subtracted. Then for purchase of an asset, if you paid more than 10,000 in a single day, in any mode other than account pay check, account pay draft or electronic clearing system, you paid more than 10,000 through other than the specified modes, then that amount you should not capitalize and you cannot avail depreciation. Then asset acquired for scientific research and specified business and 100% of cost is allowed as deduction and their cost will be nil. When the stock in trade is converted into capital asset, sir, in first chapter only we discussed. I mean, in not first chapter, in this chapter only, 28 we discussed what? This fellow is having a stock in trade. This particular flat is his stock in trade. What he did, he converted into capital asset. I mean, stock in trade he converted into office. What we discussed there, when stock in trade is converted into capital asset, we'll take fair market value as the deemed sale value and we'll add to the income. Deemed sale value. Okay, done. Now, we are talking about office building cost, what we should take. Sir, when you treating it as sold for fair market value, sir, two different transactions, sir. You sold your building and you purchased building for office use. When you sold, fair market value is the deemed sale value. When you purchase office building, what will be the cost you will take? Fair market value only. So, this office building, you will be considered as purchased for fair market value as on the date of conversion. On that, you will avail depreciation. When you got any asset by way of gift, will, then actual cost to the previous owner. Then you purchased and used assets. Used asset. Already used the second hand asset you purchased. Normally, sir, the amount you paid. However, if there is some kind of, it's not a genuine transaction, some kind of malified intention or avoidance is there, then in such case, the price fixed by assessing officer, you should take. Price fixed by assessing officer. Repurchase of assets sold. Sir, you only sold asset. A sold to B, B sold to C, C sold to D. Sir, when A is sold, in his book written down value is 10 lakhs. He sold to B, B sold to C, C sold to D. D again selling to A at what price, sir? 70 lakhs. In your books, the price 10 lakhs. You sold to someone, and again you only purchasing back for 70 lakhs. How it is possible? Okay. What is the intention there? To claim excess depreciation. Not allowed. How much will be taken, sir? Actual cost minus depreciation, as if the asset is used by you only. Sir, when you are selling 10 lakhs, if at all the asset is not sold, you only using, how much ever depreciation you charge. That value or repurchase price 70, whichever is lower will be taken as the actual cost. Then, building. You initially, from the beginning, you are using for personal purpose. But now, you converted it for business purpose. Now you started using it for what? Business purpose. Building brought into business. Then in such case, actual purchase price, from there you should subtract depreciation. As if it is used for business from the beginning, you calculate the return on value. Such return on value will take it as what? The cost. Sir, this is only for buildings only. If at all car, initially used for personal purpose, now converted for business purpose, what amount you will take for depreciation? Cost only. You will not take written down value. You will take cost only. Okay, only for building, you will again calculate written down value as if it is used for business purpose only from the beginning. And on such written down value, you will recognize as the cost. Sir, in case of amalgamation or demerger, the successor cost only will become the cost to predecessor. If any asset is transferred from, sir, this is also important. If any asset is transferred from holding to subsidiary, if subsidiary is wholly owned, 100% owned, and recipient is an Indian company, subsidiary is like wholly owned, recipient is an Indian company, and in that case, what is the WDV to the recipient company, sir? Whatever is the cost in predecessor, sir, holding transfer to subsidiary. If it is like 100% subsidiary is an Indian company, then whatever is the WDV to holding, that only will be the WDV to subsidiary also. Okay. Sir, where asset is acquired, where part of cost is met by someone else, they paid like subsidy and all. Okay, then in that case, actual cost minus that part you should subtract. Okay, 10th point not relevant also. Unabsorbed depreciation. Sir, understand? Unabsorbed depreciation. What is the concept of unabsorbed depreciation, sir? You, before charging depreciation, you should calculate profit here, sir. Before charging depreciation, you should calculate profit. If at all the profit is not enough to charge depreciation, then you could charge depreciation only to the extent that profit can be, that depreciation that could be absorbed by the profit. Let's say, sir, profit before depreciation is how much? 30 lakhs. whereas depreciation is 50. If you charge whole depreciation, then the profit 30 will become negative 20 lakhs. In that case, so you will charge depreciation only to the extent of 30, so that profit became 0. But still, you have depreciation of 20 lakhs, which is not at all allowed or charged. So such depreciation which cannot be absorbed by profit, is called as unabsorbed depreciation. Unabsorbed depreciation. Case 2. Sir, before charging itself, depreciation itself is having loss. Before charging depreciation itself is having 20 lakhs loss. Now you have depreciation 50. Can you charge it? No. Can you charge it? No. So the whole 50 lakhs will be treated as what? Unabsorbed depreciation only. Unabsorbed depreciation only. Same way, there will be unabsorbed capital expenditure on scientific research. I mean, before calculating profit, first calculate profit before charging these 3 items. Depreciation, capital expenditure on scientific research, capital expenditure on promotion of family planning. Before charging these 3 expenses, you find out profit. Then you charge one by one. First depreciation, then scientific research, then family planning. If at all the profits are adequate, then charge them. If profit is not adequate and this can't be charged fully, the balance left is there, right? That is called unabsorbed depreciation. Okay, or unabsorbed capital expenditure on scientific research, unabsorbed capital expenditure on promotion of family planning. These unabsorbed depreciation, capital expenditure on scientific research, capital expenditure on promotion of family planning, all these can be carried forwarded for any number of years. You can carry forward them for any number of years. One more point, sir. Unabsorbed expenditure, if carry forwarded, then let's say previous year 23-24 unabsorbed expenditure like depreciation carry forwarded to 24-25, then this would be treated as what? Current year depreciation only. Unabsorbed depreciation once carried forwarded, we don't treat like a carry forwarded one, we'll treat it as like a current year depreciation only. So what's the difference? For understand, business loss 20 lakhs, previous year 23-24, and then unabsorbed depreciation 50 lakhs. Okay, 23-24. Sir, this is the year of loss. In this year, set off. Okay, I am talking about set off. Both business loss and unabsorbed depreciation are eligible for intra-head set off and even inter-head. Intra-head within the PGBP head, if they have any other business, they can set off. Even with other heads also they can set off. House property, IFOS also they can set off. Previous year 24-25, they have previous year 24-25. Sir, assuming there is no other income in the 23-24. Yes, you can do intra as well as interhead. Interhead with what heads you can do, sir? With house property, capital gains, IFOS. PGBP intra-head only. Salaries you can't adjust. Okay, assume but 23-24 no other incomes. No other incomes. Then previous year 24-25. Business profit 10 lakhs. Business profit 10 lakhs. House property income also there 10 lakhs. Capital gain is also there 10 lakhs. Now 24-25, sir, you brought forward this two na. Business loss 20 lakhs and unabsorbed depreciation 50 lakhs. Okay. Business loss, you will adjust with this profit to an extent of 10 lakhs. Okay. How much still the loss is there? 10 lakhs. That can you adjust with house property and capital gain? No. The carried forwarded loss is eligible only for intra adjustment. The carried forwarded loss is eligible only for what? Intra adjustment, not eligible for inter adjustment. So the balance 10 lakhs loss, you can't adjust with house property and capital gain. Okay. Then what about unabsorbed depreciation 50 lakhs? Sir, unabsorbed depreciation is not a carried forwarded one. Unabsorbed depreciation has to be treated as what? Current year depreciation. Current year one item. So since if it is treated as a current year item, for it, again, intra-head adjustment is available, inter-head adjustment is also available. Since intra business profit completely adjusted, you could adjust the unabsorbed depreciation with house property and capital gain. So here 10 lakhs minus, here 10 lakhs minus, still will become 0. Still you have business loss of how much? 10 lakhs and unabsorbed depreciation of 30 lakhs. This again will be carried forward. Sir, got this point, sir, everybody? Once the business loss is brought forwarded loss. Once it is brought forwarded, there won't be interhead adjustment. Only intrahead adjustment is possible. But that restriction is not available to unabsorbed depreciation. Why? Unabsorbed depreciation will always be treated as current year expense. So it is eligible for both intra and interhead adjustments also. Unabsorbed depreciation can be carried forwarded for any number of years. Sir, not only unabsorbed depreciation, even unabsorbed scientific research expenditure, even it is like capital expenditure on family planning, they can be carried forwarded for any number of years. Can be set off with any head of income except salary, casual income and undisclosed income. Except salary, casual income and undisclosed income, rest all you can adjust. Then even if it is brought forwarded from past years, unabsorbed depreciation, even if brought forwarded, it will become what? Current year expense. Since it became current year expense, it is eligible to set off with other heads except salary, casual income, and disclosed income. ABA. 33 AB and 33 ABA. So what is the point, sir? Tea, coffee, rubber, development accounts or site restoration fund. Okay, so where any amount is 33 AB is related to tea, coffee, rubber, development accounts. 33 ABA, when these oil and gas companies, when they extract oil and gas, post their extraction and all, they want to restore the place normally. They wanted to restore the place normally. So that is called what? Site restoration. Okay, so under 33 AB, if they have any tea, coffee, rubber development accounts, then the deduction is available. How much, sir? Actual or amount deposited in special account, actual amount deposited in special account, or 40% of profits from such business, whichever is lower. Profits of such business. Whereas for site restoration, actual amount contributed to the special account or 20% of profits from such business, whichever is lower, will be given as deduction. But to get this deduction, 44 AB tax audit is mandatory. Amount withdrawn from special account. What are the amount withdrawn from special account, sir? So here, when contributing or transferring to special account, you are getting deduction now. So what's the next point they are saying? Like amount, if it is being withdrawn from special account, if it is utilized, withdrawn for the same purpose, not utilized, then treat it as deemed profit. If it utilized for the specified purpose only, then fine, no problem. If it is used for any other business purpose, then such expense is what? Disallowed. If it is used for purchase of asset or machine meant for office use, then amount utilized is taxable as profit. Nothing but, sir, if any amount contributed na, actual or 40% of profit, actual or 20% of profit allowed. And they should be used only for specified purpose. Then expenditure on scientific research. Sir, with respect to scientific research, two parts are there. One, you spending on your own to carry out scientific research. Second one, you are contributing to someone else to carry out scientific research. First one, you are doing on your own to carry out scientific research. You are spending on your own. Okay. Second one, you don't do any scientific research. Someone else does the scientific research. For that person, you are contributing. You are contributing some amount. See, expenditure incurred on in-house research. SSC is a company, business, biotechnology, or manufacturing any article thing, either revenue expenditure or capital expenditure. Whereas capital expenditure other than land and building, 100% is allowed in the year of expenditure. Okay. Then second one, sir, same expenditure incurred in-house only for your business only. Any person, okay, expenditure incurred by any person for carrying out scientific business related to business, revenue expenditure, capital expenditure. Here capital expenditure excludes land. Sir, if you see, here company alone covered. Here any person na, here also company included na. Okay. Here also any business, but should be related to SSC's business, that research. Here SSC business is biotechnology or manufacturing. Fine. Revenue expenditure, capital expenditure. Here capital expenditure, land and building excluded. Here only land. So which is better, sir? This one only better, na, even for companies also. Sir, capital expenditure, if they want to claim deduction, here land and building they can't avail. Here building cost also they can avail. Which is better? The second one only better. Even companies also can come here. Sir, if second one only better, now what's the purpose of first? Sir, previously, instead of 100%, there used to be 150, 200 percentages also. But now those percentages are not there. That's why. Okay. So here expenditure, capital and revenue incurred within 3 years prior to commencement of business is allowed in the year of commencement. So incurred after commencement of business, even incurred before commencement of business is also allowed as deduction in the year of commencement of business. Allowed as deduction when? In the year of commencement of business. But let's say you have profit only 40 lakhs, but this capital expenditure is 50. So if you charge 50, okay, you have only profit to an extent of how much, sir? 40. If you want to charge 50 lakhs, profit is not enough. So only 40 lakhs will charge, the balance 10 lakhs you will keep it as unabsorbed capital expenditure on scientific research. So unabsorbed capital expenditure on scientific research can be carried forwarded for indefinite period. Can be carried forwarded for how long? Indefinite period. Then if at all you are making contributions, if you are making contributions or payments, where the contributions are made by research association, university, college or other institutes for which are engaged in scientific research, social statistical research, then 100% is allowed. Whether you contributed for an university, college, institute carrying scientific research or carrying social or statistical research, for anything you contributed, 100% allowed. Then you contributed to a company which is registered in India and its object is research and development, then also 100% is allowed. Then if you contributed to a national laboratory, IIT, for carrying out notified research, then also 100% is allowed. Then also what? 100% is allowed. 100% is allowed. See, you being an SSC, one thing you can do is like contribution. I mean something like you are doing a donation to someone who is carrying out scientific research. Second one is like in-house. So you only carrying out scientific research. In-house now there will be two types, capex, revenue expenditure. Both allowed up to 100%. Capex excludes what? Land. Even incurred prior to commencement of business, after commencement of business also allowed. Contributions made like for scientific research or statistical research or to a company or to a IIT or national laboratory. In all these three cases, 100% allowed. Now, under old regime only, this is allowed. New regime, if you made any contributions or donations, those are not allowed. If you are following new regime, then the contributions you made for scientific research, statistical research, and the contributions or donations made to companies or to IITs and all, not allowed as deduction. If SSC made any in-house research expenditure, that is available under both old regime also available, even under new regime also it is available, both old and new. Whereas contributions and donations made are not available in the new regime. Okay, see, in-house research expenditure allowed, both the regimes, whereas contributions not allowed, not allowed. So this is 115 BS in a individual HUF AOP BY. BA and BAB companies, BAD and BAE for cooperative societies. Sir, if any asset on which this deduction is allowed, okay, and subsequently it is sold to the extent of deduction already availed, taxable under PGBP, let's say 10 crores, okay, and 10 crores allowed as deduction under PGBP, you sold for 12 crores, then to the extent of 10 crores taxable under PGBP, balance taxable under that capital gain. See, plant and machinery, sir, they purchased for 10 lakhs and availed deduction also 10 lakhs, WDV nil. In 24-25 they sold for how much? 15 lakhs. Sale proceeds 15 lakhs. So then up to 10 lakhs, because the cost is 10 lakh PGBP, balance you should treat it as what? Taxable under that short term capital gain. Then 10 lakhs, 10 lakhs. Whereas the sale proceeds is only 9 lakhs, then entire 9 lakhs you should treat it as what? Business income. Then 35A, so not a much great section, it is like simple one. Telecom company has taken right to use of spectrum or telecom license, 2G, 3G, 4G spectrum. That spectrum license has been taken by a telecom company, and that spectrum fee, can it be availed as deduction in a single year? No. If it is before commencement of business, and from the year of commencement till the validity, till the date of expiry, you could avail it proportionately. You could avail it what? Proportionately. Okay. See, whereas the spectrum is sold, where the spectrum is sold, sir, same as like terminal depreciation. Sir, you purchased the spectrum for 50,000 crores. Then what you do every year, and it is available for 10 years. So every year what you will do, 50,000, every year 5,000 crores, 5,000 crores you will be allowed as deduction. So there will be a WDV value for it now. Let's say after 4 years, the WDV value is how much? 30,000 crores. Now this license is sold to someone else. Then how much is the gain? To the extent of amount already allowed under PGBP. I mean, simple, sir. When it is sold up to the amount of cost, that difference taxable under that PGBP. Balance taxable under that capital gain. Same as like terminal depreciation point only. So not explaining much more deeper. 35 AD. Sir, 35 AD, this deduction is available only in old regime. So as of now, sir, additional depreciation, contributions made with respect to scientific research, and then 35 AD, these are available only in old regime. New regime, these are not allowed. See, 35 AD, deduction on capital expenditure of specified business. What is the point, sir? 100% of capital expenditure is allowed as deduction. 100% of capital expenditure is what? Allowed as deduction. See, you should remember cost 50, WDV 30, sale price 34. Then sale price didn't exceeded cost na, so the difference 4 is business income. Okay, then if sale price equals to 28, loss 2 lakhs is what business loss. If selling price is 60, then difference between 50 and 30, 20 is like business income. Above 50, 10 lakhs is there na, capital gain. So deduction 3580, deduction on capital expenditure if they are carrying out specified business. Sir, what are called specified businesses? Sir, these specified businesses, if these specified businesses are needed for the country growth, country development, that's why to encourage this kind of businesses, 3580 deduction will be given. To encourage this kind of businesses, 3580 deduction will be given. Okay, what is the deduction? 100% of the capex. Sir, a business year 1, year 2, year 3, year 4, year 5. In the starting year, they incurred 100 crores capex. And their revenues are as follows: 10 crores, 20 crores, 40 crores, 60 crores, 80 crores. Like that, revenues stably increasing. But what we did, sir, total capex allowed as deduction in the year 1 itself, 100 crores. So there's a loss of 90 lakhs. Next year, no capex, 20 crores is the profit, but you can set off 20 crores, again 0. Next year, again no, 40. So, but again, you will set off here 40, 0. Fourth year, again 60 crores. What you will subtract here? 30 crores. So, you will be paying tax on 30. Year 5, you will be paying on 80. So, if at all 100% capex is allowed in the year 1, initial years you will have less tax liability because your profits will come down. Thereafter, slowly you will be started paying taxes. Okay, why? Sir, all these businesses which we are referring here will require so much of capital cost already, so much of capital cost already. Again, in the initial years, if they want to pay tax, now it's a much more burden. That's why initial years, 100% capital expenditure alone. So profits come down and the losses are eligible to set off in the coming years. So initial years, their sales also will be less, tax also they are not required to pay. Instead of directly saying like no need to pay tax, they are saying like capex is allowed. Capex 100% alone, now obviously it will turns the profits into loss. That loss, tax loss, can be carried forwarded and will be adjusted for the coming years, so that in the coming years also they will not pay tax. But once this loss is also set off, then they will be paying taxes. Okay, what are the eligible businesses, sir? Setting up of operating warehousing facility for agri produce, setting up and operating cold chain facility for specified produce, setting up and operating warehouse for sugar, beekeeping and production of honey, production of fertilizers, building and operating 2-star and above hotels. First ones are farming related, farmers, agri produce related warehouse, cold chain facility, warehousing of sugar, beekeeping, production of honey, production of fertilizers. These are related to farmers. Why? Because India is more dependent on farmer based economy. So that's why for them. Building and operating 2-star and above hotels, building and operating hospitals more than or equal to 100 beds, developing and building a house under slum redevelopment or under a notified scheme for affordable housing, laying cross-country pipelines for oil and gas, laying and operating a slurry pipeline for transportation of iron ore, setting up an inland container depot, and setting up and operating a semi conductor, wafer fabrication unit, nothing but this electric motherboards under. Okay, all these are specified businesses. If with respect to specified business you incur capital expenditure, 100% deduction is allowed in the year of expense. If it is incurred prior to commencement of business, that is also allowed as deduction in the year in which expense is incurred. Note, capital expenditure excludes land, goodwill and financial assets. 100% expenditure can't be availed on land, goodwill and financial assets. Okay. However, sir, for the incurring this capital expenditure also, you should have made the payment in any mode other than cash, in a specified mode, in excess of 10,000. Specified mode na account pay check, account pay draft, ECS. If not paid more than 10,000 in specified mode, then such expenditure you can't allow as deduction. Lock-in period. The asset on which 35 AD deduction is available shall be there in business for a period of 8 years. Shall be there in business for a period of how many? 8 years. Then 35 CCA, where any contribution is made to rural development fund or rural development fund, national rural development fund or for national poverty eradication fund, any amount is donated, contributed, 100% allowed as deduction. Then deduction with respect to expenditure on notified agree extension project. Sir, you spent expenditure on what? Notified agree extension project. Allowed only under what? Old regime. It is only allowed under what? Old regime. Okay, so for what you spent on agree extension project. You spent on agree extension project. 100% deduction is available, and that also for any SSC. That also for any SSC. Old load under old regime, 100% deduction available for any SSC. Then 35 CCD, deduction with respect to expenditure on notified skill development project. Eligible SSC is like company, 100% of expenses allowed, only allowed under old regime. This is for what, sir? Notified skill development. For skill development, if you are spending anything for companies allowed, but only under old regime. Then preliminary expenditure, sir, you need not to read it much clearly, not an important section for us. For new undertakings and even for expansion also you can avail. How much, sir? Preliminary expenditure, they will not ask in detail, sir, for us, because in detail if they ask now for company, you should again calculate cost of project, capital employed. 5% of cost of project or capital employed, whichever is higher. Then again you should compare it with the actual. Whichever is lower is allowed. And that also not allowed in a single year. It is allowed in 5 equal installments. So how the question comes for us, they'll straight away give preliminary expenditure. 3 lakhs, 5 lakhs, 10 lakhs. So what point, if you remember, it is enough. It is not allowable in a single year. It is allowable in 5 equal installments. Allowable in 5 equal installments. Either for company or even for any other SSC being a resident. Then 35 DD. Any expenses on amalgamation and demerger. Okay. This will even discuss in business restructuring chapter also. How much? For Indian company, allowed in 5 equal installments. Allowed in how many? 5 equal installments. Expense exclusively for amalgamation or debenture. No other deduction claimed for such expense. Then VRS expenditure. VRS expenditure is allowed for any company. That also how many installments, sir? 5 equal installments. Only on cash basis. That means only when they pay, only on payment allowed as deduction. Okay. If it is paid in installments, then each installment again can be availed as deduction only in 5 equal installments. Then 35V. Amortization of expenses incurred for prospecting and development of certain minerals. Sir, for extracting, to find out a oil reserve, mineral reserve, this oil and gas, these mining companies will incur so much before starting or finding out a potential oil reserve or a mine reserve. The whole expenditure they spent to find out a oil reserve can be availed as deduction in 10 installments, 1/10 of expense for previous year. However, in a year, Sir, overall they incurred 500 crores, sir. Okay, 10 years. So how much for every year? 50 crores. But that year the profit itself is 40 crores. Then you can't avail 50 crores as deduction. It is also restricted to 40 crores only. It is also restricted to 40 crores only. Okay. Till here we can close and we can discuss questions, sir. Some questions. Then again we can move on to 40B. Okay, then the procedural sections will come, sir, like 44A, AB, AD, ADA and all. Okay. Now before going further, sir, let me clarify a few things for you. Pgbp. The points important are like additional depreciation. Next one. Additional depreciation. Next one. Contributions made for scientific research. Covered where? 35. Contributions made for scientific research covered under section 35. Third one. Additional depreciations, contributions made for scientific research covered under section 35. Then section 35 AD deduction. Section 35 AD deduction. Then contribution to agri extension project. Contribution to agri extension project. Then contribution to skill development project or amount spent on, sorry, not contributions, these are like amount spent to agri extension or amount spent to skill development. Okay, so let me and then 33 AB and ABA. What is 33 and ABA and ABA, sir? Transfer to special reserve. Tea, coffee, rubber people. Sixth one. Seventh one. Transfer to special reserve. Site restoration. Site restoration. By what? Mining and oil companies. Okay, these 7 deductions under old, under new. All these are available under old regime. But all these are not available under new regime. Not available under new regime. So under new regime, what we can't avail? Additional depreciation, contributions made for scientific research, section 35 AD, amount spent to agri extension project, amount spent on skill development project, transfers made to special reserves. Okay, all these we can't avail under what? New regime, but we can avail under old regime. Right? Then installments related, which are like 5 installments. Capital expenditure on family planning. Only 2 companies are this one. Capital expenditure on family planning. Preliminary expenditure. Then VRS expenditure. Again, VRS expenditure is also allowed as only for companies. What these 3 points are allowed as deduction only in 5 equal installments. 5 equal installments. These 3 points: capital expenditure on promotion of family planning, preliminary expenditure, VRS expenditure. These are allowed as deduction only in how many installments, are 5 equal installments. Then I think you remember the disallowances, sir. What are the disallowances, sir, that will be there? Again, 40 subsection A, TDS point, where TDS didn't deducted on incomes which are payable to non-resident, 100% disallowed. Not deducted or not remitted with respect to resident, 30% disallowed, TDS point. Then any income tax, wealth tax, interest with respect to them, tax, surcharge, fees, late fees paid with respect to income tax, wealth tax, that also disallowed. Then state government undertaking paying to state government, royalty, license fee, privilege fee, etc., disallowed. Tax paid on non-monetary perquisites by employer on behalf of employee, disallowed. Then 40A, payment made to specified person in excess of fair market value, that excess of fair market value, disallowed. Then payment made in any mode other than specified mode in excess of 10,000. For transporter na, payment is to transporter na, the limit is 35,000. What are the specified modes? Account pay check, account pay draft, electronic clearing system. Okay, then the third one, sir, where any provision for gratuity is created, disallowed. Fourth one, sir, where any amount contributed to welfare funds, the amount is not utilized for the said purpose, disallowed. Then 43B. What is about 43B, sir? 43B is about 6 points. What are the 6 points? Tax, duty, cess fee, and any amount payable to railways for usage of their assets. Then employee related, bonus commission, leave salary, contribution to PF and welfare funds. Then sixth one, interest payable to bank, cooperative societies, public financial institutions, those things. If those amounts are not paid by the due date of filing return of income, then not allowed. Allowed as deduction only in the year in which it is actually paid. Only in the year in which it is actually paid. Then MSME, where any payment is made to MSME, micro, small and medium enterprises, then the deduction is allowed. Micro, small and medium enterprises, based on whether agreement is there or not. If agreement is there, then the payment has to be made within 45 days. No agreement, then the payment has to be made within 15 days. Okay. I hope, sir, you have little clarity now, so that you will not get confused again once we go to the questions. Okay, before starting this question, sir, I need to tell one more point. In assessment of companies charter, there is one point, sir, which I need to explain now. Then only we could solve certain questions. What is that point? See. Section 79. Sir, usually business loss can be set off and carry forward, right? In the future years. Business loss can be carried forwarded for how many years, sir? 8 assessment years. Whereas unabsorbed depreciation can be carried forwarded for how many years, sir? Business loss 8 assessment years, whereas unabsorbed depreciation can be carried forward for any number of years. Any number of years. Okay. Then this section 79 is applicable only to closely held companies. Closely held companies are nothing but these are called what? Private limited companies. Okay. What is the provision says? if there is a change in shareholding, let's say, sir, in 23-24 previous year, there is loss. That time, A, B, C, D are the shareholders. In previous year, 23-24 loss is there. How much? 50 lakhs loss. And unabsorbed depreciation is also there, 20 lakhs. Okay. Now, there is a change in shareholding. A, B, C, D are not the shareholders. By previous year 24-25, there is a change in shareholding. If there is a change in shareholding during the previous year, then the loss incurred in preceding previous year shall not be eligible to set off. The loss incurred in the year. Sir, in the year of loss, A, B, C, D are there. But now in the previous year 24-25, A, B, C, D shareholders are not there now. So such loss you can't set off here. Okay, but there is an exception. What? If at least 51% of voting power remains same in which the loss incurred. I mean in 23-24 and in 24-25, at least 51% of voting power people remain same. Sorry, A, B, C, D, 4 people went. Then loss can't be carried forward and set off. Sorry, carried forward but not set off. If at least CD went, if both CD went also, there is a change in 50%, can't be set off. Only D left, then only 25% change. Other 75% is intact, not changed. So then the loss can be set off. Okay. Sir, here this restriction is available only to loss. Unabsorbed depreciation can be set off, even though the shareholding change is more than 51%. Understand, sir? Then, consequent to such requisition and survey, if any undisclosed income is found in the previous year, with that undisclosed income, you can't set off, okay, you can't set off the losses and even unabsorbed depreciation also. With the undisclosed income you found in the current previous year, you can't even set off loss and even unabsorbed depreciation also. Loss also can't be set off and unabsorbed depreciation also can't be set off. Hello all, able to understand now? Okay, now, sir, look at this question, sir. The statement of P&L of Radhe Private Limited, which is a closely held company, which gives a net profit of how much? 10,40,000. Which gives a net profit of how much? 10,40,000. Okay, in the financial year 31st March, the following items are already charged. So these are the items debited and this is the additional information. Okay, so we should calculate what? Compute the income chargeable under that Pgbp of Radhe Private Limited for assessment year, okay, 25-26. Okay, so what we should do? Here, interest amounting to 35,000 for short payment of advance tax is paid under 234B related to assessment year 25-26. Sir, interest paid with respect to what, sir? Short payment of advance tax, that means income tax only. Okay, so any payment which is made related to income tax, interest, late fee, tax itself, all these are what? Disallowed. Since it is already disallowed, since it is already debited and if it is disallowed, now what to do? So we should do what? Add back. Okay, 35,000 will be adding back. Then cash payment 78,000 made. Sir, cash payment 78,000 made. But see, it includes 46,000 paid to farmers. Sir, to farmers it is allowed only. Okay, under rule 10D there are exceptions. To farmers it is allowed. And 32,000 was paid for transportation. And for transportations also up to 35,000, no problem. So since both are within the limits, nothing to be done. Simply what you do, not consider itself. Because it is allowed only and they already debited to P&L, nothing to be done. Allowed. Then depreciation as per Companies Act. Sir, what we'll do? Depreciation as per Companies Act will add back. We'll reverse this and we'll avail depreciation as per what? Income Tax Act. So this 2,80,000 what we'll do? We'll subtract 2,80,000 which is the depreciation available as per Income Tax Act. Then there is a provision for income tax. Provision for income tax also what we should do? Add back. Why? Income tax is not an allowable expense. So 55,000 will be adding back. Then contribution made to electoral trust. Electoral trust na it is also a political party kind of. So political party any contributions made na 37 we discuss. It is not allowed. Since it is not allowed, what you should do, sir? 1 lakh you will be adding back for PGBP purpose. But at the time of computing net total income, it is allowed as deduction under 80GGB. For company na it is allowed as deduction under which section? 80GGB. So first you add back here. Then again after gross total income, when you are subtracting chapter 68 deductions, then under 80GGB again you can subtract 1 lakh. Then interest on term loan obtained from cooperative bank not paid before the due date. Not paid before the due date. How much interest is not paid, sir? 43B section. Where interest is not paid by the time of filing return of income. What to do? 1,30,000 we should do what? Add back. Then bonus paid in excess of requirement to relative. For relatives, sir, bonus has to be paid as per what? Fair market value. Here it was paid in excess. How much? 25,000. So what you should do? This 25,000 also we should add back. 35,000 add back. Second point, nothing to be done. Then 2,40,000 add back. 35,000 provision for income tax add back. Contribution to electoral trust add back. Interest not paid by due date add back. And then bonus paid in excess of FMB add back. Then if you see the additional information, sir, the business loss is like 3,40,000 which was carried forwarded and unabsorbed depreciation of 2,20,000. Return filed within the due date only. But see, equity shares of the company are held by X, Y, Z and P. 4 equally, each 25. During the financial year, X, Y and Z, 3 people sold the shares. I mean, there how much remains intact, sir? 25% only not changed. 75% changed. But the provision says like 51% should remain as it is. Here the change is 75. Okay, unchanged is 25 only. But the change is there. But the rule says like 51% shouldn't be changed. Since the violated, loss can't be set off. Loss 3,40,000 can't be set off. But unabsorbed depreciation is eligible for set off. Unabsorbed depreciation is eligible for set off. See, we discussed a provision here. What is the provision? For private limited companies, they could set off the business loss only when at least 51% of the shareholders who were there in the year of loss continues to be there even in the year of set off. At least 51% of shareholding should continues to be there from year of loss, and they should be there even in the year in which the loss is going to be set off. Here what is happened? In the year of loss, X, Y, Z and P are there. But whereas in the year of set off, X, Y, Z, 3 shareholders are missing. So how much, who is there continuing? Only P is there at the time of year of loss and even in the year of set off. So P's share is how much? 25% only. But the provision says like 51% of shareholders shall remain as it is. But here only 25% of shareholders only remaining. That's why brought forward business loss can't be set off, whereas unabsorbed depreciation can be set off. Because that rule, restriction is applicable only for business loss, not applicable for unabsorbed depreciation. Yes, now we'll solve this question. Devi Private Limited is engaged in the business of manufacturing of leather goods. Its statement of P&L shows how much? 43,45,000 for the year ended 31st March. Now see, they purchased raw material. Purchased from whom, sir? WS and Co LLP for 15 lakhs. It is a micro enterprise as per MSMED Act. A sum of 8 lakhs was paid on 20th March. Sir, when the transaction is on 12th March, they paid 8 on 20th March within 15 days. Whereas the balance was paid on 10th July. And there is no agreement also. And there is no agreement, now the payment should be made within 15 days. Did they paid? No. How much they paid? Out of 15, 8 lakhs only paid. 7 lakhs didn't paid within 15 days. So how much disallowed here? And what to do with it? Sir, already they might have debited this point to 15 lakhs, they debited to P&L. So what we should do, 7 lakhs we should add back. 7 lakhs we should do what? Add back. Then one senior manager of the company, Atul, went on business trip to foreign country and he died there in road accident. The company paid gratuity to his dependent 10 lakhs. It was claimed as a business expenditure. Yes. So when the manager of the company dies, it's the responsibility of the employer to pay gratuity. So that's why they paid 10 lakhs. This is a business expense only. No problem in that. Okay. Nowhere in the disallowances this point covered. Okay. And okay, where it is covered? 37. It is relevant to business, not for personal nature, not of capital nature, not a violation of law, incurred by SSE during the year only. All the 37 conditions are satisfied. And nowhere it was specifically said as disallowed. So nothing to be done, allowed. Then see. Advertisement expenditure paid 2.5, in which one of its director is a designated partner. So specified person. Okay, when the similar advertisement is provided for others, 1,90,000 is charged. So fair market value is 1,90,000, but to the specified person you paid 2.5. How much excess paid? 60,000. So the 60,000, what we should do? Add back. Add back. Then late fee. Sir, this point crucial, sir. Many do mistake. Late fee for delay filing of TDS return, 10,000. And interest under 25,000 debited as general expenses. Sir, TDS related late fee is not disallowed. Income tax related late fee is disallowed. TDS related late fee is not disallowed. Okay. Then interest. If it is interest, TDS related is also disallowed. Income tax related is also disallowed. If it is interest, TDS related and income tax related is also disallowed. So how much we should disallow, sir? This 25,000, which is the interest related to TDS, this alone has to be disallowed. Late fee is allowed only. Interest part is disallowed. So 25,000 add back. Then employer contribution to PF fund were also remitted on the employees provident fund recovered from salary in the month of August 2024. How much, sir? 60,000 was remitted on, sir, August month. PF contribution from whom? Employee. Should be remitted by when? Next month 15th. Where it is said PF Act due date. Sir, I don't know PF Act due dates and also. But still that would be usually in the next month. Usually in the next month only. But this person didn't remit it. August, September only he should have remitted as per PF due dates. But he remitted in October. And for March month also remitted in which month? August. So the total 1 lakh he didn't remitted within the due dates of PF Act. So what to do, sir? 1 lakh you cannot take it as expense. Sir, it is already considered as income. So they wanted to consider it as an expense also. But to consider it as an expense, it was not paid within the due date. So 1 lakh disallowed. So what you should do? 1 lakh add back. 1 lakh you should do what? Add back. Then employer contribution to PF fund of similar accounts were also remitted on the same date. These amounts were debited in the statement of P&L. Employer contribution to provident fund of similar accounts were also remitted. Okay, employer also contributed on the same dates. Sir, which dates? 16th October and then on 20th August. Sir, both are within the due date, sir. Due date of what? Return of income we should check here. Due date of return of income for employer contribution. So here it's allowed only, no change. Then on the occasion of New Year, the company gave one laptop to each of its 10 distributors. Sir, why company is giving laptops to its distributors? It's something like commission the company has given laptops. The cost of laptop is how much? 60,000. Okay. The company did not deduct TDS on this laptop. Non-monetary form. Sir, when it is paid in monetary or non-monetary terms, they should deduct TDS. Okay. How much, sir? 60,000 into 10 are total 6 lakhs. Here the distributors are residents only. So since TDS is not deducted, how much is disallowed? 30% of 6 lakhs. 6 lakhs into 30%, 1.8 lakhs disallowed. So we should do what? Add back. Then one machine was acquired on 10th September for 15.5 lakhs, for which payment was made through banking channel, and 1.5 lakhs was incurred by way of expense for installing. Okay, sir, the cost of purchase is 15.5, the cost of machine, plus installation expenses also has to be added to the machine cost. So total how much? 17 lakhs is the addition made. The said machinery was already used outside India. The machine was put to use from 25th September. 25th September now. Sir, it means how many days they used? October, November, December, Jan, Feb, March. Okay, 25th September. That means they used for more than 180 days only. And company has claimed both normal depreciation and even additional depreciation also. On 17 lakhs, company claimed both normal depreciation as well as additional depreciation. What is not allowed, sir? Additional depreciation. Why? It is a used asset. If the asset is already used, then you can't avail additional depreciation. So what you should do? Additional depreciation which they might have charged. So how much? 17 lakhs into 20 percentage, 3.4 lakhs. That already they charged it to P&L. Now it is not allowed. So what you should do? You should add back 3.4 lakhs. Then annual bonus debited to statement of P&L. Bonus, how much, sir? 15 lakhs. But the same was unpaid till the date of filing of ITR. 43B. If the bonus is not paid by the due date of filing return of income, so what we should do, sir? 15 lakhs. Add back. Add back. When it is allowed, since it is actually paid on 3rd December 2025, it is allowed in the year 25-26. Allowed in the year 25-26, but for the previous year 24-25 it is disallowed. Then donation to political party. Donation to political party, how much? 1 lakh 80 and 20, total 2 lakhs. Sir, political party donations, what we should do? 2 lakhs add back. And then it can be claimed as deduction under which section? After finding out gross total income, 80 GGB. How much we can claim under 80 GGB? 1.8 or 2 lakhs. 80 GGB, how much we can claim? 1.8 or 2 lakhs. 80 GGB. How much deduction is available? 1.8 only, sir. Why? Because the amount paid in cash is not allowed as deduction under 80 GGB. So this is not allowed. Then last point, sir. A sum of 5 lakhs was wiped off by an NBFC. 5 lakhs wiped off. 3.8 lakhs is towards principal and 1.2 lakhs is interest. Interest amount waived off is credited to P&L. Sir, what does it? 1.8 lakhs interest waived off. Okay, if you remember, sir, remission or cessation of trading liability. Interest you need to pay, liability. And then it was what? Waived off. Then what they did? They credited to P&L. They credited to what? P&L. So whether it is correct or not. Sir, loan is a capital receipt. Interest is a revenue receipt. So loan, even though 3.8 lakhs wiped off, no impact. You should not touch it. No impact. But interest 1.2 lakhs wiped off. Revenue item. Interest is a revenue item. So what is the adjustment? See, sir, clearly. This 1.2 lakhs, the point is very clear, sir. First, remission or cessation of trading liability concept will come when in a previous year you already claimed it as an expense. Then in the succeeding previous year, if it is wiped off, then in the succeeding previous year you will have to recognize it as an income. What happened here? First, interest, sir. This is interest expense. Whether it is allowed as deduction in the preceding years? No. Why? Interest is allowed as deduction in any year only if it is paid on or before the due date. Sir, if it is being wiped off now, in preceding years it was not even paid. If it is not even paid, then the previous years, preceding years itself, not allowed. If it is not allowed in the preceding years as deduction, subsequent years, even though it is wiped off, it need not to be considered as income. It need not to be considered as what? Income. Sir, understand, na? Let me tell you. Sir, previous year 23-24, they have interest, sir. 1.2 lakhs. But that time, 1.2 lakhs will be allowing a disallowed. In previous year 23-24, it is disallowed. Why? Interest unpaid na by due date, so not allowed, disallowed. Okay. Now in previous year 24-25, even though this interest is wiped off, we need not to recognize as income. Why? If it is already claimed as an expense, subsequently wiped off, then recognize as an income. Here, this is not even first claimed it as an expense because disallowed here. Then subsequently even wiped off also not an income. Not an income here. So if it is not an income, they should not credit it to P&L. But what they did, they already created this 1.2 lakhs also to P&L. Okay. Interest waived is credited to P&L. They should not have credited. So what you should do? Subtract it. Okay, that 1.2 lakhs also they will subtract. So you will be getting what? After all these deductions, you will get 71,50,000. Clear? Okay. Then we'll solve this question. Question number 11. Even 10 also will do, sir. I'll do. Wait. First we'll complete June 2024. Then we'll go to June 2025 questions. Moonshine Limited, engaged in manufacturing activity, was incorporated in the year 2010. It has a net profit of how much? 82 lakhs. For the year ended 31st March 2025, in the statement of P&L, the following information is given to you. Opening stock undervalued, closing stock overvalued. Now, tell this impact. How much we need to add, how much we need to subtract because of these two things. Calculate and tell, sir, everyone. If you can do this one, then you are on track. Amounts also you should tell. Amounts also. Not just add or subtract. You should tell the amounts also. But don't be very clear. And then simply you could do. Or how we recognized opening stock and profit. Opening and stock and profit. Enemies. Opening stock undervalued. Undervalued. So profit what? Increased. So to make it normal, what we should do? Reduce. So for this impact, we should reduce less than here. Closing stock profit, friends. Closing stock profit, friends. Closing stock overvalued. Profit also increased. Then to make it normal, what you should do? Reduce. So both we should reduce only. Okay, then amounts. What? Undervalued by 10%. That means 36 lakhs equals to 90%. Then 36 lakhs equals to 90%. Then 100% equals to how much? 40 lakhs. So the difference is how much? 4 lakhs. So you should subtract here 4 lakhs. Then 33 lakhs equals to 110 percentage. Why? Overvalue. Then 100 percentage equals to how much? 30 lakhs. So here 3 lakhs also you should do what? Reduce. So total 7 lakhs you should reduce. Total 7 lakhs you should reduce. So this 33 lakhs is overvalued already. So that means it is equivalent of how much? 110 percentage. So if it is 110 percentage, now 100 means how much? 30. So the difference if you do, why you are doing 100 by 90? Undervalued na, it's correct only 100 by 90. Overvalue, so you should do what? 100 by 110. That's basic logic, not relevant to tax, relevant to your other subjects knowledge. Okay, so these two adjustments you might have did correctly if you know which language, which ones are your accounting points properly. It's nowhere connected to tax, these 2 points adjustments. Then see, employees contribution to RPF 24 lakhs. Employees contribution to RPF is how much? 24 lakhs. Of this, 4 lakhs representing contribution was 2 months was remitted 10 days beyond the prescribed due date. 10 days beyond the prescribed due date. So what to do, sir? Disallow. So what to do? Here 7 lakhs will subtract. Here 4 lakhs, what we should do? Add back. Employer contribution 24. Everything paid by the 21st March, 21st May. That means within the due date only. Since it is within the due date, no problem. No problem. Then fifth point, sir. Okay, fifth point, everybody read and tell quickly. To the ones who are saying disallowed, sir, I already said at the time of non-resident point also. Here SSE is making payment to non-resident. Yes, if it is interest, royalty, FTS, salary, then straight away if TDS not deducted na 100% disallow. If they use the word other, any other sums na, if it is other than this for any other sum na, we should check whether that is taxable in India or not. We should check whether it is taxable in India or not. Only if it is taxable in India, then TDS has to be deducted. If it is not even taxable, then there is no need of deducting TDS. Okay, then there is no need of even deducting TDS. Then it won't be disallowed. See, commission to Quinto, a non-resident, for procuring orders for sale of goods in Japan. So where he procured orders, so the commission paid, where he procured orders outside India. So income, commission accrued plus received, both were outside India. Accrued plus received both outside India. If that is the case, then what? No tax was need not to be deducted because it is not even taxable in India. So if it is not taxable in India, no need to deduct TDS. So then even TDS not deducted also no problem. So it is allowed only. There is no point to deduct TDS. That's why TDS also not deducted. Sir, remember, sir, this point, the similar point is there in 2 or 3 questions also. When they are testing you about non-resident, now be clear. Interest, royalty, fee for technical service, salary. Outrightly, if they didn't deduct a TDS, disallowed. Other than this for any other sum like commission, then you should check whether it is accrued in India or outside India. Sir, how can I say that it is accrued in India? Because orders, he is there outside India, procuring orders also outside India. So whole work is carried out by him where outside India only. So it is what? Disallowed. Sorry, allowed. Not even taxable in India. Then Depreciation debited in the books. What we should do, sir? 16.5 lakhs we should add back. Then, as per income tax rules, it was how much, sir? 19 lakh 50. Plus, they acquired a machinery of 20 lakhs. It was installed and put to use from when? 10th October 2023. So, on this depreciation extra, we should calculate. So, how much is the depreciation? 20 lakhs into how much the depreciation? 15 percentage into restricted to 1 by 2. Why? Put to use on 10th October, used for less than 180 days. So 20 lakhs into 7.5 percentage, na? It is 1 lakh 50,000. Then, since the company is into manufacturing, it is even eligible for what? Additional depreciation. So 20 lakhs into 20 percentage into 1 by 2. Another 2 lakhs. So total this depreciation is like 3 lakh 50 plus this one 19.5 plus 3 lakh 50. Overall, how much depreciation they can avail? 23 lakhs they could avail. So subtract 23 lakhs and reverse this 16.5 lakhs. Reverse this 16.5 lakhs. Okay, sir, able to get the point? Then, paid as interest for late filing of GST return 50,000. Paid as interest for late filing of GST return. How much, sir? 50,000. Sir, interest for income tax delayed payment, income tax related return payment, TDS return disallowed, not for GST. So it is what? Allowed. Then paid 2 lakhs by way of fee for increasing authorized share capital. For increasing share capital, you paid fee. Sir, share capital related change. Capital is a capital nature one. So for changing the capital nature item, if any expense is incurred, that is also capital expense related. So this is what? Disallowed. So what we should do? 2 lakhs we should add back. Because this is related to what? Capital related. Then a vacant plot was sold for 24 lakhs to Jupiter Private Limited, being its wholly owned subsidiary company. The stamp duty value of the plot was 30 lakhs. The profit on sale of plot as per books of account 10 lakhs is created in the statement of P&L. So first, how much profit they credited to P&L, sir? 10 lakhs. It is on sale of what? Vacant plot, not a depreciable asset. So, since they credited 10 lakhs, what they should do? First, they should subtract this 10 lakhs. Why? This is related to capital gains at first. Any profit on sale of capital. But even in capital gains also, where there is a transfer of holding company to its wholly owned subsidiary, holding company to its wholly owned subsidiary, it is not a transfer. Eighth, yes, no action. Eighth is no action. Why allowed? Sir, eighth, why allowed? Na? Interest on late filing of GST is allowed. It's not a violation of law. Penalties are disallowed. Sir, the section clearly said like income tax related and interest paid related income tax not disallowed. GST returns, customs related, if any interest is there, that is allowed only. Nowhere it was said like disallowed. Hmm. It's already debited to P&L. So again, why we need to? Yes, it's already given in the question itself. It has reported in its statement, the following information is given to you. Okay, so you are worried like whether it is clearly given or not. No. Here, if it is expense now, we are assuming like debited to P&L only. If it is income now, it's like obviously credited to P&L. So since this 10 lakhs is credited to P&L, first we should what? Subtract. Then on sale of vacant plot, how much ever is the gain they have in 10 lakhs, first they should what? Subtract. 10 lakhs has been subtracted, which is credited to P&L. Subtract that. But the point is what? Even though this subtracted, whether in capital gains side it is taxable? No, even in the capital gains side also it is not taxable. Why? The transfer is between a holding and wholly owned subsidiary. It is a transaction which need not to be recorded as transfer. It is a transaction which need not to be recorded as what? Transfer. Okay. Then on 1st August 2024, the company sold a factory building for how much? 80 lakhs. The WDV of the building is how much? 34 lakhs. Subtract. How much is the capital gains they got, sir? 56 lakhs. Okay, sorry, not 56, sir. 46 lakhs. And the building was used for business for the past 7 years. The company bought capital gain bonds of NHA for 46 lakhs in November for the purpose of availing exemption. So once, as per 54 EC, sir, if they invest in NHA bonds, okay, then it is again available for exemption. So 46 lakhs is also exemption. So the taxable capital gains is 0. But if already they credited 46 lakhs to Pgbp, this capital gains, this 46 lakhs to Pgbp. So what we should subtract? We should subtract 46 lakhs. Why? These are not related to Pgbp. Sir, this point, sir, only if it is credited. But one point we should check, sir. First point, clearly they said like what? Credited to P&L. But for this point, they didn't said like it was credited to P&L. They didn't said like it was credited to P&L. So that's why we'll not be subtracting anything. If at all they added a statement like credited to P&L, we'll be subtracting 46 lakhs here also. Okay, then capital gains computation also, it will be how much, sir? Capital gains 0 only. Why? Because they already claimed exemption. So whatever is the Pgbp income they have, that itself will become the total income also with all these adjustments. Sir, everybody got a clarity, right? Sir, first point, they mentioned it is what? Credited in the statement of P&L. Here did they said credited in the statement of P&L? No, right? Okay, so we need not to subtract it. Now capital gains. How much is the capital gains? 46 lakhs. From there, 54 EC. What does 54 EC says like? If you invest in NHA bonds, RECL bonds, within 6 months from the date of transfer, within 6 months from the date of transfer. Sir, this is November 2024, not 23. When the investment is made within 6 months from date of transfer, then the amount is eligible for exemption. How much eligible, sir? How much ever they invested? 46 lakhs. Okay, so the taxable capital gains remains 0. 54 EC exempted. But to avail 54 EC exemption, the asset transferred should be a long-term capital asset. Should be a long-term capital asset. Sir, here these are depreciable assets. Resulting capital gain is short-term only. But if they are held for with respect to depreciable assets, when the period of holding is more than 24 months, they are long-term only. But the resulting capital gains is always short term. So gain only short term, asset remains to be long term only. So since asset is long term now, they can avail exemption under 54 EC, the total tax under capital gains, the total taxable capital gains will become 0. Sir, you understood the point now? Then we'll go to June 2025 exam, sir. It's comparatively one of the complicated question in Pgbp. Okay. See. Sir, you know this tea, coffee, rubber related? In inter level, you might have studied this one. Tea, coffee, rubber related, agree income and business income. With respect to tea, 75% will be treated as agree income, business income 25%. With respect to coffee grown cured, with respect to tea, 60-40. With respect to coffee grown cured, 75% is agree income, 25% business income. With respect to coffee grown cured, roasted and grinded, 60% agriculture income, 40% business income. With respect to rubber, 65% would be treated as agree income, 35% would be treated as what? Business income. Yes or no? You know this point or not? Okay, even if you don't know, now you will be knowing. Okay, so actually this point will be there in the Pgbp chapter, sir, but towards the end of the chapter. Since we started solving the questions in between only, okay, now I am explaining this point also. Tea, coffee, rubber. 60% agree income, tea, 40% business income. Coffee grown cured, 75% agree, 25% business. Coffee grown cured, roasted and grinded, 60% agree income, 40% business income. Then rubber, 65% agree income and 35% is the business income. Okay. Sir, this one you know. Then SSC 10A, you know sir, 10A, what is 10A? SSC engaged in the business of, SSC is into exports, that also from where? From a unit located in SEZ. Then what is the benefit? 100% of profits are exempted for the first 5 years. Subsequent 5 years, 50% of the profits are exempted. But this exemption will not give straight away. First, we will calculate the profits separately. Then, post gross total income will provide the deduction from the gross total income. Okay, post gross total income will avail again what? Deduction. Okay, 100% of the profit. Right. Okay. Miss Direct Private Limited, Kolkata reports a net profit of 22,75,000. How much? 22,75,000 for the year ended 31st March 2025 after adjustment of the following items. First one what? Interest on loan from NBFC. The amount remained unpaid till the due date. So what to do? Interest remained unpaid till the date of filing the return. Disallowed. So what we should do? Add back. Then depreciation as per Companies Act, what we should do? Add back. And then separately depreciation as per income tax 4 lakhs is there na, this we should subtract. And the depreciation as per Companies Act 3,70,000, what we should do? Add back. Right? Then penalty for infraction of law. So what they did, sir, they have violated law. Penalty for infraction of law, what we should do, sir? Add back. Then payment to ROC for change in authorized share capital. In June 2024 exam also this point is there. Capital nature, add back. And memorandum of association, articles of association change, these are also of capital nature because you will not change them frequently. So those are also of capital nature, add back. All these are of capital nature, so what? Add back. Then company made following provisions. Sir, provisions, any provision is disallowed. No provisions are allowed except for banks on provision for bad debt. So all these provisions are what? 50,000, 85,000, and then 2,40,000. All these are what? Disallowed, add back. Then retrenchment compensation paid for employees. Sir, when the company is closing, they paid retrenchment compensation, no problem. VRS na 5 installments, preliminary expenditure na 5 installments, expenditure on family planning na 5 installments. Sir, here it is like retrenchment, so nothing. So it is what? Allowed. So all these points we should do what? Add back. Sir, clear? Then credit side, profit from unit established in SEZ. Sir, this profit from unit established in SEZ, it's a separate business kind of. So this we subtract here and we'll calculate separately. Profit from unit in SEZ. Okay na? Sir, why? They are having normal business and a unit in SEZ also. So SEZ related will calculate separately. If you don't subtract and take it separately, you don't know how much to be availed as deduction. That's why we need to calculate it separately. So I am subtracting because we should take it separately. Then income from growing and manufacturing of tea in Darjeeling, 1 lakh. Okay, sir. Income from growing and manufacturing tea in Darjeeling, 1 lakh. 60% exempted, 40% taxable. But that also a different kind of business now. This also will calculate separately, subtract. Sir, these two are related to Pgbp only, but we wanted to take them as a separate business. Business 1, normal one. Business 2, SEZ. Business 3, T. So for business 2 and 3, we'll calculate separately. That's why these also I am excluding here. So I am subtracting. Sir, got my point, everybody? Sir, then company received a refund of income tax of 47,000, which is credited to statement of P&L. Sir, it's not even related to Pgbp. So what we should do? 47,000 we should subtract. 47,000 we should subtract from what? Profit. Whereas 7,000 interest on income tax refund is taxable under that IFOS. It is taxable under that IFOS. Okay. Sir, you want me to do the question, sir? Okay. I'll do it, sir, quickly so that you will have an understanding. First, we'll take what? Profit 22,75,000. Then to this, we should add back certain items. What are the items to be added back? 1,85,000, 3,70,000. 3,70,000 you add back, then add 60,000, add 15,000, even add 20, 70, 20,000, 70,000, even you add 50, 85, 2,40,000, 50, 85, and then 2,40,000 also added back. Okay, then this 2 will be subtracting. I'll do the subtractions afterwards. Then refund 47,000 we should subtract. Depreciation 4 lakhs we should subtract. Then if you subtract all these, how many we need to subtract? This 275 and 1 lakh. Subtract. Then 47,000. Then here 4 lakhs. If you subtract all these, then you will get what? Okay, then this is brought forward business loss, we'll think afterwards. Speculative loss, think afterwards. Unabsorbed depreciation. Then during the year, company purchased raw material from micro enterprise for 45 and paid 37.5 up to the end of the year. It settled the balance only on 25th May. There was no defect in the raw material. The entire purchase is already debited to P&L. Sir, 7.5 lakhs they not paid within 15 days. So what we should do? 7.5 lakhs we should do what? Add back. 7.5 lakhs we should do what? Add back. So add back 7,50,000. Add back 7,50,000. Swati, 7,000 IFOS, I know, but overall credit made is 47. Out of 47, 40,000 is not even an income. So that also we should exclude. Then again under IFOS side, we will take 7,000 as income. Then advance tax paid by the company during the previous year 5 lakhs. But it was not mentioned whether debited to P&L or not. So we'll think like, or we are considering it not debited to P&L, because above point they clearly said like if debited to P&L. Here if they didn't said it mean what? It was not debited to P&L. Okay. So if you look at sir from 22,75,000 with all those additions and subtractions, okay, you will get what sir? 36,98,000. From there 4 lakhs if you subtract 32,98,000 you will get 32,98,000. After doing all the adjustments which I wrote here, you will get how much? 32,98,000 you will get. This is depreciation. You will get how much? 32,98,000. Here comes the twist. One point, sir, which nobody can expect. Even I can do a mistake in this point. Okay, see, it's not mean I'm great, but any person, even with so much of knowledge in Pgbp also, this point we can do mistake. What? Sir, they given business loss brought forwarded 3,75,000. Fine. Then they given speculative business 1 lakh. And they given unabsorbed depreciation 3,50,000. Sir, while explaining what I said, unabsorbed depreciation always has to be treated as like current year depreciation. Unabsorbed depreciation always has to be treated as current year depreciation. So what the assumption this suggested answer took is like current year 4 lakhs depreciation they charged na. Since unabsorbed depreciation is also part of current year depreciation, so they assumed, they considered like this 4 lakhs is inclusive of this 3,50,000, and then additionally they didn't subtracted 3,50,000. You could see the point also. But I don't think, sir, my heart says like that's not a valid reasoning, but suggested answer is given in such a way I can't do anything here. But nobody will think in such a way. Yes, I know. Yes, unabsorbed expenditure is like a current year expenditure only. But did they mention anything, hint kind of, like let's say this 4 lakhs is including unabsorbed depreciation? No hint also given. So usually in other questions, they subtracted unabsorbed depreciation separately. Only in this question, they thought like unabsorbed expenditure is also part of current year depreciation. So additionally, it was not allowed. So if you think, as per 32 subsection 2, any brought forward depreciation of an earlier year will be added to current year depreciation and will be treated as current year depreciation. Since the depreciation as per Income Tax Act includes the unabsorbed depreciation, no more adjustment is required. So I didn't did any adjustment for unabsorbed depreciation. It is how much? 32,98,000. Then they took profit from SEZ unit 2,75,000 separately and income from growing and manufacturing of tea 1 lakh. But out of them 40% only business income taken separately 40. So the total business incomes is how much? 36,13,000. From there we can do set off and carry forward. Business loss from assessment year 23-24 non-speculative 3,75,000. Yes, this 3,75,000 is eligible for set off. Whereas business loss brought forward of assessment year which is speculative. Speculative can be adjusted only with speculative. So this can't be set off. Only 3,75,000 is eligible for set off. So they'll set off 3,75,000 also. And the income from Pgbp is 32,38,000. And then IFOS they have 7,000. Income tax refund 7,000. So the gross total income is 32,45,000. Now they avail 10A deduction. SEZ 100%, 2,75,000 availed. So the total income is 29,70,000. Tax, cess 7,72,000. And then advance tax paid is there 5 lakhs. If you subtract, net tax payable is 2,72,200. Got it, sir? Then come back to the theory, sir. Sir, 40B also there is an amendment, so important for the purpose. What is 40B? Sir, if you remember in the beginning I said like, in the beginning of the chapter I said like, a firm will be paying interest, commission or salary to partners. Why? Firm na flat rate, partners na slab rate. So to get or to enjoy the lower rate benefit, firm may be diverting the profits by name of interest or salary to the partners. That's why it's not applicable for commissions or the limit we discussed under 40B. For interest and salary paid, a cap was kept under 40B. I mean, for a firm, if it is paying any interest and salary, it is allowed only if it is within the limit of 40B. If it is above the limit of 40B, then such interest, commission, interest salary is not allowed as deduction. So it should be within the 40B limit. What are the 40B conditions? Payment should be authorized by the deed. either interest or remuneration, and even profit sharing ratio must be given. Then agreement, only if a deed is specified, then for a past date we can't give, only for the prospective, for the future period from which the agreement or the agreement specifies the terms of payment of interest and remuneration, from that day only interest and remuneration paid will be allowed. Then interest, even though specified by deed, if it is paid in excess of 12%, not allowed. Interest only up to 12% is allowed. Along with return of income should submit deed. If there is a change in deed, a fresh deed. Okay, here also, sir, simple sir, interest. First deed should specify. Then even though deed specified also up to 12% only allowed. If they paid more than 12%, excess is disallowed, add back. Simple. For remuneration, remunerations are authorized by deed and should be paid only to working partner, full-time partner, working partner. If remuneration paid to non-working partner, it is also disallowed. Okay, how much remuneration is allowed? Remuneration is allowed based on book profit. So I'll tell again how to calculate book profit. First 6 lakhs of book profit. On first 6 lakhs of book profit, it's 3 lakhs or 90%, whichever is higher. On first 6 lakhs, 3 lakhs or 90%, whichever is higher is allowed. On balance, 60% of book profit is allowed. If it is a loss, then maximum 3 lakhs. Let me give you one more example. Let's say sir, book profit is like 30 lakhs. Then on first 6 lakhs into 90%, balance 24 lakhs into 60%. 6 into 90% now 5.4 lakhs. Then 24 lakhs into 60%. 14.4 lakhs. If you add together, how much sir? 19.8 lakhs. To this extent, remuneration allowed. Remuneration paid allowed. If let's say the remuneration actually paid is like 25 lakhs, then the excess 5.2 lakhs is disallowed. The excess 5.2 lakhs is what? Disallowed. If the remuneration paid is only 15 lakhs, then it is within the limit. So nothing to be disallowed. This 15 lakhs is allowed. This 15 lakhs is what? Allowed. Are you able to understand now? Actual remuneration paid or the limit calculated under 40B, whichever is lower, allowed as deduction. Then the question is about how to calculate book profit. Book profit, simple only sir. First we'll take accounting profit. We'll take what? Accounting profit. Onto that accounting profit, we'll do all the plus or minus adjustments which we learnt till now. All those adjustments we'll do except 40B. Then even add back interest disallowed under 40B. Under this section, if interest is paid in excess of 12%, not disallowed, na, that also add back. Then actual remuneration paid to partners also add back. Actual remuneration paid to partners also add back. Then you will get book profit. Then you will get what? Book profit. How to calculate book profit, sir? Take the accounting profit. For the accounting profit, you do all the changes which we do normally, and even add back interest which is disallowed under 40B, and then you even add actual remuneration paid to the partners. Okay, then you will get book profit. Okay. See, net profit, added back the remuneration actually charged, other Pgbp adjustments, added back, subtracted, all those things. Then sir, here why they including 40B, sir? Including 40B also. 40B interest also. We should do what? Adjust. Then you will get what? Book profit. Okay. Then from book profit, how to again calculate the taxable profit? From book profit, now subtract how much is the remuneration allowable. What is the remuneration allowable? The amount we calculated or actual remuneration, whichever is lower, that you subtract here, you'll again get the taxable PGBP income. Taxable PGBP income. Sir, look at this example. Sir, tell me this one, sir. This example will solve. SVM and Co, a partnership firm, has the following information. Compute income under the PGBP for 24-25. Opening stock 25, closing stock 40. Opening stock overvalued by 10%, closing stock undervalued by 10%. Now tell me, sir, how much is the difference? Whether we should add or subtract, you tell. Opening stock 25, closing stock 40. Opening stock overvalued by 10, closing stock undervalued by 10%. So tell me, what is the impact and how much we should do? Either add or subtract, if add, how much amount, subtract, how much amount, that you calculate and tell. Opening stock overvalued, so profit reduced. To make it normal, add the difference we need to add. Closing stock undervalued, profit reduced. So again, what we should do? Add. Okay, so this 40 lakhs equivalents to how much? 90%. Then 100% na 40 lakhs into 100 by 90. That difference. How much will be the difference, sir? I think there's a working note, sir, for it. See, opening stock related, closing stock related 4,44,000 we should add, and opening stock related 2,27,273 also. Both we should do what? Add only. Add 6,71,770. Okay. Profit on sale of land related to which head, sir? Profit on sale of land related to which head? Profit on sale of land related to capital gains. So we should subtract here. Interest on FD related to IFOS, subtract. Dividend received related to IFOS, subtract. Then purchases 60, salary 25, rent paid 4, commission paid 2, interest to partners 5.4, remuneration to partners 12, net profit. TDS not deducted on commission paid. Sir, on commission paid, TDS not deducted. So on 2 lakhs, if commission is not deducted, na 30% of it is disallowed. 2 lakhs into 30%, na how much? 60,000 we should do what? Add back, because TDS didn't deduct it. Rent paid 4 lakhs is to a relative, whereas fair market value of rent is only 3 lakhs. Payment to specified person in excess of 3 lakhs. So 1 lakh, what we should do? Add back. Then out of salary 25 lakhs, 2 lakh is paid to an employee in cash on a single day. 2 lakhs is paid to an employee in cash in Delhi on a single day. So salary paid in excess of 2 lakhs na in cash. So 2 lakhs disallowed. Then no details specified about interest and remuneration to partners. No detail given. Sir, if no detail given, nothing is there in the partnership deed, then the whole interest paid to partners is disallowed. It's not just 12%. Whole interest paid is disallowed. So what you should do? Interest also you should add back. Then for computation of book profit, this remuneration also add back. Okay, by doing all these minuses and all these adds, you will get book profit. See, net profit from the he added back remuneration. That's what I said. Remuneration also has to be added back. Then subtracted profit on sale of land, interest on FD, dividend received. Okay, this 23 lakhs we have been what subtracted. Then expenses disallowed, salary, rent paid, commission, interest to partner 5 lakh 40. All these we added back. Okay, then opening closing stock related 6 lakh 71,000 also. So what is the impact we did here, sir? For 5 lakh 59 lakh 60,000, we added 12 lakhs, we subtracted 23, we added 5 lakh 40, and we added 6 lakh 71. So now check whether it is correct or not. For 59 lakh 60, we should add 12, 5.4, 6 lakh 71. Whereas subtract 23, then the total comes how much? 60 lakh 71,717 is the book profit. Is the book profit. If this is the book profit, how much remuneration is allowed, sir? On first 6 lakhs, 90%, 5 lakh 40. Whereas on balance, 60%. So total 38 lakh 23,330 can be paid as remuneration. But how much they paid, sir? 12 lakhs. So the 12 lakhs is within the limit only. That means allowed. So again, subtract the remuneration. You will get the income taxable on that PGBP 48 lakh 71,070. 48 lakh 71,070. Sir, got it, everybody? Understood 40B section, sir? So 40B is applicable only in case of firm. This first 6 lakhs in on 90%, this 6 lakhs is an amendment, sir. Previously it used to be 3 lakhs only. Hello all. Respond. What happened to the others? Your brain exhausted, huh? Then 43A. All these are Mukesh. I mean, not much important, sir. Change in rate of foreign exchange of currency. You took a loan in foreign exchange, sir. But when you are repaying, okay, you took a foreign exchange loan and acquired an asset. When you are repaying, there is an exchange loss. Then add to block value. If there is an exchange gain, reduce from block value. Okay. Then 43CA. Consideration on transfer of immovable property. So this provision remains same even under capital gains also. 50C. See what? You are selling immovable property. You are selling immovable property. If this immovable property is stock in trade and then you are selling, 43 CA. If this immovable property is capital asset and then you are transferring, then 50 C. Okay, then it is 50 C. What does it says? Immovable property you sold for, let's say, 75 lakhs. The sale price is like 75 lakhs. Whereas the stamp duty value is like 90 lakhs. Stamp duty value is 90 lakhs. So this section, either 43 CA or 50 C will come into picture when the immovable property is transferred for a price less than stamp duty value. And the immovable property is transferred for a price less than stamp duty value. Transferred for a price less than stamp duty value. Yes. Then, sir, the next point to be checked is like, okay, less than stamp duty value. Second, you should check is like, compare 110% of sale price into with the stamp duty value, 90 lakhs. So 110% of 75 lakhs, it is how much? 82.5 lakhs in compare with 95. Still which is higher? Stamp duty value only higher. Even if comparison with 110% of actual sale consideration also, stamp duty value is only higher, then no other option. Take SDV as only sale consideration. Take SDV as the sale consideration. Okay. If at all on comparison with 110% of actual sale price also, stamp duty value is only higher, then take stamp duty value as the sale consideration. Then where SSC is not agreeing with this, sir. Sir, SSC is not agreeing. Okay, he's saying like, no, I don't want to take SDV. The actual price is 75 only. I'm not doing any cheating and all. The market price 75. I sold for only 75. Okay, then he can go for an appeal, or else AO can refer the case to valuation officer. Now valuation officer, sir, what is the dispute? SSC is saying like 75. VO, okay, AO saying like take SDV 90 lakhs. This is the dispute, 75, 90. Now valuation officer came. Sir, he's like what? He's a person who wants to settle the dispute. Now, if he comes and says like the price is 110, nobody listens to him, because the other side, already the maximum and minimum are given. Maximum 190, minimum 75. If valuation officer tells something less than 75 also, the minimum consideration is 75. Even if valuation officer tells something above STV 90, then also the maximum cutoff is 90. Okay, the sale consideration maximum could be 90. In this case, minimum it could be 75. So VO tells above 90 also, it is 90 only. Below 75 also, it is 75. Whereas VO gives something in between, like let's say 80, 82. Then the price determined by valuation officer has to be considered. Price fixed by VO, less than actual sale consideration. I mean less than 75. You take what? Actual sale consideration. Between actual sale consideration and SDV, then take what? VO's value. Greater than STV, then take what? STV. Then when there is a change in SDV from date of agreement to date of registration, then what to take? Date of agreement, one stamp duty value is there. Date of registration, another stamp duty value is there. In that case, what to take? Sir, when there is a difference in date of agreement and date of registration, you can take date of agreement. But the government wants to know that whether the date of agreement is a real one or something you are created. Okay, that's why there should be an agreement. On the date of agreement, some consideration, either wholly or partly, should have been paid. That also through what? Account paycheck, account pay draft, electronic clearing system. Then they believe that's a real agreement. On that day, whatever is the STV, that could be considered. Then 44A, maintenance of books of accounts. Maintenance of books of accounts. SSC, notified professions. Who are called notified professions, sir? When they are carrying out accounting, medical, legal, interior decorator, engineering, technical consultant, and others. Others na sports person, film artist. When they are into existing provision, I mean already they are into profession, their gross receipts exceeds 1,50,000, in all of the, not any, in all of three preceding previous years, all of three preceding previous years, then they have to maintain books of accounts. For I am a professional. In all of my three preceding previous years, my receipts are more than 1,50,000, then I have to maintain books of accounts. Then new profession, I started profession recently, this year only. Then if in this year my turnover is going to exceed 1,50,000, then I should maintain books of accounts. When if I am a notified profession, who are called notified professionals? Omelette, accounting, medical, legal, engineering, interior decorator, technical consultant. Then SSC carrying out notified profession. Notified professions na individuals and HF. When they are carrying out existing business or profession and the income is greater than or equal to 2.5 lakhs or turnover is greater than 25 lakhs, individual and HF, sir, existing business or profession, income greater than 2.5 or turnover more than 25 lakhs out of any of three previous years, they should maintain books of accounts. This year only they started business. In this year itself, if it is going to exceed 2.5 lakhs income or turnover more than 25 lakhs, they should maintain books of accounts. Others, existing one, if their income is above 1.2 lakhs, income not total income, or business income, turnover more than 10 lakhs, then they should maintain books of accounts. New business in this year itself, sir, existing business na 3 years you will check. New business na first year itself you will check. Okay. Then you have books of accounts, you have multiple place of businesses. Then business or profession at a single place, you should place where SSC carries business or profession. Where business or profession is at multiple places, you should maintain at the principal place of business. How long the period of books of accounts has to be maintained? They should be maintained for 6 assessment years from the end of relevant assessment year. The books of accounts has to be maintained for what? 6 assessment years from the end of relevant assessment year. Then penalty for non-maintenance would be 25,000. Then presumptive sections. Presumptive sections. 44 AD, 44 ADA and 44 AE. To whom 44A is applicable, sir? Resident individual, HUF firm, which is not availing 10AA, Chapter 6 80I series deductions. It should be a resident individual, HUF firm, not availing 10AA exemption or Chapter 6A 80I series deductions. Then they should be carrying on any business other than goods transportation. Why na? For them separate section is there. Commission business. And their turnover should be within 2 crores. Turnover should be within 2 crores. Okay. Instead of 2 crores, sir, this is the provision which is inserted for small and medium sized business people. When they are called as small and medium sized, and their turnover is within 2 crores. Okay. So who are eligible? Resident individual, HUF firm. Okay, not having 10AA or 80I series deductions, not carrying out commission business, turnover within 2 crores. However, if their total cash receipts in previous year are less than 5%, their total cash receipts are less than 5%, they can opt for threshold of 3 crores. Then they can opt the threshold of how much, sir? 3 crores. How much is the presumptive income, sir? 8% of turnover in cash. If at all the turnover is in cash, 8% will be treated as presumptive profit. If the turnover is in account to pay, through bank route, then 6% will be treated as the deemed profit. So let me tell you. Sir, a person is having 150 lakhs as a turnover. Out of this, 50 lakhs is through account to pay check. Whereas 100 lakhs is through cash. Then what you should do? This 50 lakhs, you should multiply it with 6%. This 100 lakhs, you should multiply it with 8%. So here it is like 8 lakhs. Here it is like 3 lakhs. So what is the total presumptive profit, sir? 11 lakhs would be treated as the presumptive profit. Okay. Then, sir, if you opted for presumptive taxation scheme, all the expenses under section 30 to 38, rent, depreciation, okay, all the expenses are deemed to be allowed. You can't again allow. So why, sir? Because here 8% only treated as profit of your turnover. The other 92% they ignored. Why? For these expenses only. So all the other expenses are deemed to be allowed. Even 40B deduction for interest and remuneration will also be considered as allowed. Advance tax need not to pay for 4 installments. Only last installment is applicable. However, set off of losses from other business is possible. If you have other business and there is loss, and that loss you can even adjust with the presumptive income also, that is possible. Understand, sir? 44 AD, resident individual, HUF form, not having 10A exemptions or 80 series deductions. Their business should be other than goods transportation and commission. Turnover should be within 2 crores. Whereas their overall cash receipts are within 5%, then the turnover limit is 3 crores. What is presumptive profit? 8% of turnover or 6% when it is through account pay check, account pay draft 6%, otherwise 8. All the other expenses deemed to be allowed, including 40B. Advance tax only one installment applicable. With other business losses, the other business loss can be set off with presumptive income also. Then 44 AD, it is applicable for notified professionals. If SSC is a notified professional and he is resident individual or firm, carrying notified profession, accounting, medical, legal, engineering, interior decoration, technical services, okay, then they are covered under 44 AD. And their profession receipts are within 50 lakhs. Their gross receipts from profession are like within 50 lakhs. The aggregate cash receipts in previous year is like less than 5%. Then the threshold is how much, sir? 70 lakhs. For 44 AD, threshold 2 crores. 44 ADA, 50 lakhs. When the cash receipts are within 5%, then 44 AD, 3 crores is the threshold. Here 75 lakhs is the threshold. Okay. 44 AD is for resident individual, HUF and firm. ADA only for individuals and firms. Okay. That also excluding LLPs, both the place. Then what is the presumptive profit? 50% of turnover will be treated as the presumptive profit. All the expenses are considered as allowed. Advance tax, one installment only, and set off of other losses with this possible. 44A. 44AE is applicable to a person who is engaged in plying, hiring, leasing of goods carriages. Plying, hiring, leasing of goods carriages. Okay. And he should not own more than 10 vehicles at any time during the previous year. You should not have more than 10 vehicles at any time during the previous year. Okay. Then, what is the presumptive income? Sir, the vehicles has to be categorized into two. Heavy goods vehicle, others. What is called heavy goods vehicle? When the empty weight of the vehicle is more than 12 tons or equal to 10 tons. Empty weight is more than or equal to 12 tons, then it is called heavy goods vehicle. Okay. For heavy goods vehicle, what is the presumptive income? 1000 per ton into number of tons. This is per month revenue for that vehicle. Let's say, sir, we'll assume that vehicle weight is 15 tons. Then 1000 per ton into 15. So 15,000 will be the deemed income per a month for that vehicle. So for year na, you should calculate 15,000 into 12. If you have 5 vehicles na, then you should do multiply with 5 also. Understand? So 1000 per ton per month will be treated as income with respect to heavy goods vehicle. Others na 7,500 per vehicle per month. So you should do number of vehicles into number of months. You will get the presumptive income. Heavy goods vehicle 1000 per ton per month. Others 7,500 per vehicle per month. All the other expenses eligible as deducted. But remember, sir, even though all the other expenses for 44 AE transporter, interest and remuneration under 40B can be still allowed. Even from this presumptive profit also still you can subtract interest paid to partners and remuneration paid to partners up to the limit of 40B. Even from this presumptive profit also you can subtract interest paid to partners and remuneration paid to partners up to 40. But whereas 44 AD and 40 ADA, that's not allowed. But under 44 AE, it is allowed. And advance tax also, all the 4 installments are applicable. All the 4 installments are applicable. Then 44 AD subsection 4. What is this point? SSE carrying on business other than commission. Turnover within 44 AD limit. It's turnover within 44 AD limit. Let's say we'll take 150 lakhs. He did not opt 44 AD. His turnover within the limit only, but he did not opt what? 44 AD. Sir, usually when you opt for 44 AD, ADA and AE, you need not to maintain books of accounts, and audit also not needed. Books of accounts not needed, audit also not needed. So here see, 150 lakhs. So within threshold, within 44 AD limit. Okay. If at all he has reported under presumptive profit, how much he declares for presumptive profit, assuming everything cash? 150 lakhs into 8%, assuming cash, everything. How much? 12 lakhs is his presumptive profit to be shown if he opted presumptive profit, but he didn't opt it. So what is the profit he shown? Profit is shown is like 6 lakhs only. Now this 6 lakhs is less than presumptive profit, and greater than basic exemption limit. This 6 lakhs less than presumptive profit and greater than basic exemption limit. See, reported profit less than presumptive profit and is more than basic exemption limit. Then what happens? SSE must maintain books of accounts and even get them audited also. In this case, he should maintain books of accounts and even get them audited. Then 44 AD subsection 5. SSE opted for 44 AD in a year, and then he didn't opt back in the next year. Once he opts out, he cannot come into 44 AD for 5 years. Once he opts out, he cannot come back to 44 AD for how many years, sir? 5 years. For that previous year and next 5 years, he must maintain books. Tax audit is also applicable. Must maintain books and tax audit also applicable. SSE may declare higher income than the presumptive income at their option. SSE may declare a higher income than the presumptive income at their option. Sir, presumptive profit, let's say you opted. As per presumptive, you should show 12. Is there any problem if you show 15? No problem. If you show less than 12 is only problem. Okay. Once you opt out, you cannot come in for 5 years. Then for the next 5 years, you should maintain books of accounts and even audit also applicable. Then the last sections are here. Tax audit. Tax audit. When tax audit is applicable, sir? Tax audit has to be carried out by a practicing CA. And he'll give the audit report in Form 3CA and Form 3CB, 3CD. Sir, Form 3CA and Form 3CB are like face of the report. 3CD is the annexure. We discussed all these disallowances, right? Under Pgbp, disallowances or payments made. For all those, there will be separate clauses in the annexure. So we'll be listing out what are the payments on which TDS did deducted. What are the payments made in excess of 10,000? What are the payments made to specified persons in excess of fair market value? So there are certain clauses. So where we'll be reporting all the disallowed expenses, opening stock, closing stock. So all those items will be given detailedly in annexure. 3CA and 3CB is the phase on which you will mention whether it is a clean report, adverse report, modified opinion, qualified report, all those. Okay. When audit report has to be submitted 1 month prior to the due date of filing of return. Or when return has to be filed when audit is applicable 31st October of assessment year. Then audit report has to be submitted by 30th September of assessment year. Then when audit is applicable for business, usually audit is applicable when the sales turnover is more than 1 crore in previous year. Sir, for presumptive taxation scheme, you said 2 crores, na? If I opted presumptive scheme, I am not applicable for audit, na? Audit is not applicable, na? But the point is, here I am saying 1 crore threshold. See the note. If opted for presumptive taxation scheme, then tax audit is not applicable. Even though to 1.5 crores, here the limit exceeded, but I opted presumptive scheme, na? So tax audit is not applicable. Then usually the threshold is 1 crore, sir. Whereas if my aggregate of cash receipts are less than 5% of total receipts, sir, the cash payments or cash receipts is within 5% only. Let's say I had 100 lakhs income. Okay, out of them, sorry, whatever the payments I do, out of them more than 95% of payments I did only through account paycheck, account pay draft. Whatever the incomes I have, more than 95% are through bank route only. Then my threshold limit for audit is not 1 crore, 10 crores. So when 10 crores threshold is applicable, sir, when more than 95% of payments are through bank route and 95% of route receipts are also through bank route. Then when 4484 and 4485, what is 4484 and 85? You declared profits lower than that of presumptive scheme. You are eligible for presumptive scheme, not opted, and you declared lower profits than that has to be shown under presumptive scheme, then applicable. You opted out from presumptive scheme, then also tax audit is applicable. You are a assessee under 44AV and you declared income less than that has to be shown under 44AE, and your income is more than basic exemption limit, then also tax audit is applicable. Profession. For professional, tax audit is applicable when the turnover is more than 50 lakhs, more than 50 lakhs. However, if he is covered under 44ADA and he declared lower profits then that has to be shown under the presumptive scheme, then also tax audit is applicable. If at all you didn't conduct audit, then 0.5% of turnover or 1,50,000, whichever is lower has to be paid as penalty. Okay, this 44 dB, sir. Method of computing deduction not relevant, sir. Oh, sorry, this points are with respect to business restructuring. You have depreciation, preliminary expense, expense of amalgamation, VRS expenditure. Both these are available, all these are available to predecessor and successor. How these has to be apportioned between predecessor and successor? Same as like depreciation only, in the ratio of number of days. Total deduction into number of days from 1st April to date of succession by 365. Successor, total deduction into number of days from date of succession to 31st March divided by 365. Tea, coffee, rubber, I already explained. Okay, so with this, sir, we completed PGBP. There is still assessment of companies part, sir, but okay, you guys already exhausted. Now if I again explain these concepts, now your brain will okay break out, blast out. So that's why I'm not discussing assessment of companies now. So tomorrow first itself will start with assessment of companies. But meanwhile, all of you revise once the PGBP, then come to assessment of companies. If you are watching afterwards, maybe not live, the recorded version you are seeing, then also first complete PGBP, revise it once again, then tomorrow afresh. Okay, not tomorrow na, same day also you take 2 hours break and then listen to the next class. I mean, you should revise the PGBP. Once everything you're confident of PGBP, then MAT will be easy, and the assessment of companies provisions also, everything will be in your fingertips. Okay, thank you. Okay, thank you all for your prompt responses and all. It's a nice session.